That would be highly appreciated. Değerli misafirlerimiz, programımız çok kısa süre sonra başlayacaktır. Sizleri yerlerinize davet etmek istiyorum. Yes, I could see the room filling up slowly but surely. I'd kind of like to ask all of our guests to be quite swift and quick by making their way to their seats as we would like to begin our program. Okay. Değerli misafirlerimiz, ayakta olan katılımcılarımızı yerlerine alabilirsek sevinirim. Esteemed guests, participants, I would kindly like to ask everyone that is currently standing up to make their way to their seats. Lady. Ladies and gentlemen, it is my honor to announce the arrival of the Minister of Treasury and Finance of the Republic of Turkey, His Excellency Mr. Mehmet Şimşek, along with our distinguished members of the protocol, to the conference room. Thank you to the members of press. Distinguished minister and government officials, excellencies, esteemed scholars, respected business leaders, ladies and gentlemen. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning and welcome to the third Global Islamic Economy Summit here in the beautiful city of Istanbul. My name is Efnan Han, and it is both an honor and privilege to once again share the room with such a distinguished assembly of policymakers, academics, industry leaders, entrepreneurs, and visionaries who have come together from across the globe to engage in one of the most important conversations of our time, the future of capital. Today we meet in a city that has long stood at the crossroads of civilizations, commerce, and ideas. For centuries, Istanbul has connected continents, cultures, and markets. It has served as a bridge between East and West, tradition and innovation. There couldn't have been a better setting for a summit dedicated to exploring how enduring ethical principles can inform and guide the economic realities of the modern world. Throughout history, capital has been one of the defining forces of economic development. It has financed innovation, enabled trade, built industries, and transformed societies. It has connected people across borders and created opportunities that have lifted communities and nations. Yet, as we examine the global economic landscape today, we are compelled to ask a fundamental question. What is the true purpose of capital? Is capital merely an instrument for accumulation, or should it serve as a greater role, one that advances prosperity while strengthening social responsibility, economic stability, and human well-being? These questions lie at the heart of our discussions over the next couple of days. Across many contemporary economic systems, we have witnessed a growing disconnect between financial activity and the real economy. Increasingly, capital flows towards speculative pursuits detached from productive enterprise. Wealth concentration continues to intensify in many parts of the world. Economic uncertainty has become a recurring feature of global markets, and despite remarkable technological and financial advancement, many societies, they continue to grapple with inequality, exclusion, and vulnerability. These realities challenge us not only to reconsider how capital is managed, but how it is understood. Because capital is more than money, as you all would know. It is trust, partnership, entrepreneurship, institutional strength. Capital is the collective confidence that enables societies to invest in their future. It is within this context that Islamic economics offers an important and timely perspective. Within the Islamic economic framework, capital is not viewed as an end in itself. Rather, it is regarded as a means, as a tool entrusted to humanity and connected to broader objectives of justice, stewardship, accountability, and societal well-being. The theme of this year's summit invites us to examine capital through this very lens. Over the course of our program, we will explore the foundational principles that define capital within the Islamic economy. We will discuss how these principles can be translated into effective policies, institutional frameworks, and financial practices. We will examine the mechanisms through which capital can contribute to sustainable growth, economic resilience, entrepreneurship, and broad-based participation. And perhaps most importantly, we will consider how ethical foundations can once again be aligned with real economic value creation. Ladies and gentlemen, the significance of this summit extends beyond the sessions. The true value lies in the ideas that we exchange on these platforms. At a time when the world is searching for economic models that are more resilient, inclusive, and sustainable, the conversations taking place here in Istanbul carry particular relevance. On behalf of the organizers, partners, and all of those who have contributed to making this gathering possible, I would like to extend our sincere appreciation to each and every one of you for your presence, your expertise, and your commitment to advancing this important dialogue. Thank you for joining us, and once again, welcome to the third Global Islamic Economy Summit here in Istanbul. We would like to begin our program in the most blessed and meaningful way with the recitation of verses from the Holy Quran. It is my pleasure to invite Dr. Muhammad Qureed, the lecturer at the Regional Academy of Education and Training in the Marrakesh Safi region.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. وإذ قال إبراهيم رب أرني كيف تحيي الموتى وإذ قال إبراهيم رب أرني كيف تحيي الموتى وإذ قال إبراهيم رب أرني كيف تحيي الموتى وإذ قال إبراهام رب أرني كيف تحيي الموتى قال أولم تؤمن قال بلى قال بلي ولكن ليطمئن قلبي قال فخذ أربعة من الطير فصرهن إليك ثم اجعل على كل جبل منهن جزءا ثم ادعهن يأتينك سعيا ثم اجعل على كل جبل منهن جزءا ثم ادعهن يأتينك سعيا قال فخذ أربعة من الطير فصرهن إليك ثم اجعل على كل جبل منهن جزءا ثم ادعهن يأتينك سعيا ثم اجعل على كل جبل منهن جزءا ثم ادعهن ياتينك سعيا قال فخذ 4 من الطير فصرهن إليك ثم اجعل على كل جبل منهن جزءا ثم ادعهن ياتينك سعيا قال فخذ 4 من الطير فصرهن إليك ثم اجعل على كل جبل منهن جزءا ثم ادعهن يأتينك سعيا واعلم أن الله عزيز حكيم واعلم أن الله عزيز حكيم واعلم أن الله عزيز حكيم مثل الذين ينفقون أموالهم في سبيل الله كمثل حبة أنبتت 7 سنابل في كل سنبلة 100 حبة في كل سنبلة 100 حبة كمثل حبة أنبتت 7 سنابل في كل سنبلة 100 حبة كمثل حبة أنبتت 7 سنابل في كل سنبلة 100 حبة مثل الذين ينفقون أموالهم في سبيل الله كمثل حبة أنبتت 7 سنابل في كل سنبلة 100 حبة في كل سنبلة 100 حبة والله يضاعف لمن يشاء والله يضاعف لمن يشاء والله يضاعف لمن يشاء والله يضاعف لمن يشاء والله يضاعف لمن يشاء والله واسع عليم الذين ينفقون أموالهم في سبيل الله ثم لا يتبعون ما أنفقوا ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون ولا خوف عليهم ولا هم يحزنون ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون الذين ينفقون أموالهم في سبيل الله ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون ثم لا يتبعون ما أنفقوا منا ولا أذى لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون صدق الله العظيم.
Thank you, Dr. Khurid, for that beautiful recitation. Esteemed guests, ladies and gentlemen, I would now like to welcome the President of the Investment and Finance Office of the Republic of Turkey, His Excellency Mr. Burak Dağlıoğlu, to deliver his speech.
Assalamu alaikum. Bismillahirrahmanirrahim. Dear Minister Şimşek, dear Chairman Mr. Erdoğan, Excellencies, ladies and gentlemen, I would like to welcome you all on behalf of my institution, Presidency Investment and Finance Office. And I would like to begin by thanking our strategic partners. Firstly, Dr. Yusuf Halavi, on behalf of Al Baraka Forum, and Mr. Arda Ermut, on behalf of Turkey Wealth Fund, Istanbul Financial Center, Mr. Ahmet İhsan Erdem, Islamic Cooperation Youth Forum, Mr. Taha Ayhan, and definitely Ibn Haldun University, as a board member of the trustee, Mr. Bilal Erdoğan, and Dr. Atilla Arıkan. So we have been working diligently to organize this gathering, and we are happy to see that every year the interest is growing, especially from the international participants, and definitely from the Turkish stakeholders. It's really a pleasure for us to see such a diversified group in the room. So I would like to focus on just, a kind of short update of what happened in the last 1 year, so not to make it a very long opening speech. And alhamdulillah, since the last year's gathering, we had many achievements in the Islamic finance development. As you may know, our office is like focusing on 4 key pillars. Firstly, internationalization. I've been telling in every platform that we are trying to engage Turkish Islamic economy environment circles with the international front. We organized many visits to UK, Gulf countries, Azerbaijan, Malaysia, and Indonesia in the last 1 year. And Alhamdulillah, we hosted Malaysia last year, like in June, and we just hosted them again 2 days ago at Ibn Khaldun University for an extensive workshop session. And we hope to continue these efforts because we identified Gulf countries is a kind of close friends of us in Islamic economy, but we would like to grow our more relations in the more in the Southeast Asia, in Africa, in Central Turkestan countries in Central Asia, and especially Eastern Europe, and including Balkan countries. Another important focus area of us is Turkish corporates to access international Islamic finance instruments. In the last 1 year, we had seen that some large-scale Turkish corporates reach out to international markets by issuing sukuks, and we believe that both the volume will grow and inshallah there will be more corporates inshallah joining these international markets through Islamic finance instruments. Another important project of us, it is too early to mention maybe, but we would like to grow the intra-trade of OIC countries, and we established a task force under the leadership of Dr. Professor Mehmet Bulut. I'm sure that he is around here, so he will be on a panel in the afternoon. So we would like to focus on some new fintech instruments among OIC countries by utilizing Islamic finance tools. And the second pillar is strategy development. As an update, we are focusing on our next term Islamic finance strategy in partnership with Islamic Development Bank Group, and hopefully, at the end of this year, we will have a solid documentation. Thirdly, we are focusing on ecosystem development. Istanbul Financial Center is the core of our ecosystem, inshallah, and a kind of update in the last 1 year. We established a real one-stop shop here in Istanbul Financial Center, especially for our international guests, for any permit of you, even a very personal issue, work permit, living permit, residence permits, and etc. You can get all your permits in a real one-stop shop in this building. This is the kind of update. Last topic is infrastructure and capacity building, which is very crucial for us. 2 new news. One will be realized, inshallah, it will be inked next week. We are establishing a open databases, hopefully. KF Info platform. It is participation finance information and databases. So we witnessed the increasing necessity among academia and business community to access to Islamic finance related data in the country. Hopefully we are going to create a digital platform to gather all available data and information in the relevant stakeholders, both in capital markets, insurance market, and banking definitely. Another important area is the capacity building. We are focusing on the development of the new talent, and alhamdulillah, especially in Istanbul, we have so many NGOs creating education and training programs for the youth, and we have been partnering with them. In the last 1 year, we had many graduates of those programs, and inshallah, we are going to start an online program this year. Because for the people who are not in Istanbul, it's a challenge to access to such training programs. We will be creating an online content to train 1,000 Turkish youth to prepare them for the Islamic finance related businesses. And inshallah, we are adding 100 from Azerbaijan, so it's not just a domestic program. Ladies and gentlemen, as a last topic, just recently President Erdogan announced a new economic program, investment package, let's say. It is called as Powerhouse for Investments. So it's a long coverage. I would like to focus on one thing. Mr. Iqbal Han is looking at me. So we created a new program for which is called as non-dom program. So we would like to especially focus on private wealth and those funds to be relocated to Turkey. And inshallah, if you move your capital to Turkey, there won't be any tax, and then there won't be any tax for 20 years of period of time from your foreign earnings. And the inheritance tax will be just 1%. We believe that this is a very attractive regime. There are many more items on the list, but I thought that this would be the most relevant one. And inshallah, we will be around here for the next 3 days, and we would like to discuss with you more, with the ones who are interested in. With that, I would like to thank you all, because without your participation, these meetings are not, very, very meaningful. And we would like to thank our sponsors as well for, enabling this event. I wish you a fruitful, gathering, convention, and summit and discussions. Thank you. Ma'as-salama.
Thank you, Mr. Daloğlu, for those remarks. Please join me now in welcoming our next speaker, the Chief Executive Officer and member of the Board of the Türkiye Wealth Fund, His Excellency, Mr. Salim Arda Ermut, to deliver his remarks.
His Excellency Minister, His Excellency Chairman, distinguished guests, ladies and gentlemen, Assalamu alaikum. It's an honor to welcome you here to the third Global Islamic Economy Summit here in Istanbul. And I would like to begin by thanking especially the Al Baraka Forum in person, Mr. Yusuf Alavi and Mr. Bilal Erdoğan for their vision, bringing together policymakers, financial institutions, investors, business leaders, and academics from across the world. Gatherings like this are important more than ever, and they provide a valuable platform for dialogue, for the exchange of ideas, for thinking collectively about the future of Islamic economy. And perhaps there is no better place to hold such a conversation than Istanbul. For centuries, Istanbul has become and connected continents, cultures, people, and commerce. And today, we are especially pleased to host you here at Istanbul Finance Center, one of Turkey's most important strategic investments. For Türkiye Wealth Fund, Istanbul Financial Center represents a part of a long-term vision put forward by our President, His Excellency Recep Tayyip Erdoğan, to establish Istanbul as a leading regional and global financial hub. Since its launch in 2023, Istanbul Finance Center has made significant progress. Major public institutions, and especially the financial ones, and regulatory authorities have relocated to this center. Today, it is home to nearly 20,000 people, professionals, and continues to grow. Last month, we took another important step, as mentioned by Mr. Daloğlu, by opening of one-stop shop office within the center. By bringing key public services together in one place, this initiative aims to make investment processes faster, simpler, and of course, more efficient. We believe that the strong financial centers are built on efficiency, trust, accessibility, and quality. And these principles are at the heart of Istanbul Finance Center. Distinguished guests, the theme of this year's summit, Capital in the Islamic Economy, Structuring Wealth for Sustainable Development, invites us to reflect on the purpose of capital. This is a highly relevant theme at a time where the global economy is being reshaped by geopolitical tensions, rising protectionism, and search for greater resilience. Across the world, there is a growing understanding that capital cannot be measured only by short-term returns. It must also judge by the value of it, the very value it creates, the productive activity it supports, and the long-term development it enables. When capital becomes disconnected from the real economy, trust can be weakened and sustainable growth can be undermined. This is where Islamic economies can offers a timely and a meaningful perspective. It sees capital not only as a financial instrument, but also a means to create value. It encourages entrepreneurship, supports productive activity, and contributes to broader social well-being. Most importantly, it keeps finance connected to the real economy. The principles of risk sharing, transparency, and ethical responsibility are not only relevant to Muslim societies, they are increasingly relevant for the global system as a whole. In a world looking for great stability and trust, these principles offer valuable guidance. Ladies and gentlemen, as Türkiye Wealth Fund, we see Islamic finance as an important part of our long-term strategy. Over the past 2 years, Türkiye Wealth Fund itself has completed 1.75 billion US dollars of Islamic financing transactions, including international sukuk issuances and Murabaha facilities with leading institutions from especially the Gulf region. Most recently, in August 2025, we signed a 5-year Murabaha financing agreement worth of $600 million with a consortium led by Kuwait Finance House, one of the pioneers in Islamic banking in the region. These transactions demonstrated strong confidence in Turkey and in our economy, and of course in our institutions. They also supported our efforts to deepen capital markets, diversify funding sources, and strengthen Turkey's position within the global Islamic finance system. But what makes us particularly pleased is that these efforts have also encouraged companies within our portfolio, within Turkey Wealth Fund portfolio, to access Islamic finance markets too. In this sense, Turkey Wealth Fund has not only raised financing through Islamic institutions and instruments, but also helped create a reference point for its portfolio companies too. Following our Sukuk issuance, Türk Telekom, one of our major companies, completed its first international Sukuk issuance in October 2025, raising $600 million through a 5-year transaction. And also TPAO, Turkey's national oil and gas company, followed in February 2026 with a $1 billion of Sukuk issuance, becoming the first state-owned enterprise in Turkey to access international Sukuk markets. These developments show that Islamic finance is becoming an increasingly important source of long-term capital in Turkey. With this vision in mind, we also established Türkiye Katılım Sigorta and Türkiye Katılım Hayat to support the development of participation-based insurance and pension systems. We are encouraged to see the progress they are making, and at the same time, we continue to build new partnerships with international peer institutions across different regions of the world. Because we believe the future of Islamic finance depends on building a strong, comprehensive, and globally connected financial ecosystem. Distinguished guests, looking ahead, we remain committed to supporting the growth of Islamic finance. This means investing in technology, strengthening legal and institutional frameworks, and expanding cooperation across borders. It also means developing new solutions in sustainability, fintech, artificial intelligence, and digital finance. The future of Islamic finance will depend on our ability to innovate while remaining faithful to its core principles. This is both our challenge and, of course, our opportunity. Let me close with this thought. Islamic finance offers more than alternative source of funding. It offers a different way of thinking about capital, one that supports productive activity, encourages responsibility, and creates value for society. Its strength comes from the principles behind it. And in an increasingly uncertain world, those principles now matter more than ever. Together, we have an opportunity to contribute to a more resilient, inclusive, and sustainable financial future. In this regard, the Global Islamic Economy Summit has become an important platform for dialogue and cooperation. I would like to thank you once again for your participation, all the organizers for their great effort, and all our sponsors for supporting such an important initiative. And of course, I wish you a successful and productive summit and meetings for the rest of the 2 days. Thank you very much for listening to me.
Thank you, Mr. Armut, for your valuable contributions. Dear guests, it is my honor to welcome our first keynote speaker of the day, His Excellency Professor Dr. Imad Abu Kishk, the President of Al-Quds University.
Assalamu alaikum. In the name of God, the most compassionate, the most merciful, Your Excellencies, distinguished guests, ladies and gentlemen, good morning. It is a great honor and a privilege to be with you today. And I would like to thank my brother Yusuf Khallawi that make it happen. I would like to extend a special welcome to Mr. Bilal Erdogan, We are honored by your presence and grateful for your commitment to education, community development, and preserving the values and heritage that connect us all. I also warmly welcome our distinguished guests, scholars, leaders, and friends who have joined us for this important discussion. Today, we are talking about more than money and investment. We are talking about how wealth can be used to build stronger communities, support education, create opportunities, and improve people's life. Throughout history, Islamic civilization developed remarkable systems for managing wealth and directing it toward the public good. Wealth was not seen only as a way to generate profit. It was also viewed as responsibility and a means to serve society. This vision gave rise to some of the world's greatest educational institutions, hospitals, libraries, and charitable foundations, many of which were supported through the institution of Waqf. Before presenting the Al-Quds University model, I would like to briefly explain the concept of Islamic capital jurisprudence. In simple terms, Islamic capitalism jurisprudence encompasses the principles and rules that regulate and use as investment of wealth in a way that promotes development and generates lawful profit in accordance with Islamic values. In other words, it provides a framework for formation and utilization of capital that benefits both individuals and society as a whole. Simply put, it provides Islamic methods and frameworks for managing wealth fairly and ethically. It encourages growth, investment, innovation, and entrepreneurship while ensuring that wealth contributes to social welfare, justice, human dignity, and long-term development. Today, I would like to share the experience of Al-Quds University and translating these principles into a practical and sustainable development model, structuring wealth for sustainable development. Can you put the first slide, please? The first slides, yes. As you see in the slides, Al-Quds University Education and Development Waqf model. The Al-Quds University Education and Development Waqf model is based on a simple but powerful idea, transforming charitable contributions and endowments into sustainable investment, and that continuously support education, research, innovation, and to community development. We believe that education is not an expense, it's an investment in people. It's an investment in institutions, and it's an investment in the future of society. Our objective is to create a sustainable financial model that supports future generations while remaining faithful to the values and the principles of Waqf. As you see, this model talks about challenges and our role as a university transforming these challenges into solutions, and how Al-Quds University addresses these challenges and what is the impact on the empowered youth, economic opportunity, and the stronger communities, and innovation and development and resilience, a future for Al-Quds University. Al-Quds city challenges and the role of Al-Quds University. Before discussing the Waqf model itself, it is important to understand the environment in which Al-Quds University operates. Jerusalem faces significant social, economical, educational, and political challenges. Many families face economic hardship. Young people often have limited opportunities. Many talented students struggle to access higher education because of financial constraints. At the same time, institutions face increasing pressure to provide quality education, conduct research, support innovation, and serve their communities. Despite these challenges, Al-Quds University remains committed to its mission. Our role extends beyond teaching. We conduct research that address national priorities. We support innovation and entrepreneurship. We serve local communities in the old city of Jerusalem. We develop future leaders and change makers. We build partnership locally, regionally, and internationally. In short, we seek to transform challenges into opportunities through education, knowledge, and service. Waqf Fund, a source of sustainable development. This slide, the second one, thank you. This slide illustrates the complete Al-Quds University Waqf model. The model begins with support for multiple sources. These include individuals and philanthropists, businesses, and cooperations. Palestinian communities around the world, real estate endowments, organizations, foundations, and planned giving through wills and bequests. These contributions are not spent directly. Instead, they become part of Al-Quds University Waqf Endowment Fund. The key principle of Waqf is very simple. The capital is preserved, invested, and allowed to grow in perpetually. The fund is professionally managed and invested in ethical and Sharia compliance investment. These investments generate sustainable returns year after year. These returns are then used to support student scholarships, research programs, innovation, entrepreneurship initiatives, and community development projects. This creates a continuous cycle of impact. We educate and empower young people. We advance knowledge and innovation. We support economic growth and job creation. We strengthen communities. And ultimately, we contribute to sustainable development for Palestine and the future generations. This is the difference between charity and sustainable development. Charity addresses today's needs, but Waqf addresses today's needs while also building tomorrow's opportunity. Al-Quds Waqf model expansion to Islamic countries. One of the most exciting aspects of this model is its ability to expand beyond national borders. We envision partnership with sister Islamic countries that wish to support education and sustainable development through locally establishing Waqf structure. The process begins with government approval and the establishment of the local Waqf fund in the partner country. The fund operates locally and generates investment returns. Part of those returns is then transferred to Al-Quds University Waqf Endowment Fund. The capital is considered and professionally invested. The return generates are then distributed to educational and development programs. This creates a sustainable partnership in which both countries benefits because they will establish projects in their country and also the return will be benefits Jerusalem. The partner country strengthens its own Waqf ecosystem. Al-Quds University gains sustainable resources for education and development, and the future generation benefits from a lasting legacy of cooperation, knowledge, and opportunities. Ladies and gentlemen, throughout Islamic history, Waqf institutions played a central role in supporting universities, hospitals, scientific research, and public services. Today, we have an opportunity to revive that legacy using modern governance, professional investment management, and sustainable development principles. At Al-Quds University, we see the educational development Waqf model not only as a funding mechanism, but as a vision for empowering the future generation. It is a model that connects faith with development, values with opportunities, and generosity with the long-term impact. Allow me to leave you with one final thought. Education changes life. Sustainable institutions changing societies. And when we combine knowledge, values, and purpose, we create lasting impact for generations to come. Thank you very much, and peace upon you all.
Thank you, Professor, for your address. Esteemed participants, please join me in welcoming our next speaker, His Excellency Mr. Iqbal Ahmed Khan, the Chief Executive Officer of Fajr Capital.
Bismillah ar-Rahman ar-Rahim. As-salatu was-salam ala ashraf al-mursaleen. Sayyidina Maulana Muhammad sallallahu alayhi wa sallam. Amma ba'd. Rabbi shrah li sadri wa yassir li amri wa ahlul uqdatam min lisani yafqahu qawli. Assalamu alaikum wa rahmatullahi wa barakatuh, Your Excellencies, distinguished guests, governors and ministers, and esteemed industrial leaders. May I welcome you with the greetings of the Sahaba, which is Qudumun Mubarakun. Whether you have come from far away or close by, may your footsteps be blessed in this conference. Our beloved Prophet taught us that whoever does not thank people has not thanked Allah subhanahu wa ta'ala. I want to begin by thanking the government of Turkey, ably led by President Tayyip Erdogan, who I had the privilege to meet when he was a young mayor of the municipality of Istanbul. And at that time, municipality of Istanbul was heavily indebted. The streets of Istanbul were not safe. The Bosporus stank, and water used to be rationed. And there was no money. So I said to Tayyip Bey that our Prophet ﷺ has taught us a prayer. When you have debt which is as big as the mountain of Uhud, you say, Allahumma kfini bi halalika and haramika wa aghnini bi fadlika amman siwak. At that time, Tayyip Bey said to me, can you write it? Then he read it with me. And then things changed. Rain happened. Bosporus got cleansed. We did many projects together. And then when he became the Prime Minister in 2002, he came to the World Bank meeting in Dubai. And he said, he came with his whole ministers and everybody. When I met him, I said, Your Excellency, welcome to Dubai, because I said, if you run the municipality of Istanbul well, one day, inshallah, you will run Turkey. So he put his hand in his pocket and he took out the same prayer. He said, at that time I used to read Allahumma kfini bi halalika an haramika waghnini bi fadlika amman siwak for the municipality of Istanbul. And today I read it for Turkey. The rest is all history. I also want to continue to express my heartfelt gratitude to Brother Yusuf, to the Dalla al-Baraka group, to the Sheikh Saleh Kamil family, and everybody else who's been involved in sponsoring this conference. To stand in this platform and this forum inspired by Sheikh Saleh's vision is indeed a profound honor. Every nation, every institution, every family, every community reveals its identity, not only by the people it produces, but by the people it remembers and honors. Today we remember one such giant, Sheikh Saleh Kamil Rahmatullah Alayh, was more than a pioneer of Islamic finance. He was a builder of institution, a builder of people, and I'm here as his mentee. He was my mentor from the beginning of my career till he lived. And above all, he was a builder of values. He was committed to building values. Institutions, countries, families survive as long as their values survive. They go down in morality first, and then they decline materially. In 2012, I was humbled to receive the Royal Award for the Islamic finance industry by His Majesty the King of Malaysia. But for me, the greatest honor was not just receiving the award. It was discovering that I was the second recipient, and the first was my mentor, Sheikh Saleh Kamil Rahmatullah Alayh. To follow his footsteps remains one of the greatest privileges of my life. Allow me to offer one simple thought to anchor our discussion today. Capital is not merely an asset, it is an amana. Allah subhanahu wa ta'ala says in the Holy Quran in Surah Al-Ahzab that the trust, the amana, was first offered to the heavens, to the earth, to the mountains, to the oceans, and they all declined. Yet, mankind, being the ashraful makhluqat, the crown of creation, accepted that trust. In many ways, this single verse of Surah Al-Ahzab captures the philosophy of Islamic finance. Capital is not ours to own absolutely. Whatever we own does not belong to us. We hold it in trust. It is entrusted to us by the true owner, the creator of the heavens and the earth, the Fatir as-samawati wal ard. And he is our wali and he is our guardian. So therefore, every dollar which we have merely, every currency we have, every dirham, every lira, every ringgit, it is entrusted to our institutions and carries a big moral responsibility. We are merely stewards, and we would all be asked, how did we spend this capital? Therefore, it must serve people. The Quran closes with the word An-Nas, Surah An-Nas, people. And it is people who are at the heart of Islamic finance. It must create value, and it must honor the trust which has been given to us by our Creator. This is not poetry. This is the operating system of Islamic finance. When Sheikh Saleh persisted in seeking a Sharia-compliant alternative for his businesses in Saudi Arabia in the 60s, early 70s, the earliest mudaraba-based arrangements for his growing businesses, he chose a path which was harder, and in many ways he built a path which was new. And that was amana in action. Saudi Cairo Bank was the first one who did a mudaraba for Sheikh Saleh Kamil. And from that act of conviction by Sheikh Saleh Rahmatullah Alayh emerged one of the most influential movements in the modern history of finance. There are three trusts embedded in amana, and it carries three responsibilities for each one of us. Our trust to Allah subhanahu wa ta'ala, the all-knowing, the all-powerful. Our responsibility to uphold justice, fairness, risk-sharing, and ethical conduct in all our businesses. We are not merely a Sharia-compliant version of conventional finance. We are a value-based system of stewardship operating within modern markets. That distinction matters. Second part of the amana is our trust to society. Islamic finance was never meant to serve just institutions. It was meant to serve an-nas, people, families, entrepreneurs, small businesses, communities, venture capital. After more than 5 decades and over $3 trillion of assets, much of the Muslim world still remains underbanked and underinsured. The measure of success is not how much capital we accumulate. The measure of our success is how do we empower the people with ideas, the people with energy. Turkey has a young population, and I always say we must find within those youth more PhDs, people who are positive, people who have got the will to work hard and the honesty. And the D stands in the PhD for determination. We need to find and fund those people. The third part of the amana is our trust to the future. The world our children and grandchildren will inherit will be shaped by the decisions we make today. Climate change, food security, healthcare, education, growing economic inequality. These are not abstract debates. They are real challenges facing humanity. So if capital is truly an amana, we cannot pursue prosperity today while passing risk and damage to the future generations. So where we stand on the mountain of Islamic finance, that we are halfway on the mountain. And Islamic finance, when we look down, we see how far we have come. But from the pioneering efforts of people like Sheikh Saleh Kamil, Haj Saeed Luta, Prince Muhammad Al Faisal, the late Professor Unku Aziz, we have built a global industry which serves more than 2 billion people with approximately $2.6 trillion of annual consumer spending. So the Muslim lifestyle and the halal food market is a very big market. And the Islamic finance industry itself in financial assets stands in excess of $6 trillion. These achievements, while they deserve recognition, but we are not yet at the summit. The next phase of growth requires us to move beyond the current concentration on banking and sukuk alone. We must strengthen asset management in the real economy. We must expand takaful in challenging areas like risk management, like hedging. We must revitalize waqf to build our communities, to build our cities, which are declining. We must embrace financial technology and inclusion. And we must change our mindset to shift from only compliance to impact. That may be the most important shift of all. And then we need to build an alliance of goodness. No mountain can be climbed alone. Historian reminds us that the ideas that shaped the European Enlightenment emerged not in palaces, but in coffee houses. Places where thinkers, merchants, scholars, and innovators exchange ideas freely. Our industry needs its own version of modern coffee houses. The Al Baraka Forum is one of them. Here we bring together scholars and bankers, entrepreneurs and policymakers, investors and academics. But we must go further. We must build bridges with ethical investors, impact investors, and faith-based investors around the world. As a founding member of the Faith-Based Investors Hub of Global Impact Investing Network, I have witnessed what is possible when people stop asking what divides us and begin asking what can we build together. Climate transition, food security, healthcare, education, these are not just Muslim problems. These are human problems. And Islamic finance is uniquely positioned to contribute values, capital, and conviction to these human challenges. Let me end with a closing reflection. Brothers and sisters, there are 3 meetings which will happen for each one of us, every human being who's here, who was ever born. And the first meeting is with our forefathers, who would ask us, what did you do with the trust which we left with you? Did you make that trust? Did you honor that trust in our own sphere of influence? And the second meeting which we will all have is with our Prophet Muhammad sallallahu alaihi wasallam. And he said, did you spread my muhabba? Did you spread my conduct and my leadership values to humanity, not just to Muslims alone? And the third meeting, which is what keeps me awake most of the nights, is the meeting with Allah subhanahu wa ta'ala. Each one will have a one-to-one with Allah subhanahu wa ta'ala. And the one who blessed us with resources, opportunities, knowledge, relationships, influence, will ask us, what did you do with the trust which I gave you, the amana which I gave you? If capital is truly an amana, then these are the audits that really matter, finally, in life. May Allah subhanahu wa ta'ala make us worthy stewards of the trust we have accepted. May He bless this forum, may He bless Turkey, and may He enable us to use the capital not merely to create wealth, but to create benefit, dignity, and hope for all of humanity. Wa akhir dawana walhamdulillahi rabbil alameen. And here I'm going to try my Turkish language. Hepiniz teşekkür ederim. Assalamu alaikum wa barakatuh.
Thank you, Your Excellency, for that heartfelt address. Esteemed participants, it is now my distinct honor to welcome the Minister of Treasury and Finance of the Republic of Turkey, His Excellency, Mr. Mehmet Şimşek, to deliver his speech.
Assalamu alaikum. Good morning. First of all, I'm delighted to be back at the Al Baraka Summit. And, it's great to be with you all again, and a warm welcome to our international participants. So, we are talking about capital in Islam. Clearly, capital is needed for development and human prosperity. So I have a short presentation that tries to look at the big picture within that context, but also I couldn't miss this opportunity and not tell you about the program we are implementing and, of course, the opportunities in Turkey. When we look at global big picture in terms of global capital inflows, as you can see from this picture, it seems like global FDI is rising. But I think this picture is probably misleading in the sense that much of the increase is attributable to flows between financial centers. So they're mainly financial flows. If you look at cross-border M&A, or if you look at international project financing, if you look at greenfield projects, they're all down. the financial component is rising. So there's a bit of a disconnect, to be honest with you. So diagnosis is that while capital flows are rising, they're not into productive areas. There's also decoupling. When you look at the big picture again, the share of developing markets or developing economies or emerging economies is falling. So the EM share of global FDI has fallen over the past 3 years from 67% to about 54%. That trend appears to be a structural one. So it's really not a temporary trend. Why? Much of capital is concentrated in the West. And we do have geo-economic fragmentation. There's quite a bit of pressure on reshoring. But that does not apply only to investments. It applies increasingly to capital flows. So when we look at the big picture, there are industrial policy initiatives everywhere, which means protectionism that goes beyond the traditional trade in goods. There is also supply chain reconfiguration. So this is concerning because clearly developing economies where most of Muslim countries would be concentrated, Muslim communities, probably is not going to get the type of flows that we need to support the development. So that's really the key message. The vision here should be whatever we have is to focus on that, to reconnect capital with development priorities. As I said, much of flows are portfolio flows. And we know that portfolio flows are highly cyclical, and they tend to chase short-term returns. But the needs are developmental needs, as were highlighted by previous speakers. Finance appears to be increasingly more detached from real economy. So we need to reconnect, and that requires Islamic finance, which you all have, as I said, alluded to. Growth currently, in terms of investments, is highly concentrated, sector-wise and country-wise. When we talk about sectors, it's mostly in data centers, in AI. When we talk about countries, again, the direction of capital is mostly to more advanced, mature economies. And that's a huge challenge for us, for Muslim countries. So how do we bridge this gap? Well, Islamic finance, as you know, is more closely linked to the real economy. Asset-backed financing. So every transaction seems to be anchored to a real asset. And that's what the world needs. That's what Turkey needs. That's what the Islamic world needs. Risk and reward are shared. So clearly, we need to focus on our region. Our region, actually, in particular, oil-producing countries, oil-rich countries, they do have substantial capital surplus that they have to export. And they traditionally, in the past, exported to advanced economies. I think there is a compelling case for that capital to be deployed regionally. There are encouraging signs. Countries like Saudi Arabia are now deploying much of their surplus domestically. And this is a welcome development. This is really encouraging. But we also need to scale up. in terms of Islamic financial assets in Muslim world. If you look at Islamic finance assets, they've gone up in nominal terms, nominal US dollar terms, by nearly 49 times since the year 2000. That's not a poor performance. This is quite actually impressive. And this is very encouraging. But when you look at it as a share of global financial assets managed by global financial institutions, while it's up by sixfolds, it's still relatively small. So we've got a long way to go to develop Islamic finance. There is an untapped opportunity in most countries, but in particular in Turkey. When you look at top countries by Islamic financial assets, clearly, Iran seems to be the leader here. Turkey is number 9th. We would like to be in the top 5 here. And we've got a lot to do, a lot of homework. So what needs really to be done? What do we need to do for the sector to grow faster, to have a bigger share, to make our economies more resilient? Remember, we live in a shock-prone world. It is. There are conflicts everywhere. That's why we need to invest in resilience. We need to build buffers. And that requires a stronger focus on Islamic finance. Products, we need diversified product space to lure more investors, more interest. So clearly, to compete with conventional finance, we need to have more products offered. And that requires our institutions to be more innovative. We need to enhance liquidity in the system. In Turkey, central bank is working on providing more of that instruments. Sustainability leadership. I think there's a very strong case. By the way, Turkey is hosting COP31, and you're all invited. And I think focusing on sustainability, focusing on, green transition, for countries like Turkey, it's not an ideological, bias. This is about necessity. We've spent over $1.1 trillion over the past 23 years on importing oil and gas and derivatives. So it's just a sensible thing to do. And of course, Istanbul Financial Center. We would like to make sure that it has a much stronger position in global Islamic finance offering. Now, I think that's enough for the big picture. I'd like to tell you a little bit about our effort to bring inflation down, to address some of our macroeconomic challenges. We have been implementing a program over the past nearly 3 years. And the key priorities are attaining price stability, which is low single-digit inflation, maintaining fiscal discipline, because we've achieved that, despite massive earthquake-related spending, and achieving sustainable current account surplus in the long run, of course, through reforms, moving to current account move to current account surplus, but initially to manage sustainable current account deficit. This requires enhancing competitiveness, boosting productivity, but also improving governance and institutional strength. Now, disinflation is underway. It's going at a slower pace than we had envisaged, but we have had more than our fair share of external and domestic hiccups along the way. But it's not what happens to you, it's how you respond to it matters. And that's why we're going to stay focused. We're going to continue to deliver disinflation, because disinflation is key to better income distribution, to higher sustainable long-term growth. We see inflation this year, unfortunately, in mid-20s as opposed to high teens prior to, of course, the latest war in the region. So assuming $90 per barrel oil price, as I said, we see inflation in, mid-20s, if not high 20s. On the fiscal side, we're in a better position. We have a very good track record. Long-term fiscal deficit has been relatively moderate by global standards. Turkey's budget deficit to GDP last year was 2.9%, compared to around 6% for global emerging market average. And Turkey's government debt to GDP ratio is 24%, compared to, again, global emerging market average of 74%. So we're in good shape when it comes to debt and deficit. That provides us some fiscal space, which, by the way, we have deployed to reduce the pass-through from crude oil price, to products such as gasoline and diesel. Now, external imbalance has always been Turkey's relatively big challenge, meaning Achilles' heel. We think the deficit, while it's going to go up on the back of higher oil and gas prices, is likely to stay manageable. A deficit of around 3% of GDP is financeable. And compared to long-term averages, again, it's slightly modest. Now, when we look at the buffers and still staying with current account, we still have adequate reserves. External debt to GDP ratio is trending down towards low 30s, and gross external financing to GDP is well below long-term averages. So that's why we think we can manage the fallout from the war. Growth has been sub-trend for the past few years. Partially, it's associated with our trading partners not doing so well. While global growth has been around 3%, our trading partners have been growing at around 2%. And that is not helpful, and largely driven by low growth or dismal growth in European Union, which is our core market. But it's also associated with our efforts to rebalance the economy. Because to begin with, back in 2023, we had large current account deficit, we had an earthquake to deal with, and so rebalancing economy required some short-term diet, some short-term slowdown. But this is temporary, because Turkey has still a long-term strong growth potential. A very famous economist, Milton Friedman, once said, "Only a crisis, whether it is real or perceived, leads to a real change." Well, we're faced with a real crisis. There is a big war, and there's a massive supply shock, and huge uncertainties. We cannot waste this episode. We cannot waste this crisis. We have to reform. We have to change. We're speeding up industrial transformation to move up the value chain. I wish I had time to tell you about it. We're speeding up green transition and digital transformation. We are prioritizing investments into productive areas, such as railways, to help decarbonize, but to help also enhance Turkey's competitiveness. But we've also introduced a new framework to lure talent, entrepreneurs, capital, and foreign direct investments. So let me very briefly cover that ground as well. We have just today has been approved by President Erdogan, a bill that was approved by the parliament and finally signed off by President Erdogan. We have just reduced corporate tax rate for manufacturers in industry or agriculture, doesn't matter. If you are a manufacturer and if you operate in Turkey, your corporate tax rate is now down to 12.5%. This is one of the most competitive corporate tax rate for any leading, for any global emerging markets. This is big news. We are inviting you to come and invest in Turkey. 100% tax exemption on services exports. Why? Because our strong muscle is services. We're number 4 in global tourism. We are among the top in medical tourism. We're among the top 3 in global soap opera exports. I'm not making it up. You can check. I know you're smiling. Video games. We're only second to London. I mean, Istanbul has nearly 750 gaming studios. And we've already generated 3 unicorns, 6 exits north of $100 million US. So that's why we're now giving 100% tax exemption for exports of software, video gaming, medical tourism, education, engineering, design, consultancy. By the way, you probably don't know, but in global university, meaning in education exports, we're number 6 in the world. Over 380,000 global students are studying in Turkey. 0 corporate income tax rate on transit trade if you operate in financial center here, or if it's outside, it's 95% tax exemption. Pretty soon, hopefully, Istanbul Financial Center will be full, and we will expand the 100% tax exemption to the rest of the country. This is big. So if you're doing transit trade, make sure that you have an office here. I'll continue. If you are a multinational company operating in more than a few countries, and if you place your headquarters in Turkey, in Istanbul Financial Center, you get 100% corporate tax exemption, but also you get up to 6 times minimum wage income tax exemption. Now, that's not low, by the way. That's an equivalent of almost $4,500 per month per employee. This is huge. It's like no income tax, no corporate tax. This is very aggressive. Why? Because we want to compete with Singapore. We want to compete with Netherlands. We want to compete with Hong Kong. And that's why we want to place Turkey in the top league here. Now, you may say, okay, well, all this is great, but how about Turkish bureaucracy? Fair enough. Turkish bureaucracy is famous. And we have a fix for that too. That's why Burak is here. And he has been given the mandate to set up one-stop shop for all these investors. So we are reducing bureaucracy. We want to help you. We want to hold your hand, not only in company formation, in work and essentially resident permits, tax, social security, but even land allocation, incentives, and even environmental approvals. We'll hold your hands. There's one more to go, a couple of more items to go. We are now giving all high net worth individuals or anyone with decent wealth a 20-year non-dom status. So if you move your personal wealth into Turkey, if you're a resident in Turkey, you get 100% tax exemption on your overseas income. But how about your income in Turkey? Well, if you invest in financial assets, there is actually quite a bit of space. For example, if you're investing in Turkish equities, there's 100% tax exemption. If you're investing in crypto assets, there is no tax. If you are investing in Turkish government securities, there is zero tax. So essentially, you get almost a complete tax-free environment. If you move to Turkey with your wealth, 20 years is a long period of time, plus you get only 1% inheritance tax. We also want to become a center for new startups. We want to attract talent and entrepreneurs. That's why we are converting the old airport, Atatürk Airport, terminal building, turning that into a campus for startups. So you really should get an office there, or clearly you should be based there. We are introducing a venture capital friendly environment already there. We're providing now tax efficient employee stock options plans. So clearly, this is not just an ordinary incentive scheme. We try to cover all the grounds. It's an integrated approach, and you can set up your company digitally, remotely. You can run your company digitally and remotely. Why would you consider investing in Turkey? Well, in addition to these incentives, this is a big economy. Look, it is the 16th largest, if you look at current exchange rate, GDP. It is 11th largest on a PPP GDP. On a purchasing power parity GDP, Turkey has over $4 trillion GDP. This is a big economy, nearly $50,000 purchasing power parity per capita GDP. This is big. There aren't that many countries around the world with almost 90 million population with a per capita GDP that is flirting with $20,000 at current exchange rate. There aren't that many. And there aren't that many countries that are as big as all of their neighbors combined. So Turkey is big. It's a big economy. But is it growing? Well, you may say growth has slowed. It's temporary. Look at President Erdogan's term since 2002. If you look at GDP in constant prices, this is real GDP, not nominal. In real terms, if you take 2002 as your base year, equaling 100, Turkish economy, despite multiple domestic, regional, and global hiccups along the way, we've had more than our fair share of shocks, to be honest with you, in the last 22 years, 23 years. But despite all of them, look at it. Turkish economy has grown by over 5% on average, and GDP has gone up from 100 to 328 in constant prices. Compared to the world at 222, or compared to emerging markets, excluding China and India, at 231. So Turkey has been outperforming its peers, similar countries. So it's not only big, but it's growing. And we are investing in connectivity, in regional integration, because at a time of geopolitical fragmentation, the antidote to fragmentation is regional integration. So deglobalization has now made us focus more on regional integration. That's why we are encouraging Iraq to build a regional new corridor, a new highway, a new railway, and possibly a pipeline connecting entire region to the rest of the world through Turkey. We are already part of the Middle Corridor. This is the fastest way to connect Asia to Europe. So clearly, there's going to be new corridors, new trade corridors, new pipelines, new roads, connecting Turkey to Saudi Arabia, connecting Turkey to GCC countries. So clearly, while the crisis is hurting today, but it also presents significant opportunities going forward. Turkey already is a major hub when it comes to energy, in terms of oil and gas pipelines. We already have a great infrastructure, and we want to connect the rest of the region's assets through Turkey to Europe, which is a major consumer. Turkey not only offers a large market, a growing market, a connected market, but it also has large and increasingly better qualified labor force. The number of university graduates annually is over 900,000. And if you look at whether those graduates are from the areas maybe digital economy needs or not, clearly Stanford University says that Turkey is among the top countries in terms of the talent pool. We have invested $355 billion in infrastructure during President Erdogan's term. And we continue to focus on investing more. I wish I could show you some of the maps. We have increased dual carriage highway and motorway length by almost 7-folds, from about 6,000 kilometers to well over 30,000 kilometers. We have almost tripled the number of airports, from 26 to almost 60 this year. So what I'm trying to say is that now we have one priority left, and that's high-speed rail network, electrification of entire rail line, and signalization in a way that it could now serve as a key avenue for connecting production hubs with the ports via railways. So railways is now the main destination going forward. That's why the best connected airport in the world, don't take my word for it, this is international survey, apparently is Istanbul, and some of the world's fastest roads are in Turkey. If you go back to year 2002, we had only 8 million vehicles, and the average speed on those roads was less than 40 kilometers per hour. Today, we have well over 30 million vehicles on the road, and the average speed, the mean speed is now 93 kilometers per hour. We are a major manufacturing house relative to our per capita GDP. There's really strong manufacturing ecosystem, but it's not just manufacturing. We're also doing much better, in services. I've been told probably that time is over. Okay, I understand that. We've gone too far. I need to get back by a couple of slides. So, services exports matters, and 100% tax exemption. I just want to remind you. Look, we're anchored to the West, but increasingly improving stronger ties with the East. That's a good combination. We are avoiding conflicts, and we're trying to help the region to become more peaceful, more prosperous, and more stable through mediation. And we also have strong deterrence, because you have to be prepared. And again, Turkey has also strong soft power. In terms of international official, development assistance, we're number 9th. in terms of connectivity, thanks to Turkish Airlines, we're really very strongly connected. And in terms of diplomatic footprint, we are the third largest. So when you operate out of Turkey, clearly, wherever you do business, I think this soft power aspect will probably help you. Now, I know it took more than 10 to 15 minutes of my time allocated, but you know, I couldn't miss this opportunity. I was told that 60% of audience are international, and I couldn't miss this. So sorry for speaking a bit longer, but I hope this conference, which I believe is not only timely, but I think it's such a meaningful one, is productive and is successful over the next couple of days. We are going to boost Islamic finance. We are committed because that is the key to more resilient Turkish economy, but also that's the way forward because we have to connect capital with developmental needs, and I think the best fit for that is Islamic finance. Thank you very much.
Thank you, Minister Şimşek, for that very, very impressive presentation. Ladies and gentlemen, it is now my distinct honor to invite His Excellency Mr. Necmettin Bilal Erdoğan, the Chairman of the Board of Trustees of the İlim Yayma Foundation, to deliver his speech.
Dear Minister, dear guests, I would like to thank all of you for attending this third Global Islamic Finance Summit. And I would like to thank Al Baraka Summit, first of all, for organizing such an important event in Istanbul. I think they are the first to realize the importance of Istanbul going forward for Islamic finance. It's not news because, you know, Salih Kamil Rahimahullah was a great pioneer. So it's good to see that Al Baraka Summit is continuing that pioneership in Islamic finance. And I would like to thank Abdullah Kamil for following in his father's footsteps in pioneering still in Islamic finance. And people before myself said many of the things I would like to emphasize today. I'm in the board of Ibn Khaldun University, and most of my time here in Turkey is spent with charities functioning in education, in youth empowerment, and reviving culture and heritage through traditional sports, being one of the areas that I am focused on. But really, sort of the point I want to make today, when you leave for tomorrow's meetings, I know tomorrow the President will be here on the stage, and I heard the interest is great, fivefold of this hall, and I hope we can move to a bigger hall next time. And maybe, inshallah, this finance center will have a bigger convention hall. We talked about it earlier. But really, there is a civilizational circulation in history. And obviously, the Islamic scholars who started working on scholarship in 7th century, obviously the Prophet and the Quran left on our shoulders this mission to be involved with ilm, with scholarly work, for the sake of reaching the mission that Allah bestowed upon all humanity, to understand fully and better creation, the Creator, and our purpose in life in this world. And so really they set off to a journey to explore the whole world. That's why Muslim geographers were the best in their fields. Not only they wanted to know the direction of Al-Kaaba for their prayers, but also for reaching out to humanity to convey to them the message of Allah, the Quran and the Prophet's excellence in life, excellence in living and teaching the Quran, the message of Allah. And so we know that they also translated all the works that came before them, from ancient Greece, from Rome, from the Indian and Chinese cultures. They translated and they understood and they connected in a way that did not forego their own beliefs, their own iman, their own religion, what they learned from the Prophet and from the Quran. So they surpassed the civilizations that came before them, not by repeating what they have done, but actually by adding something to it from a ontological and epistemological perspective as well, because of their religious difference to those that come before themselves. And so, obviously, about 8 centuries of Islamic civilization at the top, excelling in sciences, not only in social sciences or religious sciences, but also in positive sciences, in maths, in astronomy, in geography, in robotics as well. And then obviously, because things are cyclical, I think this is sunnatullah. You know, Allah has created us in a way that is very cyclical in our days, in our weeks, in our months, in our years, etc. And in our generations as well. That is why our civilization had a downturn, obviously, and the Western civilization surpassed us by translating in the same way, starting in 11th century, 12th century, the first universities established in Bologna, in Oxford. By the way, the first university precedes in our civilization in Morocco at Caribbean University. But they also surpassed our civilization by not only doing the same thing, obviously they translated, they read, they understood, but they chose to put at the center not the well-being of individuals and societies and humanity, but the collection of capital, but by the accumulation of capital. This was, I think, the main difference that the West has brought upon humanity and the civilization, and they surpassed by the dynamism that this new change has brought upon. When you put at the center this drive to accumulate capital not for the sake of making great investments, as we learned in economics classes, but for the sake of it, really. Nowadays, when we question the advances in technology, in AI, let's say, if you ask anyone, why are we doing this? Why do we need so many energy for so many data centers to make this AI even working better? There is not a clear answer. We seem to be doing it for the sake of it, for how it motivates us to accumulate more capital. It is something that we do for its own sake. The minister has already shown the numbers. It's not helping humanity as a whole. It's not helping inequalities go away. It's not helping underdeveloped nations develop better with better hospitals, with better education, with better infrastructure, etc. So that's what happens when you put at the center of things interest, wealth, rather than collaboration, rather than humanity's identity as Ashraf Makhluqat. If you value human beings, then things change. So I want to cut to the chase without going too long. I'm not going to read from my talk today. But really, if we are going to surpass Western civilization again as Muslims, there is definitely a chance, there is definitely an opportunity. And there is definitely the feeling that cyclically something is coming, right? The Western civilization is starting its downturn, I think. But just registering that and identifying that doesn't help you much. That just is a start for us to motivate ourselves and to work hard. The fact that we have done it gives us some courage, gives us some clues as to the fact that we can do it again. But again, it's not going to happen by repeating the same things. So we cannot surpass the West by just translating their works, their scholarly works, by just doing the things that they do better than them. We have to find a new dynamic that will make us achieve something new that is also better from different angles. So we will not put at the center accumulation of wealth for the sake of it as a civilizational momentum creator or a dynamic. So we have to put at the center again, I think, humanity as the most valued of the creation. And if we can achieve that once we start this movement to translate, to understand, to transcend, we are going to be able to regain our civilizational status at the top. And that will, I think, give hope again to humanity to recover from all this mess we find ourselves in today. I mean, sometimes with my wife, we try to find movies to watch. There is so much darkness nowadays in movies. We don't find many utopia scenarios anymore. They are all about dystopias, you know, how we end up in a terrible space, terrible place, how we are left with 10 guys here, 20 guys there, and what happened to destroy everything that was left of us, right? The movies are increasingly about this, and increasingly, I try to follow what my son, my number one is 18 years old, what he's watching. Increasingly, they are watching horror movies. And increasingly, horror movies are trending. So this shows, I think, also what's happening with us, because it's pretty much what's behind our thinking and feeling, what we are feeling. So to instill again hope in humanity. Why are people not having kids when they have more income, when they have more wealth, when they have more money? Why are they having less kids when they have more ability to deal with a larger family? Because they are not excited anymore with having kids. They are not excited anymore with leaving legacies, worldly or otherwise. That is why I think to instill that, when we talk about Islamic finance, we should not really focus only on the numbers. The numbers are obviously important, but we should not forget the anchor that will make us Islamic, that will make us different, that will make us able to progress in a civilizational scale. That is why I hope today and tomorrow the discussions don't really disconnect from the fact that we have to focus on doing something else, not mimicking what's happening in global finance, but really trying to create that difference. So I would like to thank Mr. Khalevi for having Al-Quds University present what they are doing, right? So as a trustee of Ibn Khaldun University, I immediately thought about how we can share from our endowment with Al-Quds University. So we have to actively be thinking, oh, there is something here. Of course, Gaza and Palestine is our cause, so how can we support Al-Quds? Because really, what you do today matters. What goes on in political sphere matters. But how you invest in people will matter in the longer term much more than anything else. So we have to make sure that one of the best educated people in the world are Palestinians, as you know. So we have to keep it that way so that they have a chance in the end to prevail. And as Muslims, we have to be best educated in the world for us to have a chance to do what I've been talking about in the last 5 minutes. So I hope we can create these institutions again with this spirit. So in our schools, I'm heavily involved in education from K through PhD. K through PhD. Everywhere in education we operate, and I try to do my best. And I find our teachers and our administrators in our schools sometimes being off track by following what the West is doing, merely trying to mimic what they have done in their schools, what made them successful in education. That's not enough for us, and that's not worthy of being the sole purpose of education in Muslim countries. I find some of the schools that are determined to be successful in the Gulf countries, for instance, being only Western schools. They are going to raise Western individuals. They are going to raise individuals that serve Western civilization. So we have to make sure that our educational paradigm is also different. And Ibn Khaldun University is an endeavor in that sense. We are trying to create a center of excellence in social science research in the world, but make sure that a comparative approach is there so that our students, when they study sociology, when they study economics, I studied economics in America, I learned Ibn Khaldun 15 years after I learned about Adam Smith. This is a shame. So we have to make sure that our young people have a trust in their heritage and in their forefathers so that they can believe in themselves to do something new, to transcend the civilizational circumstance that we find ourselves in. So this is sort of, I think, the gist of everything. The capital, as long as it's not for humanity, the fact that one individual can have $1 trillion and nobody cares about that, and nobody knows anymore why this person has to have $1 trillion, right? But that's why doing this thing for the sake of it, not questioning the spirit of things, I think is not going to take us anywhere else rather than serve the rest of the global Western civilization. I would like to thank all the contributors. I hope this grows every year. And I think, I really do believe in the spirit of Istanbul for our future, because Istanbul has everything that we need to instill within us this new drive, this new motivation to do great things in the coming century. And I really believe, we talk about century of Turkey, this is the president's mantra for the next generation of our leaders, and but this is not only Turkish world, this is also for the Muslim world, I think, because you know how the president thinks pretty much, always the whole Islamic world and the Ummah is in his heart. So it's not only about Turkey. So we need a century of Turkey, but inshallah it will be a century of the Muslim world as a total, and it will bring us up to offer something new to humanity. Thank you very much. Assalamu alaikum.
Ladies and gentlemen, the Deputy Chairman of the Board of Trustees at Ibn Khaldun University, His Excellency Necmettin Bilal Erdoğan. Thank you for that. Esteemed guests, we now turn to a significant milestone for Al Baraka. It's my pleasure to invite you to direct your attention to the screens for the official launch of Al Baraka's first strategic report.
In a rapidly changing world, the Islamic economy is evolving into one of the most dynamic forces shaping the global economic landscape. Yet understanding this ecosystem has remained a challenge. Most studies examine each sector separately, while the true strength of the Islamic economy lies in the connections between them. This is where the Al-Baraka Strategic Report on Islamic Economy offers a new perspective. A periodic report published every 5 years, aiming to identify and define the major pillars of the Islamic economy within a comprehensive and integrated framework developed by Al-Baraka Forum for Islamic Economy. A comprehensive strategic reference, bringing together the diverse dimensions of the Islamic economy into one integrated vision. What makes this report unique is its holistic approach. It moves beyond fragmented analysis to examine how Islamic financial institutions, halal industries, religious institutions and macroeconomic trends shape the future of the global Islamic economy, and how social finance supports sustainable development. The report explores 5 major tracks: Islamic financial institutions, including Islamic banking, sukuk, takaful, and Islamic fintech, the global halal industry, from food and pharmaceuticals to tourism, fashion, media, and entertainment, Islamic social finance, highlighting the role of zakat, waqf, and Qard Hassan institutions in advancing social justice and economic resilience. The economics of religious institutions and rituals, revealing their impact on education, infrastructure, tourism, and community development. And finally, the macroeconomic realities of OIC countries and the institutional framework supporting the global Islamic economy. The Al-Baraka Strategic Report on Islamic Economy, a strategic vision connecting knowledge, development, and the future of the Islamic economy.
Well, as we get the hard copies of those reports handed out to our members of the protocol, I'd like to invite to the stage the Secretary General of the Al-Baraka Forum for Islamic Economy, His Excellency Mr. Yusuf Khalawi, to the stage.
Assalamu alaikum wa rahmatullahi wa barakatuh. Just I want to facilitate that few seconds during the distribution. We are today not launching a new report. We are launching our second challenge. So 5 years ago, we launched our first challenge, which is creating global events across the year. So alhamdulillah, 5 years later, as of today, we are managing every year 3 summits, 2 regional conferences, 5 across the year. And there is no other organization in Islamic finance is doing that. Today we are launching our second challenge, which is the reporting system for the Islamic economy. When you go across that report, as you have seen in the video, it covers 5 different pillars or areas. You will see in the 3rd and the 4th pillar the lack of data. For example, what we have as a socio-economy, where is the economy of zakat and the economy of waqf, for example? Take the largest examples in waqf as Saudi Arabia, as Turkey, as Malaysia. Where are the numbers? We have a huge lack of numbers. So we are raising today our second challenge, which is developing the right reporting for Islamic economy. In the first and second pillars, in general, Islamic economy is doing well. We have several good reports. Still, we need some development. But when it comes to the 3rd and 4th pillar, we have a huge lack of data. And here we are raising our second challenge. So as we succeeded in the first challenge by partnering with the best partners in the world, alhamdulillah, including Istanbul Summit, we would love to partner also with the best partners in the world. Majority of them are sitting here today to develop a new successful project or approach in that challenge. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Your Excellency, for those remarks. Ladies and gentlemen, one of the key outcomes of this summit is the strengthening of strategic partnerships that advance the growth and development of the Islamic economy. In a moment, we will witness the signing of several agreements that reflect our shared commitment to collaboration, innovation, and institutional cooperation. We now begin with our first Memorandum of Understanding signing ceremony. This agreement will be signed between the General Council for Islamic Banks and Financial Institutions and the Islamic Cooperation Arbitration Center. Join me in welcoming the Secretary General of the General Council for Islamic Banks and Financial Institutions, Mr. Hamza Bawazir. I'd also like to welcome the Secretary General of the Organization of Islamic Cooperation Arbitration Center, Dr. Umar Oseni. And the agreement has been signed between the General Council for Islamic Banks and Financial Institutions and the Islamic Cooperation Arbitration Center. Thank you, gentlemen, and we, of course, wish both organizations success from this partnership. Esteemed guests, we will now witness the signing of the next MOU that reflects a shared commitment to advancing scholarship, research, and intellectual leadership in the field of Islamic economics. This agreement will be signed between the Salih Kamil Islamic Economics Award and Istanbul Sabahat Inzam University. Join me in welcoming the Secretary General of the Al Barakah Forum for Islamic Economy, His Excellency Mr. Yusuf Khalawi, and the Rector of Istanbul Sabahat Inzam University, His Excellency Professor Dr. Ismail Küçük. We wish all the best to the Salih Kamil Islamic Economics Award and the Istanbul Sabahat Inzam University partnership currently being signed here at the 3rd Global Islamic Economy Summit in Istanbul. We now proceed to another important memorandum of understanding that reflects a shared commitment to strengthening communication, media cooperation, and the dissemination of knowledge across the Islamic world. This agreement will be signed between the Al Barakah Forum for Islamic Economy and the Union for Broadcasting and Television Organizations of the OIC. I'd like to welcome the representatives to the stage, the Secretary General of the Al Barakah Forum for Islamic Economy, His Excellency Mr. Yusuf Khalawi, which is with me here. And I would also like to welcome the President of the OIC States Broadcasting Union, His Excellency Professor Dr. Amr Mamdouh Elisi. Congratulations to both institutions on this partnership, and we wish them every success in their future collaboration. And the final agreement will be signed between Ibn Khaldun University and the Securities Commission Malaysia. To oversee the signing of this agreement, I would first like to welcome His Excellency Mr. Nejmuddin Bilal Erdogan to the stage. I would also like to welcome the two representatives of the signing parties, the President of Ibn Khaldun University, Professor Dr. Attila Arkan, and the Executive Chairman of the Securities Commission Malaysia, Dato Muhammad Faiz Azmi. Ladies and gentlemen, please join me in congratulating both Ibn Khaldun University and the Securities Commission Malaysia on this important partnership. I would now like to invite all of our delegates to the center of the stage for a final family photo. I think the agreements deserve another warm, strong round of applause. This is how the Islamic economy will go stronger and more fruitful for the years to come. Okay. Thank you very much. We will continue to honor our sponsors and our partners and our sponsors. If I can have you stay with me on the stage. Our sponsors and partners, of course, have played an essential role in bringing this gathering to life and creating a platform for dialogue. I would also like to welcome the President of the Investment and Finance Office of the Republic of Turkey, His Excellency Mr. Burak Dağlıoğlu, to join us here on stage, the Chief Executive Officer and Board Member of the Turkey Wealth Fund, His Excellency Mr. Salim Arda Armut, the President of the ICYF, His Excellency Mr. Taha Ayhan, and the Chief Executive Officer of the Istanbul Finance Center, Mr. Ahmet İhsan Erdem. We will now begin by recognizing our global partner, which is the Al Baraka Group. I'd like to welcome the Deputy Chairman of Al Baraka Group, His Excellency Mr. Mohammed Ibrahim Al-Shuruki. Next is our hosting partner, Halk Bank. Join me in welcoming the General Manager and Board Member of Halk Bank, Dr. Recep Özel. Dr. Recep Özdil. Our global communication partner is Anadolu Ajansı. I'd like to welcome the Vice President and CEO, Mr. Oğuz Enes Peru. Our second global communication partner is Demirören Media Group. Join me in welcoming the board member of Demirören Holding, Mr. Bereket Murat Oktay. Now on to recognizing our sponsors, starting off with our platinum sponsor, Ziraat Participation Bank. I'd like to welcome the Deputy General Manager of Ziraat Katılım, Mr. Suat Tüccar, to the stage. On to our gold sponsors, the first one being Türkiye Katılım Sigorta. I'd like to invite the chairman of the board of Türkiye Katılım Sigorta, Professor Dr. Servet Bayındır, to the stage. Our next gold sponsor is Takas Bank. I'd like to welcome the chairperson of Takas Bank, Dr. Mahmut Kayacık. Our third gold sponsor is Fuzul. Join me in welcoming the chairman of the board of Fuzul, Mr. Eyüp Akbal. Our final gold sponsor is Türkiye Emlak Katılım. I'd like to invite the general manager of Türkiye Emlak Katılım, Mr. Onur Gök, to the stage. All right, on to our silver sponsors now of the summit is Yıldız Holding. I'd like to call the Financial Affairs Vice President, Mr. Muharrem Uzunoğlu. Our bronze sponsor is Kalyon İnşaat. Join me in welcoming the chairman of the board of Kalyon İnşaat, Mr. Murathan Kalyoncu. The seventh panel sponsor is Ayhan Hukuk. I'd like to welcome lawyer and founder of Ayhan Hukuk Bürosu, Mr. Namık Ayhan. The roundtable discussion sponsor is Halal 360. Join me in welcoming the Chief Executive Officer of Halal 360, Mr. Mahmoud Godel. And last but certainly not least is our media sponsor, Iqra Channel. I'd like to welcome the manager of Iqra Channel, Mr. Hassan Omar Al-Attas. And there you have it, ladies and gentlemen, our partners and sponsors. I'd like to have all of our delegates make their way to the center of the stage for a family photo. At this time, I'd also like to invite Minister Şimşek with us here on the stage to also capture this moment with us. Keep him on the stage. Ladies and gentlemen, we have a little gift being presented to the representative of Ibn Khaldun University, His Excellency, Mr. Necmettin Bilal Erdoğan, by the Securities Commission, Malaysia, His Excellency, Dato Muhammad Faiz Azmi. The first panel starts next, right?
Give it a minute until the mess.
Thank you very much to both of our signing partners of this milestone in relationships between the two organizations.
Let them just get the...
Hiç geldi mi sana buraya? Sahneye kimler çıkacak biliyor musun? Panelist olarak. İnsanlar geldi mi?
Are our panelists here? Are our panelists here? Ladies and gentlemen, esteemed guests, while my team here sets the stage for the first panel of the day, I'd like to ask all of our guests to stay seated as we will continue with our program shortly. As my team here continues to set up the stage for the first panel discussion of the day that is titled Foundations of Capital in the Islamic Economy, Concept, Principles, and Purpose. Sorry. Esteemed participants, we will now begin with our first panel discussion of the day. It is titled Foundations of Capital in the Islamic Economy, Concept, Principles, and Purpose. The conversation will explore the evolving role of banking groups in capital allocation, financial inclusion, economic resilience, cross-border investment, and the future of ethical finance. Moderating this discussion is Dr. Umar Hosseini, the Secretary General of the Organization of Islamic Cooperation Arbitration Center. Joining him are the General Manager and Board Member of Al Baraka Turk Participation Bank, Mr. Malik Khodr Temsah, the Chief Executive Officer of Group Islamic Banking at Standard Chartered Bank, Mr. Khurram Hilal, and Mr. Rafi Hanif, the Group Chief Executive Officer of MBSB Holding. Over to you.
I have not greeted you well, huh? Alhamdulillah, alhamdulillah. Tafadhal.
Salam, how are you, Malik?
You're missing in action. Huh? Oh, okay.
I think, Dr. Umar, we're unlucky because we've crossed into lunchtime now, right?
You're right. We start. Are we tested?
I think just wait for the instruction.
Yeah.
I think they're also waiting to get the room filled a bit more.
Should start? Okay. Yeah. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalamu ala ashraf al-anbiya wal mursaleen. Sayyidina wa nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Distinguished guests, esteemed CEOs, colleagues, and friends, assalamu alaikum wa rahmatullahi wa barakatuh. I'd like to welcome you to the first panel session of this summit dedicated exclusively to Islamic finance groups, Islamic banking groups, and our theme, it's Foundations of Capital in Islamic Economy, Concept, Principles, and Purpose. And this is both timely and urgent, and I'm sure you've heard a lot from the keynote speeches today. I will be having what I may call a fireside chat with three distinguished personalities here. Why I call it the fireside chat is, I may sound provocative somehow because you've heard a lot from the keynote speakers. You've got the discussion on capital as amana, and we also had the Quranic dimension of capital itself, and I got kind of inspired by that. So I'll be taking up some of these issues going forward. And we all know in today's environment, capital is no longer about the size of the balance sheet of banks. We have to kind of move beyond that. And capital now has to answer deeper questions, as you all know. Where does it flow? Who does it include? What kind of economic activity does it support? And how does it strengthen the societies during uncertainties? And of course, we will start the conversation by introducing the team. And after that, I'm going to kind of give them 10 minutes each to give their perspective on the main theme of the panel session. And subsequently, we'll actually proceed to a kind of a discussion. Don't worry, we don't have PowerPoint presentations today because they are group CEOs of banks. So it's always good to have a heart-to-heart discussion. And I'm going to grill them today on a number of questions. So be ready for it. And of course, I'm going to give you the last 15 minutes for your Q&A. So be prepared with your questions. I know the regular questions we get whenever we go for Islamic finance conferences, replication of products, we may make it conventional banks. I'm prepared for those questions. And they're all prepared for that. So we know the kind of the usual suspects, but let's actually focus on the theme today. Capital itself, capital as amana. How can we transform our economies? And what is the role of these big banking groups, basically, going forward? And I think this is something I'm really happy about, that we're discussing this at the first session today. Now, without following any particular order, distinguished guests, let me start with the introduction of our guests. Now, I'm going to start with Mr. Malik Khodr Temsah, who is sitting just next to me here. He is the General Manager and Board Member of Al Baraka Turk Participation Bank, which is a subsidiary of the Bahrain-based Al Baraka Group. With more than 2 decades of international banking and finance experience, he has held various treasury, capital markets, and investment roles across the United States, the UK, Bahrain, and Turkey. Prior to becoming general manager, he led Al Baraka Turk's treasury, financial institutions, and investment banking divisions. He began his career at Bank of America, later joining the European Islamic Investment Bank in London, and subsequently the Al Baraka Group in Bahrain, where he established and managed its global sukuk portfolios. You're welcome. The next panelist is Mr. Khurram Hilal. Mr. Hilal is the Chief Executive Officer of the Standard Chartered SADC, the global Islamic banking business of Standard Chartered Bank. I like the word SADC here. It's related to Amana. So we're going to link that to capital today. Now, Mr. Hilal actually, as a career Islamic banker, has over 25 years of core Islamic banking experience across consumer, wealth management, private banking, transaction banking, and financial markets. He has led the development and rollout of the bank's Islamic banking operation across several footprints in Asia, in Africa, Middle East, Europe, and North America. Mr. Hilal is proud to have learned from and worked alongside some of the top scholars in the Islamic finance industry. He has a very long bio. I'll just cut it short, but there's something I need to emphasize here. He's currently pursuing advanced studies in classical Islamic jurisprudence. And that's really inspiring. Okay, now you'll have to tell me more when we look at the Maqasid dimension of capital itself and your role, basically, and I think is really key. Now, you're welcome to this session. Now, the next panelist, who is a well-known brother, Mr. Rafi Hanif, all the way from Malaysia. We started from Turkey and went all the way to, I don't know, whether Dubai or where, then now we are back to Malaysia. Mr. Rafi Hanif is a Group Chief Executive Officer of MBSB Holding. And of course, he was previously the CEO of Group Transaction Banking at CIMB from 2019 to June 2023. He began his banking career in 1999 with HSBC Investment in London. Over the past 25 years, he has held various leadership roles at HSBC Middle East and several other banks. He was then appointed as the CEO of HSBC Amana Bank and subsequently joined CIMB as the CEO of CIMB Islamic Bank. He also served as CIMB's Group Chief Sustainability Officer and the CEO of CIMB Foundation, where he was instrumental in positioning the sustainability agenda as a key strategic driver for CIMB Group. Mr. Rafi actually read law. I'm always happy to see lawyers. And Islamic law at the International Islamic University, Malaysia, and then pursued his Master of Laws at the Harvard Law School. You're most welcome. Now, join me in welcoming the third panelist, please. Let's give them a hand. Thank you. Now, distinguished guests, we are really gathering at a fascinating inflection point for global markets, and specifically for the industry that brings us together, which is the Islamic finance industry. Now, the discussion earlier during the keynote speeches actually expanded the breadth of the whole idea, not just focus on Islamic finance. We're now focusing on the broader Islamic economy, which I think is the core focus of Al Baraka summits. Now, for decades, the industry here, we're talking about Islamic finance, has actually emerged as a global alternative. And we can officially say that, we can be talking about niches again. We're talking about an alternative to global financial system. However, we've got so many data, they talk about, the industry is about $6 trillion already. But again, behind this data itself, we have to look at how far have we gone. And I like the analysis we got earlier in terms of looking at it as a mountain. Where are we? We look up, you look down. Yeah, we've gone far, in the past, 50 years. But again, there is still a lot to be done. And I always tell people, the greatest room in the world is a room for improvement. And again, it is those areas of improvement that my panelists will be actually addressing today, inshallah. Now, I would like to begin the discussion by posing a question to our panelists. And this question is an open-ended question. But again, I'm going to limit the intervention to about 5 to 10 minutes. Again, this is broad, 5 to 10 minutes, but we're going to have a hard stop at 10 minutes. The discussion here, which will actually revolve around your perspectives on the main theme of this session, which is foundations of capital in the Islamic economy, concept, principles, and purpose. Now, we're looking at 3 different aspects here. Whether you want to look at the Makassid dimension, whether you want to look at the ethical dimension, the sustainability dimension, is up to you. But again, I want to hear your perspectives on this topic. And I would like to start with Mr. Malik.
Good morning, Dr. Omar. And I think before starting, it would be very much meaningful to express thanks to Sheikh Yusuf and the Al Baraka Forum team for extending this invitation for us to participate, obviously, in this panel with your distinguished self, my fellow panelists, and of course, our dear and valued guests. As you all know, over the last 6 or 7 years, our world has been going through significant geopolitical and macroeconomic headwinds, which are having real implications for countries, communities, and individuals alike. Now, naturally, as history shows, reverberations also bring challenges, but they also bring opportunities. And it's very much in these kind of periods that the responsibility of capital providers, i.e. banks, goes beyond just financing. We naturally are expected to and have an obligation to support financial inclusion, broaden greater aspects of our capital deployment so that it has an impact on underserved communities, facilitating cross-border trade and investment, which tends to naturally dry up in difficult times, and ensuring that economic growth goes beyond just the upper escalons, so to speak, of the credit universe, but really filters down and touches underserved communities which otherwise don't have access to capital. For Islamic banking, for participation banking, for Al Baraka Turk specifically, this is a topic that's very dear to our heart, Dr. because it's in the very heart of our model is the notion that we believe as human beings in fair banking, in values that appeal to everyone beyond just our own faith. So I very much look forward to all these talking about all these topics in a bit more detail and practical terms later in the presentation. But I just want to again thank Baraka Forum for the opportunity. Inshallah, we'll be able to go into details in a lot more significant manner in the following questions that will be coming our way, I'm sure.
Yeah, thank you very much for that perspective and for sharing what you're doing at Al Baraka. And I like the general scope you've given. We'll be going into specifics subsequently in terms of what you're doing and how you deploy your capital and how sustainable is the capital. I won't say how Sharia compliant is the capital. Yeah, I'll come to you. There are issues there. Okay, let me go to Mr. Hilal, and thank you. What are your perspectives on the theme of this session itself, or in terms of your opening remarks here today?
Jazakallah khair. Thank you very much, Dr. Umar. Am I audible at the back? If I can just do a sound check. Just show. Thank you very much. Bismillah ar-Rahman ar-Rahim. Alhamdulillah wa salatu wa salamu ala Rasulillah wa ala alihi wa man wala. Jazakumullah khair. Thank you very much. And again, I would also like to thank the organizers of the event, Al Baraka Summits. It's a great legacy of late Sheikh Saleh Kamil rahimahullah. We've been talking about him since morning. And I'm very grateful to Brother Malik. So we were day before yesterday in his office, and he shared with me the recently published biography about Sheikh Saleh Kamil, Once Upon a Time in Makkah. And I would really encourage all of you to please do get a copy. I think it's an amazing, inspirational story. To me, the biggest challenge that the Muslim world is facing today is that of scarcity of leadership. And it reminds us in our recent times of people who've been around us, who've created amazing legacies, not just in the philanthropic work that he did, but also in entrepreneurship, in education, Islamic finance, of course. May Allah subhanahu wa ta'ala bless his soul. And may Allah subhanahu wa ta'ala make all of this effort as sadqa jariyah for him. I really encourage all of you to read that book. And there's a very interesting appendix at the end of the book where Sheikh himself had wrote his own guiding principles that he used across his life that he learned from his understanding of Islam. So please, I would recommend all of you to have access to that book. Now, coming to the topic of the discussion, as Brother Malik also talked about, I think it's very, very important for us to realize that we are going through some serious tectonic shifts in the geopolitical, in the macroeconomic environment that we are living in. I was fortunate and honored to be invited last year also here at the Global Islamic Economy Summit in Istanbul. And even if I just look at this last 12 months, from the 2nd of April 2025 announcement that came on the famous or infamous, whichever way you want to call it, the Liberation Day, as we say, which triggered the tariff wars, to the 28th of February, where we saw the announcement of Operation Epic Fury, which triggered the third Gulf War, the America-Iran war. And I'm based in Dubai physically, so we had more than 2,500 ballistic missiles and drones thrown at us during that period, in the peak of Ramadan, by the way. May Allah subhanahu wa ta'ala keep us all safe. Just yesterday also there was some announcement around that. And I've been here in this region more than 22 years, and we have never seen this type of an environment. But the Rafi would remember the time when we used to sit in the Cheche restaurant in Dubai back in 2004 and discuss the future of Islamic finance. Never ever have we seen, I look outside my window from where I sit in DIFC, and I look at this beautiful ICD Brookfield building, and there are scars of what the city has gone through, very visible today. And as a result of that, the impact that it has created, so the Strait of Hormuz technically is still shut. So we've got 20% of the world's energy supply, and not just the energy supply. You've got many other essential raw materials that pass through that strait, which are essential for manufacturing. It has had inflationary impacts around the world. So the shutdown, when you call it a sanction, you call it a blockade, these have real life impact, not just on at an economic level, but at a very individual level. People in our part of the world are suffering because of the impact of inflation. And as this morning I was sitting after Fajr to prepare my thoughts on this opening note, I was reminded of a very beautiful incident in the Seerah of Prophet Sallallahu Alaihi Wasallam. And I am a humble student of Seerah, where one of the chiefs of a region in Arabia at that time, which was called Yamama, which was a very fertile region. He became a Sahabi. His name was Thumama bin Uthal radiyallahu anhu. So he came to Medina and he accepted Islam. And then immediately he went to Makkah for Umrah. And the Quraysh, when they heard him recite the Islamic way of reciting the Talbiyah, they got agitated and they pounced on him. And he got upset and he warned them. He said, all of your grain supplies are coming through my region. Let me get back home and I'll make sure you don't get a single grain of wheat. And he lived up to that promise. He went back and he stopped those grain supplies going to Makkah. And it became so severe that Quraysh eventually had to write a letter to Prophet Sallallahu Alaihi Wasallam. He said that you're somebody who teaches joining family relations, the Silatul Rahm. How can you let this happen to your own kith and kin? And Prophet Sallallahu Alaihi Wasallam then sent a message to Thumama and said, don't do it. Don't do it. So he was a very anti-sanction regimes, if you may want to call it, or trade blockages, if you may want to call it. That's a beautiful example in our history that we can see. Now, coming to Islamic finance, I think the first thing that we as Islamic finance institutions And I'm very proud to say, as Standard Chartered Bank, because we're a global institution which is operating across the Islamic world, and I'm sandwiched between two clients, by the way. You've got Al Baraka and MBSB, the two great clients of ours. I think as an industry, we need to have this realization, that they say we need to read the room. We need to read what's happening around us in the world. So historically, what we've seen is our region has been one very domestically focused. Traditionally, Islamic banks, if you look at their balance sheet, if you look at their credit book, they have been very domestically focused. And what happens is when you have a crisis in your region, then you get exposed because, as they say, you have all your eggs in one basket, and when that basket gets impacted, there is a problem. So there's hardly any AAA asset instrument available. If you look at the Sukuk universe as well, and we all celebrate that now Sukuks are over $1 trillion. We achieved that milestone. But when you look at that book, that's really confined to some very select sovereign names. Outside of that, the universe is really, really small, and Islamic institutions still struggle to find ability to diversify their exposure to other regions. Secondly, from a geographical perspective, I think at a macro level, a lot of the countries in our regions have been historically very westward looking. So His Excellency, Mr. Shimshek, showed us some very nice graphs on the direction of travel of investment, which has historically been towards US and Europe. And I think the events of the last 1.5, 2 years are a big wake-up call, especially for us in the OIC countries, that we need to start interacting more amongst our markets, call it East Asia, talking more to West Asia,
Absolutely.
Call it South-South, collaboration, or within intra-OIC collaboration. There's a huge amount of room for us to increase that trade. I'm very, very pleased to see this week we have a delegation here from Malaysia. Rafi is also representing the Association of Islamic Banks. We had the chairman of the Securities Commission. I had a very nice meeting with him this morning. We have the governor of the Central Bank of Malaysia here. And these are early signs of efforts that are happening to bring Asia more closer to the Middle East, more closer to Turkey, which is really at the heart of civilization. It has these historical connections. I am in China, hopefully, inshallah, later this month on the same mission, trying to get the Chinese government, the institutions there, the Sovereign Wealth Fund, to look at Islamic finance, because as we see this collaboration increasing, so China has now become the largest trading partner for Saudi Arabia, knocking off USA, which had traditionally held that position. It is very, very important for Asian institutions to understand that when you come to Middle East, the language of communication is Islamic finance.
Yeah.
Right? So we, inshallah, trying to make every effort to play our role in that respect. And as we proceed in the discussion in the later part of the summit, inshallah, there'll be more discussions around.
Thank you for that. I like the idea of looking at how the region can work with each other. In terms of investments from Asia to Turkey to the GCC, and I think it's really important. But in this whole puzzle, capital is key. And that takes me to Mr. Rafi Hanif in terms of the purpose of capital itself in Islamic economy. Of course, we always talk about the original value proposition of Islamic economy, basically the maslaha dimension, the maqasid dimension. I mean, it's huge. We can discuss that for the whole day. But again, in the current geographical kind of geopolitical climate we have now, how do we kind of re-identify or reinvent the purpose of capital while grounding it in Islamic economy?
Thank you. Thanks for Al Barakat for inviting us and to organizing the panel session. If you look at the concept of capital from a philosophical perspective, God has clearly mentioned in the Quran, to some he has given more capital than the others, more wealth than the others. To those who has been endowed more, it's a big challenge. It's a test in itself, whether you are fulfilling the role of amana, the hilafah, that has been entrusted on mankind. So if you have more capital, you have a bigger burden. And the concept of amana requires the capital owner, the capitalist, to invest their capital in a responsible and a sustainable manner. So the responsibility is to ensure that the maximum benefit is derived from the deployment of the capital. The maslaha needs to be emphasized. The social benefit must overweigh. And it must also make sure that it doesn't lead to mafasid, the social harm. So you should avoid social harm in the deployment of the capital and increase the social benefit. That's why Islamic banking, Islamic finance from the very beginning had a negative list. You should not deploy the capital even if it's highly profitable, if it is going into the alcohol industry or the gambling industry or into many other socially harmful industries. So that was the critical role of the owner of capital. And there's also this bigger maslaha in terms of, preserving the religion and life and intellect and family and property, the 5 maqasids. But that's on a philosophical perspective. So everyone aspires towards that high ground in terms of achieving the objectives of capital. But when the capital is actually given to us, we don't get that mandate. The mandate is use this capital to generate double-digit returns. This is the most important mandate given, double-digit returns. What does double-digit return means? Minimum 10% return. So in banking, that's a huge responsibility, because if you get, let's work out the maths. If we get $1 billion worth of capital, to make 10% return, you need to have 10 million. So 1 billion means you have multiplied by 10. 10 billion worth of financing you must create. Because if you work out the maths, banks take deposits and then give financing. The depositors are also providers of capital. It's a different form of capital. They also expect a return. So let's take, you are paying the depositors 5% for the deposit. And you are charging the customers 7% on the financing, 8% on the financing. So the margin, the net profit margin between your financing income and the deposit cost in most countries around 2%. Some countries could be 3%. So if you work out 2% on 10 billion will give you about 20% return on the capital, because you need only 1 billion capital to raise 10 billion worth of financing. But then you have operating costs. Most banks have 50% operating costs, cost-income ratio. So from that 20%, 2% that you have got, you basically get about 1% margin. Return on asset is about 1%. Many other industries, if you are in the manufacturing industry, your margin is about 15%. But in banking, it's only 1%. That means constantly leverage. A capital provider is going to tell you, while you have to achieve all the maqasid, don't forget my double-digit returns. 10%. I don't know where the magic 10% came from. It's like a textbook requirement. Give me 10% ROE. If you are pressured to give 10% ROE, return on equity, you have to create debt. That's why you see in most countries debt is increasing. Because a bank that has got $1 billion worth of capital needs to give 10 billion worth of financing to make 10% ROE. That's the maths. So if you're saying, debt is increasing, of course it will increase. Because the capital provider is saying, hey, every year give me 10%, not only 1 year. After you get 10%, they say 12%. After 12%, 14%, 15%. So there's never end to this capital demand, returns. So then the banks are in a position where you have to choose. If you choose a project which has got high maslaha, it may not give a high return. No investor has come to us and said, make sure the maslaha is met. Maslaha, inshallah, is good. The weightage on maslaha is only 5%. 95% is on the ROE. give me 10% return. If you meet maslahah, alhamdulillah, good. If you don't, it's okay. But don't create social harm. So that's what we're doing now. Most Islamic banks avoid social harm, but it doesn't necessarily mean they are promoting social benefit. Meaning, if household sector is already indebted, in many Muslim countries, there's a high level of household debt. But if that's where you can meet 10% ROE, there's more financing going there. Do you agree?
Absolutely. Yeah.
Right? Because the banks know this is where I have to get my returns. If the SMEs require more funding, but the risk of default is higher, it will further reduce the ROE. Because after getting the 1% margin, 2% margin, you minus 50% for operating costs, you're left with 1%. Then, if you have credit costs, your 1% could be 80 basis points. Then you're not going to make your 10% ROE, you'll make 8% ROE. So what I'm trying to explain is, while the philosophical part is quite aspirational, it gives you all the nice things to hear, but in reality, the capitalists want returns. That's when the conflict comes. Do we help the SMEs to grow and take the credit cost, which might reduce your ROE? Or you just say, look, let me focus on the larger corporates. You know, if you're large, every bank will knock on your door. You want 2 billion, they'll give you 4 billion. But if you're small, it's very difficult for you to get funding. So instead of trickling down impact, remember the whole basis of this capitalist model is that when the rich get, empowered, the economic benefit will trickle down. What we are seeing is actually flowing up because the wealth is circulating among the few, and effectively it goes back to the capital requirement, the charge on the capital. I don't know why it has to be 10%, why not 7% or 6%, where you can have maximization of the social benefits. But in every country I've been, they want double-digit returns.
Yeah, this is where we have to define our rules. Yeah, thank you for that. I mean, it's really important, and this is why I like discussing with group CEOs, and we're starting the whole summit with this first session. And it's really interesting, while you were talking and, even Malik and Hilal earlier, I was just thinking about, the kind of, the boardroom kind of politics, the targets, the minimum threshold, like you said, the 10%. So why this is important is we have to be able to redefine these rules. And I think this resonates well with some of the, the keynote speeches we got earlier. Like you rightly asked, why 10%, basically? And you can actually make it 5% and balance it with, the principles of maslahah itself. And again, the issue of the negative list, and I think this is always the issue, the negative list, everything, riba, gharar, everything that is haram, that's fine. But I always say something, and I think I've kind of included this in some of my writings, that we have to think of the positive list as well. And I think I discussed this as one of the chapters of my books on Islamic contract law published by the Oxford University Press, that the positive list, what do you offer to the world itself? And that's where the maslahah part comes in. Don't do harm, but what else can you do positively? So you turn the whole concept of don't do harm to do something good, basically, the ihsan principle. So I think it's really important to look at that. Then the balancing between the mandate of the board itself, the shareholders, the depositor, and I think it's really a difficult challenge for CEOs of banks, I know. And it's something that is really difficult. We have to kind of go up the ladder, perhaps talk to the board itself and redefine the principles at that level. Again, apart from the board, you do have the shareholders. You don't know whether they're going to agree to those principles, so they can fire the whole board itself. So you've got this kind of, I won't call it a vicious cycle, but again, it calls for concern. Thank you for your opening remarks, and I think with that done, we're gonna move on to the panel discussion itself, where I'm going to ask some pointed questions to each of the panelists on different aspects, and some of those aspects will relate to what you're doing at the moment, and they all relate to the purpose of capital itself. Because again, one thing we want to avoid is creating an oligarchic kind of society. Like you talked about the rich getting richer, and the benefits actually do not actually trickle down. They all go up again. like Allah subhanahu wa ta'ala says in the Quran, Kila takuna dawlatan bin al-agniya minkum. So that you don't kind of have that dawlatan bin al-agniya minkum. I mean, that came in the, from the concept of zakat itself in terms of zakat. But I think it's really important in terms of deploying capital itself. How do we ensure we address the needs of the SMEs, basically? How do we ensure that we don't only get the rich getting richer, we also kind of ensure equitable distribution of economic resources through proper deployment of capital? And I think this is really key. And that takes me to the first question to Mr. Malik. You're sitting next to me, so I'm sorry, I'll be starting with you all the time. But sometimes I'm going to jump. Now, regarding strategic capital, because again, at the board level, the CEOs, you sit at the board meetings, you discuss strategy. Now, when it comes to deploying capital, how is Al Baraka Talk redefining its capital allocation strategies to remain resilient against rapid geopolitical shifts, as we discussed earlier, and macroeconomic pressures as well?
So let me kind of start with a very broad picture, then ham straight on to Al Baraka Talk within 5 minutes.
Sure.
So if we look at the period sort of between 2008, right, the major financial crisis which started in the US and sort of moved across the world, up until probably around 2020, it would be an objective statement to state that most banking groups operated in fairly comfortable, predictable, stable operating environments. Low inflation, low rates, fairly low geopolitical, if you want, tensions, broad-based support for globalization. Now, if we look at the sort of last 6-7 years, that has changed somewhat. But in that previous period, banking groups and boards predominantly focused with a very singular mindset on two things: maximizing growth, maximizing profitability, maximizing ROE by focusing on high margin customers, new business areas, maximizing earnings growth by growing balance sheets, growing fees and commissions, improving efficiency by streamlining costs, focusing on risk-adjusted returns. So the status quo mindset, I would say, back at that time was very much maximize profits, maximize balance sheet growth. Maslahat, everything else kind of came second and third place. Now, over the last 6-7 years, we've seen geopolitical tensions lead to realignments of alliances. And so naturally, we've gone to a much more fragmented world where companies are having to adjust their supply chains based on those new realities. We've gone from a low-rate environment to a high-rate environment. Since 2022, the world is struggling to get rid of sticky inflation. And yes, that has supported banking profits, but it's also led to significantly higher funding costs and cost of risk for businesses. AI and digital transformation is touching each of our lives and the lives of our businesses in more ways than we can understand, as I believe His Excellency Bilal Erdogan also sort of mentioned in his speech. And we're also, as banks, struggling to keep up with how do we make use of this in a meaningful way. Sustainability, impact, and inclusion used to be perhaps secondary or third-degree topics, but they are no longer. And what I would probably say is that in the wake of these changes, on the very board level and management level, we do ask ourselves a very fundamental question. How do we sustain profits while remaining resilient and relevant amongst this uncertainty while making an impact? And I will be getting into later how we're incorporating our ESG sort of frameworks into our allocations. Finally, I'll just conclude with this. In the current environment over the last few years, our capital deployment has sort of gone around three, I would say, core areas. One would be moving away from traditional capital towards the branches, which used to be historically the means of growing in the world and acquiring customers, to really using capital in terms of strengthening our core infrastructure, our core systems, our customer-facing digital sort of channels, and in a way integrating all those sort of together to each other in a fairly seamless manner. The second thing I would say is that capital is increasingly, amongst banking groups especially, being allocated today along friendly sort of national political alliances, because you need comfort that your capital is not at risk. But also in the case of a country like Turkey, where our capital is being deployed to meet national agendas aimed at strengthening productive sectors, right? Infrastructure, export-oriented companies, water and food securities. And finally, our capital is going towards beyond traditional banking services, because we have realized for some time, as banks, as Islamic banks, we are not going to survive by focusing purely on collecting deposits, as you mentioned, and just giving credits. We need to have an ecosystem for our customers that goes beyond traditional banking.
Absolutely.
So I would probably conclude in that aspect. In the past, capital deployment was purely balance sheet growth, profits growth. Today, it's actually about, yes, sustaining profits, meeting targets, but also ensuring that our capital is deployed in a manner that is meaningful, that achieves certain agendas for the broader sort of authorities as well, and is allowing us to be resilient in the long run as well.
Absolutely, yeah. I think that touches on systemic equilibrium itself, and I think it's really key when it comes to moving beyond just profitability to looking at key priorities. And that takes me to Mr. Rafi Hanif regarding systemic equilibrium and in balancing profitability with social impact. How can a banking group basically intentionally structuralize operations to reduce domestic economic imbalances and boost financial inclusion? I think that's really key going forward.
So the challenge I've seen over the years, I was also fortunate I was the CEO of a foundation. So the previous bank I was in, we allocate about $20 million every year for CSR. It was under my foundation at that time. So what we did was we did the sweet and spicy type of financing. So we give a bit of this zakat or grants. So I give an example. We did for chili farming. So Malaysians, we eat chili 3 times a day, breakfast, lunch, and dinner.
3 times a day?
3 times.
Chili?
Yes. Chili for breakfast and chili for dinner as well.
I missed that.
Yes.
In my
You've
16
been there,
years
yes.
in Malaysia, yeah.
So, but we don't, we are not sustainable from a chili production perspective. We only produce about 35 to 40%, the rest we import. So we're trying to cultivate more sort of group farming for chili. So we adopted, we worked with one of the government agencies to come up with a fertigation system using some tools and app so you can control the environment in that farmhouse. So per farmer would require about 50 to 60,000 ringgit, about $15,000. So we've partly funded by grant, and then the remaining we said, look, we'll give you a soft financing, which you'll pay over 2 years, 3 years. And the off-taker, we got an association, the Farmers Association, to off-take all the chili produce and sell directly to the supermarkets. So there's no middleman. So we can also collect the money from the supermarkets. I thought it was an easy sell. I realized my team didn't want to do it. None of them were interested. They came to me one day and said, look, boss, our target is $800 million revenue a year. So every month you come and push me, you need to make $800 to $1 billion a year revenue. How much money are we going to make from this project? If each of these guys want only $15,000, $20,000, that's 100. It's nothing. That's only the financing. Revenue will be far less. Our responsibility is $800 million worth of revenue. We have no time for this. So the larger the bank, the more difficult for us to do more socially impactful financing.
Well, they eat the chili 3 times a day.
Yeah, despite that.
But they want to focus on the revenue.
Because they said my bonus comes from the revenue, not from this.
Chili.
Yeah.
Right?
Not from the chili.
Not from the chili. Chili, with the bonus I can buy more chili. So the point I'm making is smaller banks are able to do more social impact, in my experience, because the revenue targets are far higher, and the smaller the ticket size, the less interested the bigger banks are. At least this is my experience. So what we have to do is keep combining the sweet and spicy. And this is where the government or the central banks can play a role by saying, we want to have each bank to have a certain percentage of the portfolio catered for SMEs. some of the unbankable segment. Of course, central banks cannot force the banks to do it, but they can nudge. They can ask for monitoring. Every month, give me how much have you grown in these particular sectors. Food security is important. In Malaysia, we don't even produce enough rice. Again, we eat rice 3 times a day. But we import 55% of our rice requirements. So we need to push more, contract farming and so on. So my experience has been, while we really have opportunities, but the people on the ground are not keen to do it.
Yeah, thank you. That takes me to regional collaboration. Because again, you talked about the big banking groups may not be able to go into this kind of business, the chili business. I love that kind of an analogy you gave earlier. Now, if they can't go into those, you're kind of telling us the smaller banks can actually, and I think this is where we need regional collaboration, and we may have to look at the role of larger kind of banking groups like the Standard Chartered SADC itself. Now, Mr. Hilal, given your unique global footprint, what specific structural mechanisms are required to expand cross-border collaborations and fully unlock regional financial integration, particularly given the current geopolitical situation today?
So I think, as I said in my opening remarks, it's the need of the hour. I don't think it is a choice anymore. It's not an option. It is a must. We, as countries in the OIC region, in the global south, as we like to call ourselves, in the emerging world, whatever you want to label it, it's very, very important that we start collaborating with each other. In my opinion, within the Islamic finance, staying within the Islamic finance ecosystem, I see a couple of areas where we need to do a bit more work. Not to say that it's not happening. I think there are good signs, early signs of development in that space. But I think firstly, we need to have standardization. And by standardization, I'm not referring to everyone moving to one document or one standard, but it's more around giving respect to other opinions. I think it's very, very important. What I see, unfortunately, and within the Islamic finance industry, we have this unfortunate competition going on, a bit childish, I would say, where we say that my mufti is better than your mufti, my fatwa is better than your fatwa. And unfortunately, it has caused a huge amount of wastage of resources and time and energy in the industry arguing about things. I mean, imagine, again, we were sitting here last year and Dr. Adnan from Dubai Islamic Bank was here, and that was the year where they were celebrating the 50th anniversary of Dubai Islamic Bank, being the first fully commercial Islamic bank in the history of the world. So it was the 50th, the golden jubilee for Islamic finance. And still, we have tons and tons of papers being written and hours being spent in conferences talking about, is tawarruk allowed? Issues around Standard 59, Standard 62.
Are you mimicking conventional products?
So I think we need to move beyond these debates, and to the point that my dear brother Rafe was making, we need to look at the man on the street, pardon me, does not understand the difference between a murabaha to an ijara to a diminishing musharaka to whatever name you want to call them. They don't understand. His question to us is, how does it change my life? Are you making my life better? I'm suffering with 30% inflation. We're sitting here in Turkey. These are ground realities. How are you making my life better? I remember having a discussion with, maybe I should not name them, one of the Hajj funds in the world. And we were talking about how the inflation, particularly in Saudi, in the Haramain area, the strengthening of the dollar, how has that impacted the average Haji, the person who's going on Hajj? And they mentioned to me that, 15 years back, it took an average Haji in that country, again, I'm not naming because they're a client, it took an average Haji about 13 to 15 years to save, a layman on the streets, to save money to be able to go for Hajj. And today, with all the inflation and the strengthening of dollar, because they're saving in the local currency, which is continuously depreciating, he said it takes us an average of 32 years to be able to send one Haji Hajj. Now, we're all professionals sitting here with our banking and finance degrees and our qualification, our experience. Wallahi, I feel we will be held accountable for this. As professionals in this industry, what have we done to create solutions, to give better investment options to these institutions who are managing the Hajj funds, to be able to invest them better, diversify their exposure to the currencies, hedge themselves. I'm working with one of the very large Islamic finance markets, and I don't know I should say that or not. Our first application to the regulator in that country to offer a Sharia-compliant hedging product went in 2012. I visited the country last month to plead the case for the same. We've still not resolved it. So these are the practical challenges that I think as institutions we're facing. So that's a standardization to me. Second to me is obviously from a regulatory perspective, we need to create the interoperability. So it was great to see the initiative that the government of Turkey has taken to attract foreign capital. There's a lot of work happening in Saudi Arabia. I see my dear friend Hamza walking down. He's representing Saudi Arabia. And a huge amount of capital is being drawn towards that. The government is opening up. They're encouraging. Similarly, in Malaysia, lots of measures are being taken to attract capital. But the question is, at that level, we also need to appreciate the two-way movement of capital. It cannot just be an inward movement into your economy. You should also allow and encourage institutions from your country to go and export capital and participate in syndications, in sukuks, and other private placement transactions. I don't see too much of that happening. So I think there's a need for that to happen. And lastly, I think for this regional collaboration to grow, it is very important that we also look at the role of the boards, as Brother Rafi was taking. Often at times, the bankers get blamed for all the evils that are happening in the world. But you also need to look at the providers of capital. Yeah. What is the mandate that they have given to the management? What boundaries have they set for the management? And that sets the agenda for the management to go and execute.
Yeah, thank you very much. And I think the challenge that got me a bit, I don't know, I won't say demoralized in your speech. It's when you said, we as professionals will be asked by Allah subhanahu wa ta'ala, what have we done? And I think it's really challenging for all of us. And it's the bitter truth. We have to all agree to. And we're only here for a short time. When I say here, it means in the world itself. So whatever we're doing as professionals, in deploying capital or making decisions at the very highest level, we have to be conscious of that fact, And thank you for reminding us of that as well. And moving to Mr. Malik, and I think there's something very important in terms of the two-way capital flow. I think Mr. Hilal emphasized earlier, which is very important. When we talk about collaboration or realignment in the current geopolitical landscape, we have to introduce policies, that support two-way capital flow. Now, from your vantage point, Mr. Malik, in Turkey, how can banking groups practically smooth the path for greater cross-border investments between emerging markets generally?
So I think I'll start perhaps in area number one, which is the bricks and basics. Correspondent banking networks are actually important. A strong correspondent banking network isn't just a payments infrastructure. It is a corridor that promotes the flow of funds in a fairly trustworthy manner, opens up markets for customers as well. That's absolutely critical. And what we often see when you actually analyze investment flows in between countries, usually the capital starts on the trade side. Trade tends to precede investment flows because it's through trade that exporters become familiar with importers. They become familiar with local markets. And when you have that familiarity at the first level on the trade side, in terms of who you're dealing with, familiar with the business ethics, so to speak, of the country, then investment flows as a sort of latter step. So strengthening correspondent banking networks cannot be understated. Now that's been a challenge over the last few years as global banks have sort of de-risked right from frontier markets and developing markets. I think very few banks, very honestly speaking, like Standard Chartered, Sadiq, stayed committed to understanding their partners and working through them. And this certainly applies for us as Al Baraka Turk and why they are our most important correspondent bank. But obviously having a broad-based correspondent banking network is also important in terms of being able to transact in different currencies, opening trade markets for your customers depending on where they're exporting or importing from. The second thing that's actually very important is partnering with development institutions like the ITFC, the ICD, the IDB, EBRD, who are actually quite familiar with emerging market trade and risk mitigants and have the right agreements, provide the right guarantees, provide the right political risk insurance to allow you as a bank to confidently provide services to your customers, both in terms of scale as well as in terms of new markets. So it was, I believe, a few months ago that Al Baraka Turk was the first Islamic bank in Turkey to partner with the EBRD, European Bank for Reconstruction and Development. You know, we received, I think it was a $50 million limit to be part of their trade, I think it's TFP, Trade Facilitation Program. Under that trade facilitation program, the EBRD basically gives guarantees to international banks who are confirming the LCs that we're issuing on behalf of our importers. So you open up new markets for your importers where otherwise you couldn't have, unless you have these partnerships that expand your eco-banking system, so to speak. The third thing I would also recommend as a practical step, which we've also done actually at Al Baraka Turk, is, I know it sounds maybe a bit wrong, but it's the reality. It's doing the dirty work. What does that mean? So banks can give finance. They can open ecosystems. But banks need to also go beyond that in terms of actually promoting dialogue between entities, referring businesses to each other. So one of the things that we did in Al Baraka Turk, because we're part of Al Baraka Group, which is sitting in 15 sort of different OIC countries like Pakistan, Bahrain, Algeria, Tunisia, South Africa, etc., was we started organizing bilateral B2B referral programs and webinars to introduce our exporters to importers, to match them with each other, to make exporters more familiar with the trade dynamics of different countries. And we've seen that that actually works. It actually leads to engaged dialogue between our exporters and importers in different markets. They come to you for their business. So that's the hard work, right? It's sort of the B2B side and the business side, which we're focusing on. And finally, very briefly, is I believe Brother Khurram mentioned this a bit earlier. Cross-border investment flows also don't happen because we very much are all inwards looking. We have domestic markets, we have domestic sukuk issuances, we have domestic bonds, but the reason why we don't have international investors coming into those markets is because of lack of access, lack of transparency, lack of sufficient supply, lack of promotion and positioning. So I think that's also a very important thing. As Al Baraka, for example, Turk, a few months ago, about 7 months ago, we established the first ever offshore fund in Bahrain by partnering with an entity called SICO to allow GCC investors in Bahrain to invest in the Turkish domestic markets. So it's having these offshore instruments which allow customers access into the domestic market, see prices on a live basis, to understand how to approach. Those are absolutely key. And I think that's where I'll sort of stop.
Yeah, thank you very much. And the aspect of developing the correspondent banking network, I think it's key. And you raised this point, and I'm aware that the CEO of the International Islamic Liquidity Management Corporation, the IILM, is with us today, Mr. Safri. I know the ILLM has been collaborating with even the Islamic Development Bank, and they've initiated a lot of collaborations as well with other development banks. And I think it's really key in terms of developing the ecosystem itself. Now, Mr. Hilal, still on cross-border collaboration, Again, I know you wear many hats as well, basically. I know you've been involved with the IIFM because you mentioned standardization earlier. And as a lawyer, I have my own ways of defining standardization versus harmonization. But I think you aptly put it earlier in terms of, yes, you shouldn't be condemning people. My scholar is better than your scholar. Let's focus on the real economy. I mean, yes, Islamic finance has all these ideals. We talk about maslaha, we talk about funding the real economy, but we have to kind of do a reality check, basically, whether we are actually doing what we're expected to do. And this is where I feel whether it's standardization or harmonization, we need to kind of explore best ways to address this cross-border collaboration. Now, in your capacity as the board member of the IIFM, the International Islamic Financial Markets based in Bahrain, what critical gaps must standard-setting bodies actually, breach the next, to harmonize global cross-border capital markets? Because this is really key. You see a lot of developments. We've seen a lot of cross-border issuances. Of course, yes, we're all celebrating, as it was said earlier, that we've passed the $1 trillion mark, basically, in terms of Sukuk issuances. But impact is still key. How are we collaborating? Are the banks working together? I know we always have what they call the league table, and we know some of you are on top of the league table all the time. But again, how much are we collaborating? What should we do going forward?
Thank you. So I think it's a very important point. The standard setting bodies have a very, very important role. Alhamdulillah, through our association with IIFM, I've been on the board now over 5 years. The fundamental difference that I see between IIFM and some of the other standard setting bodies is it's more of a practical forum. So you see more practitioners sitting there who are facing these challenges every day in their life. Because, I mean, not to be disrespectful to anyone, but I see in many of the other forums, you find a lot of discussions which are academic in nature. And they don't have relevance to what's happening in the real life. These academic discussions are good to the extent that they help us innovate, produce new ideas. But in reality, it has to boil down to something practical, something that can be executed. You can have all the best ideas with the right intentions, but if it's not executable because the law of the land doesn't allow it, the sovereign would never, for example, let you take over their assets. There's a big debate going on in the industry around one of the standards. You would never be able to achieve what you're trying to achieve, right? So again, the point is the standardization work that's happening, it has to be very, very practical. And that's where I think IFM stands out with other institutions, because you see it's all practitioners sitting around the table, because they feel the pain every day, and they bring it to the table. Number two, I think the biggest amount of work that is required, and a lot is being done right now, is in the liquidity management space. It remains to be a core area of challenge for Islamic banks. We talk a lot about sukuks, but in reality, if you look at the profile of the sukuk book of Islamic banks, these are all long dated. And we are, by the way, going further longer on the tenors, which is a good thing to do, but at the same time, we need to also have short-term solutions. Very few markets, Malaysia being one, where you have the innovation available, where you can go into more shorter date instrument. What it does is that it allows Islamic banks in times of crises to have that flexibility, the treasurers, to have that flexibility that they can move the capital more quickly in the right places, with the right tenors for the interest, in the best interest of the capital provider, as well as the depositors. So a lot of work is happening. I think one big piece of work that is publicly available, the consultations are going on around, is the standardization of a Sharia-compliant repo instrument, which is basically a tool that allows Islamic banks to unlock the liquidity, which is trapped in the huge piles of sukuk. Because the challenge with the treasurers is they're all flush with liquidity. They don't have the right Sharia-compliant avenues to deploy that liquidity. So whenever a good, good credit quality instrument comes up, everyone just grabs onto it and holds onto it to dear life, and they don't want to, let it go, right? So the development of the repo market, I think, is very, very essential to bring that depth in the sukuk industry, and will then bring the pricing curve to a level where the issuers, those who are not practically, actively looking at sukuk as an option, will start actively looking at that. I'll stop.
Absolutely, yeah. Developing the repo market, I think, is really key. I mean, it's something I think the industry has been struggling with. And of course, the liquidity instrument, I think this is something we've seen. Also, in ILLM, I said earlier, the CEO is here, Mr. Safri, and I know they have introduced 1 month sukuk, 3 months, 6 months, and even 9 months, and 12 months, completing the whole curve, basically, for short-term paper. But again, yes, we know the industry needs more. We need more issuances in local currencies. And I think this is actually, the way to go. Because what we realize is many Islamic banks globally are sitting on huge kind of liquidity, so looking for where to deploy it. And this is where the arbitrage aspect comes in. We've seen this in many banks, across the world. And that takes me to the next point on, in terms of deploying capital, financing the real economy. Mr. Hanif, I think you've said a lot earlier in terms of the, though I'm not going to go back to the discussion on the chili production, even though I love chili or rice, in Malaysia. Now, how can financial institutions aggressively accelerate financial inclusion for the underserved entrepreneurs, within the industry itself, without necessarily compromising overall portfolio stability? I know it's a very difficult balance, but again, we need to now be forward-looking so that we can provide directions to our board. Board of directors need to understand it. The shareholders need to understand this. In fact, to some extent, the depositors need to understand this, basically. And this is where financial literacy comes in. For people, they have to unlearn certain things to learn new things.
So the progressive steps taken in Malaysia by the central bank and the Ministry of Finance is to help provide guarantee cushion for SME segments where we find banks are not really focusing on. For example, in the areas where there needs to be technological enhancements, there are funds given. So we have scheme Jaminan, basically it's a guarantee scheme where the government gives up to 80%. It's a portfolio basis. Banks will get lines from the central bank and the respective agencies where they will build a portfolio of SMEs. Typical loan size could be $2 million, could even go up to $5 million, up to 20 million ringgit. And 80% of it is government, the scheme guarantees it. So the bank takes 80% exposure. Obviously, the bank needs to do the proper due diligence. Just because it's guaranteed, we can't just give the money out. But these types of schemes have helped these SMEs to be inclusive from a financing perspective. Similar schemes have come up. So we have, for example, a particular scheme for women entrepreneurs. We want more women entrepreneurship. So we dedicate these funds, and a certain percentage is guaranteed by the scheme. We also have for automation. So there's a lot of, foreign labor being used for manufacturing and other processes. So we have a grant given for automation. And this is why I think if you look at Malaysia's standing in trade flows, we are probably the highest in the OIC world. And I would encourage you to look at the index that is called Economic Complexity Index, ECI. ECI basically shows or ranks country by the complexity of their economic output. So it measures diversity of products being produced and the ubiquity, how ubiquitous the products are. If they are unique, then you have a higher propensity to do well in trade. So if you look at the highest ranking is Japan. Its ranking is about the factor is about 1.69. And the highest among the OIC country is Malaysia, close to 0.89. And then followed by Turkey, 0.7. Saudi Arabia, 0.5. Many of the GCC countries are minus actually, because they're not actually value adding. They are buying and then redistributing. Is basically becoming like an entrepot, importing and exporting. So some of them you'll be surprised to see minus in the ranking. So what's required is you need to have huge number of SMEs creating different products. So your competency improves. I'm sure Turkey has a lot of SMEs who are innovating. And once you have that, as you pointed out earlier, how do we bring, we had, for example, Musiat coming to Malaysia before COVID. They used to come regularly. I used to host them previously. And when they come, we will then invite Malaysian counterparts to come. So if you're a supplier of, say, machineries for certain fabrication, we will then invite companies who are doing that fabrication to come for the matchmaking session. So that has really helped, but we need to continue. I think the forum, like Al Barakah, should allow countries to come together, OIC member countries to come, not just for an event, but after this is the matchmaking. For the matchmaking session, so we can continue. Through trade is when we can see capital flow. From trade, we can then do asset finance, and then we can move to project finance and so on. But if you can't start with trade, you can't just jump to asset finance. Capital flow will go for shorter term before it goes to medium and long term. Trade is absolutely critical. And if you look at the top two countries in the ECI, is Malaysia and Turkey, and these are the two that needs to match. Currently, Malaysia has got a $5 billion trade surplus with Turkey. So we are exporting more to Turkey. Turkey needs to export more to Malaysia. So we need to find more trade flows coming from Turkey.
Like consuming.
Absolutely. You know, talking about matchmaking, deal making, creating a platform, you know, for the OIC member states, and I think this is really key. We have done something about this at the OIC level, and this is spearheaded by the Islamic Chamber of Commerce and Development. Last year, we introduced what are called the B57 Business Leaders Forum, and the first edition of it was held in Istanbul here. And we are currently working on the second edition of it, which will be held, inshallah, on the 1st of November as part of the COMSEC ministerial meetings, you know, holding here in Istanbul. So we want to make it a global platform for the OIC member states where, you know, business people will meet, you know, and kind of, you know, trade, you know, agree. We want people to sign MOUs, to kind of have deals, you know, agreed upon on the spot, basically. So it's something very important in terms of how we can enhance our cross-border collaboration. Now, still on the SMEs, and I'll have to come back to Mr. Malik on the SMEs here. What concrete measures can participation banks, you know, the Islamic banks, deploy to better insulate and support entrepreneurship and SME growth in highly inflationary environments, while considering the original value proposition of Islamic economy, which is, you know, creating wealth, ensuring proper distribution of economic resources?
So what I would say is that high inflation usually means also high interest rate environment, high profit rate environment. And in high inflation environments, usually the first segments in the economy that tend to start shaking are the micros, followed by the SMEs, followed by the commercials, followed by the corporates. So in just 1 or 2 minutes, because I saw that you were given a 5-minute...
absolutely.
Exactly. Maintaining credit. That's obviously much harder to do because we live the consequences of this. When the economy starts tightening, there's pressure on us by our boards to pull back on credit. That's the easy thing to do. But from my point of view, it's a very clear responsibility. Even in and especially in the most difficult of times, we have a responsibility to continue to lend to viable businesses. Maybe they're having liquidity problems, but as long as they're not having solvency problems, we have a responsibility to lend to them. So that would be the first thing. Second thing, and very quickly, and I think this is very important in terms of SMEs, is right now all of you, or most of you, or some of you, have deposits in participation banks or Islamic banks. If in the GCC, it's probably a wakala or a murabaha deposit. If in Turkey, it's probably a mudaraba. If it's in Asia, it's probably a murabaha deposit, if I'm not mistaken. In almost all these cases, funds that you place with an Islamic bank goes to the bank's general pool. We do it on an unrestricted basis. We lend those funds to our SMEs. The rates we get back, we share with you as depositors. What we can do to, I think, provide more access to SMEs in these situations is create restricted financing tools. To allow our depositors to directly be able to authorize us vis-a-vis restricted wakala, restricted mudaraba, to invest funds where they want us to invest in terms of impact investing as well. So I think that's a very important area, and I'll just quickly stop there.
Yeah, thank you very much. I've been actually told we have just about 5 more minutes, but I'd like to open the floor for Q&A or some comments. But before then, I have one last question for all of you. And again, this is very important for me, and it's very close to my heart in terms of scaling up, whatever we are doing today. Now, as leaders of the industry and looking across the GCC, Southeast Asia, and Europe, what is the definitive roadmap, to mobilize capital, align cross-border regulations, and consolidate resources to finally establish what was called a mega Islamic bank with true global reach? And I'd like to start from Mr. Rafi. You know where I'm starting with.
We've been talking about mega Islamic bank for almost 20 years.
Yeah.
Iqbal. Malaysia had an ambition to bring this mega Islamic bank, but what's really missing is the trade flow. A mega Islamic bank, if you give us, $10 billion worth of capital, that's $100 billion worth of financing. Where are you going to get that financing if there's not enough trade flow? If you look at the intra-OIC trade, the total OIC trade flow, both imports and export, was about close to $6 trillion. And the intra-OIC was only 18%. That means we are trading outside the OIC, not intra.
Absolutely, yeah.
And if you look at EU's total trade volume, this was 24 number, is about 13.9 trillion. And the intra-EU trade is 60%. So they trade among themselves more than they trade with the rest of the world.
So do you think we can still realize this whole dream of
So
establishing?
we can do that if we produce higher qualities. That's why the economic complexity index is important.
Absolutely, yeah.
So if it's Saudi, UAE, and Turkey, they're in the top 3.
Yeah.
So they can trade. But what is the complexity of products being produced in other Muslim countries?
Absolutely, yeah.
If the quality is not there, the uniqueness is not there,
Okay.
people will go to Europe and America and Japan and China to buy.
Sure.
So mega Islamic bank, you can only build if there is growth in the trade flow between the OIC member countries, which is currently only 18%.
Tamam, thank you for that. Mr. Hilal, what do you think?
I think,
Just for a minute.
to me, the question here is, what would the mega Islamic bank solve, right? So we are in a situation here today where the largest, you can argue which is the largest Islamic economy in the world, arguably Turkey and Indonesia are the 2 biggest Islamic economies. The share of Islamic banking in both of these markets is under 10% today. And we are sitting 50 years after the foundation of the first Islamic bank. So what would a mega Islamic bank achieve? I completely second. I don't want to repeat the points that.
So you
Brother
concur,
Rafi-
as we say in law. You concur with him.
Yeah. So I think the issue here really is we need to develop the domestic market so that we have that size and scale. Because for a mega Islamic bank, yes, it will need to interact with the world and trade and have capital exchanges with the rest of the world as well, outside of the OIC world, but you always have a home market, right? And we need to have that developed and ready for the mega Islamic bank to be able to survive.
Excellent. Thank you. Mr. Malik, you have the last word.
Sure.
1 minute, please.
I'll make it 30 seconds. If we're going to just do more of the same, trying to mimic what Standard Chartered Sadiq does or the other bulge big banks, no, we don't need another mega Islamic bank. We have a lot of large banking groups, Islamic banking groups. What we need to do is collaborate better together, I think. And if we collaborate effectively, I think that would achieve the purpose.
Excellent. Thank you very much. And I'd like to thank the panelists. Before I leave, I would like to open the floor quickly for just one question. And let's see who gets that. Prof. Kabir Hassan, I want to use my veto not to allow you to ask a question. No, it's, the floor is yours. I was just joking here. Give him the mic here. You have 10 seconds. Please.
Yeah, well, I cannot say in 10 seconds, but you take a poke at the academics, that academics probably do not come with practical thing. But let's, put back the question back to you. God has forbidden riba, but God has not said that, give me a bank. We have created bank out of human construct, and we started with the wrong journey. This fractional reserve banking model that the conventional or Islamic are following, that's not going to solve the capital problem that you're talking about. That's going to create inequality. That's not going to let capital to grow. Like Rafi is saying all the time, 10% and leveraging yourself. So I'm just asking, you have been there for 20 plus years, and you have seen the growth of the Islamic banking, and it's about 80% of the Islamic finance industry. Don't it ever come to your mind that we are doing something wrong? Let's get out of here and do something, that partnership type of financing. That's what we have been trying to tell you guys.
Okay, yeah.
But you are not listening to us.
Yeah.
So if you could,
thank you,
please.
Professor Kabir. I like that dimension. But again, we have to. Okay, let me allow you to answer the question. I think the question is for you, Oram, right? Oh, he said yes. Your yes is so heavy. Yes. Okay, go ahead.
So I just give a cricketing
Please.
example. My
Just
answer
30
would
seconds
be
quickly.
in
Yeah,
10
we need to
seconds.
leave,
My
yeah.
cricketing example would be, it's very easy to sit on the commentary room and make comments about how you should have played that shot when you're facing one of the top, fastest bowler in the world who's throwing the ball at you at 140 kilometers an hour. My request would be pad up and join and come onto the pitch and play. If you think it's so easy to solve these problems, and all of the Islamic banks in the last 50 years, with a huge amount of experience and talent that is sitting there, has not been able to solve it. Bismillah, please come and teach us how to do it by doing it practically, sitting on this side of the fence rather than the other side.
Thank you very much, and I'd like to thank you, the audience, for staying. I know it's lunchtime, Zohar time, and I'd like to thank the panelists. And one last thing I would like to say is that, yes, everything is not perfect, but a lot has been achieved in the past 50 years. Of course, like I started the whole session today with this statement that the biggest room in the world is the room for improvement. Yes, steps have been taken to improve things, and definitely we look forward to a successful global Islamic finance industry. Once again, I thank my panelists for your thoughts, and I thank you, the audience, and we look forward to other sessions. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you to our moderator and our esteemed panelists for that very thought-provoking panel discussion. I'd like to have you guys come up to the front of the stage just so we can get a group photo. And I would also like to invite the Manager of International Relations and Business Development at the Al Barakah Forum for Islamic Economy, Mr. Ibrahim El Sayed, pass on a token of appreciation on behalf of the forum to our participants for their contributions.
Oh, okay. Thank you very much. I appreciate this, sir. It's so heavy. Jazakallah khair. Thank you.
Right next to our head office, by the way, because our head office.
Right, ladies and gentlemen, we will be having a short lunch break. We do have a slight change in program due to being a bit back on schedule, but we will go to a short lunch break, and I hope to see you all back here in the conference room where we will continue with the second panel of the day at 2:30 p.m. Enjoy. Ladies and gentlemen, esteemed guests, welcome back. I hope you enjoyed your lunch break and you're ready and re-energized to listen with full force to our second panel discussion of the day. We turn our attention to one of the most important opportunities shaping the future of economic cooperation across the Islamic world: digital transformation. Our second panel discussion is titled Combating Trade Challenges and Enhancing Economic Integration Through Digital Islamic Banking and Takaful, a Practical Approach for OIC member countries. Moderating this session is Professor Dr. Mehmet Bulut, the board member of the Scientific and Technological Research Council of Turkey. Joining him on stage are Mr. Hamza Bawazir, the Secretary General of the General Council for Islamic Banks and Financial Institutions, the Chief Executive Officer of the Central Securities Depository and Trade Repository of Turkey, Dr. Ekrem Arıkan, and the head of the Finance Department at the Investment and Finance Office of the Presidency of the Republic of Turkey, Dr. Tarık Akın. Dr. Bulut, over to you.
Thank you. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah wa salatu wa salam ala Rasulillah. Good afternoon to everybody. Today we will discuss, in my understanding, very important topic. I hope you will agree with me. And I would like to thank for giving us this opportunity to discuss this issue with our very distinguished guests and experts from the area. We will discuss today the economic and financial integration of OIC countries during the digital age and the challenges and opportunities. As you know, OIC was established in 1969. From that time, later on, COMSEC was established. Then, especially in recent decades, so many new institutions, you will also find them in the report that was given in the morning by this Al-Baraka. There are so many institutions about the organization of trading, finance, and the other issues. So we would like to see, these opportunities for the integration and from, the table to arena, to area, to come. How we can implement this, what we can do for this. And as you know, really, today we are facing with a very big challenges in the world economy, in digitalization, artificial intelligence, and some new approach, new aims for some new, unit integration for finance, for money, and for the other side. As Muslim world, if we miss something at this level, I am afraid we can also, for the future, we can lose so very big things. So today, I would like to thank to all these very good selective experts, and today we have our brother Hamza Bawazir from Saudi Arabia, Secretary General of Islamic Banks and Financial Institutions, SIBAFI. Hamza Bey has very big experience, over 20 years in Islamic finance, Sharia governance, compliance, product development, risk management, and corporate governance. Prior to joining SIBAFI, he served as head of Sharia division at Saudi National Bank. He contributed to key financial initiatives including the development of Islamic repo structure and with Saudi Central Bank. He also served as board member of IOF and contributes to Islamic finance standards and industrial best practices. He holds SME designation and executive MBA and bachelor's degree in Islamic jurisprudence, Sharia, and business administration. Thank you for being with us. And Dr. Ekrem Arikan is the CEO and board member of Turkish Security Depository Institution. And Dr. Arikan holds a computer engineering degree from Boğaziçi University, an MBA from Yeditepe University, and PhD from Istanbul Ticaret University. He worked in several companies in Turkey as support engineer, as a specialist, an official manager, corporate developer, director, from finance to industry. Dr. Arikan joined also to energy exchange market in Turkey. So his area is from energy to computer science, from finance to securities, very extensive experience. Since April 2019, he has been a CEO and board member of Turkish Securities Depository. He has driven this institution's local development and global expansion with corporate and technical restructuring, launching a loose custody for TURIP, the crowding system. So today we will listen this contribution, and we also would like to see his approach to extend this in OIC countries. And last but not least, we have Dr. Tarık Akın, Head of Finance Department at Investment and Finance Office of Presidency of Republic of Turkey. He currently serves as the Head of Department of Investment and Finance Office of the Presidency of Republic of Turkey. This department, is also very related from, the Islamic finance to fintech, and from financial investments to financial markets. Dr. Akın was head of the Department of Participation Finance at Finance Office of the Presidency in between 2021 and 2025. Dr. Akın also worked at the Undersecretariat of Treasury, Islamic Financial Services Board, World Bank, in Qatar, Center for International Development, at Harvard University. He was also visiting fellow at Oxford University in 2019 and 2020. He earned his bachelor's degree from Bilkent University, master's degree from Harvard, and PhD from INSAFE in Malaysia. And I hope, my intention is to start with Dr. Akın to see the project, what we are talking about. There is a project now under the Office of President, Office of Investment and Finance, to realize, to implement from theory to practice, to implement this project among the Islamic countries. And we can begin with Dr. Tarık. The floor is yours.
Thank you, dear Professor. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam.
Let me start with the name of this panel, Combating Trade Challenges and Enhancing Economic Integration. This is indeed the subject of our ongoing project under guidance of dear Professor Mehmet Bulut. So we have started this project, and we have working on this project for the last several months, if I am not wrong. And I want to start with saying something. When we talk about integration of the OIC countries, surpassing trade challenges, focusing on payment systems and so on, many people might have some concerns whether it is a viable or doable project or not. This is quite important to answer from the outset. And I want to focus on answering this question, whether we are dealing with a doable and viable project or not. Because as a public institution, we have to give rational decisions. We have to direct our sources for doable projects. Since we believe it can be an implementable project, we have started working, we have, started collaborating with other institutions as a coordination unit with regards to this project. So this, panel is also a reflection of our ongoing project, as I told you, named Integrated Digital Islamic Trade Facilitation Framework. In short, IDIT-FF, I call it as IDIT-FF, it's easier to say this. So, how we can, the background idea is as follows. How we can harness Islamic finance and fintech to overcome trade challenges among OIC countries. We live in a world where trade follows finance. So first we need to solve financial issues for the firms, for the SMEs. Then we can expect a high volume of trade among countries or among firms. So finance is quite important. In general, I told you that I would focus on viability or implementability of this project. In general, success of a typical project depends on three main pillars. These are quite important. The first one is whether this project is technically correct. The second one is whether there is a political support behind this project. And third one is whether there are sufficient institutions or capable institutions or backing human capital. So once we fulfill these three pillars, it is a very high chance or probability that this project will be successful. So I want to implement this general project evaluation framework specific to this project. So I want to first focus on political support with regards to this project. Especially for the last 30 to 40 years, the economic and financial center of gravity has been moving to the east. So there is indeed a tectonic change all over the world. And especially the so-called emerging 7 and BRICS countries are gaining more and more importance in the world trade and world economy. Of course, the Muslim world comprise almost a quarter of the world economy. Unfortunately, their share in total economic activity is much lesser compared to their population share in the world economy. When we look at the trade dynamics, the numbers are more interesting. The share in total trade, global trade, for the OIC countries is around 10%. But when we look at intra-OIC trade, within their total trade volume, it is around 20%, which means 80% of the trade in OIC countries occur with non-OIC countries. So we need to, increase this share. This is quite important. But what I said in the beginning of my speech is that in today's world, trade follows finance. So first we need to find ways to surpass, to overcome financial challenges. Also, given these tectonic changes in the world economy and financial system, there are newly emerging payment systems like BRICS Pay, BIS, MBridge, China, ECNY. Also, there is there are new developments in CBDC, stablecoins era. So countries in this new era want to, support their economies by also improving or developing their ongoing payment systems or introducing new types of payment systems. This is the political. So what I want to say is that the global conjecture, the position of the OIC countries, the current challenges, bottlenecks are all supporting, dealing with these types of projects. So I put the first tick. The second one is technical correctness. There are three main structural frictions in intra-OIC trade. One is so-called cost friction. Second one is risk friction. And third one is access friction. Given a lot of time, I don't want to, focus much more on these details. But what I want to say is that the transaction costs are quite high. There are elevated counterparty and settlement risks. There are limited, dispute resolutions. There is almost no embedded guarantee mechanism. Also, there is a very high rejection rate for the SMEs in OIC countries by the banks. These structural problems prevent a high volume of intra-OIC trade among the OIC countries. So,
in 2 minutes, can you summarize?
So I will, just come to the third point, third pillar of evaluation of a project, whether there are institutions and human capital there. This project, so-called integrated digital Islamic trade facilitation framework, encompasses a wide range of institutions, including central banks, digital Islamic banks, tekaful firms, exim banks, and also traders and SMEs. So we are working on how we can establish an ecosystem, speaking the right language among themselves. That is the idea. So, inshallah, we hope to end up with some solid outputs in the end of this project. Thank you very much.
Thank you, Dr. Tarek. As you underlined, the political support behind this kind of projects are very crucial. Institutions like central banks, Islamic digital banks, exim banks or tekaful institutions, and SMEs, trading firms, cooperation are very crucial. So that means from state level, from government level to institutional level. Maybe in second round, I would like to ask you about, do we need a kind of to start like a Benelux model, or for instead of all Islamic countries, can we make some selection for a pilot? So, but in second round, if we can find enough time, I would like to ask that question. And which kind of countries can be candidate about their trade volumes, GDPs, and other, the datas. So thank you very much again, Dr. Tarek. Now I would like to move to Dr. Arıkan, and as you know, we are discussing these issues under the title of Capital in Islamic Economy. And if we are talking about, the capital flows, investments, in the morning session we have seen there were, very good, positive approach about the future of Turkey on not just this, trading, investment or finance, but also energy and all the other, Turkey is a kind of in the center, in between the east and west, north and south. But for all these kind of things, security is the key term, I think. Yes. So we really need to see your, view about this integration of Islamic world within this context. What you can say about this?
First of all, thanks a lot for this organization and this good question. Assalamu alaikum to all audiences here. And actually, I would like to start from the concept, the word. It's really very important. I like generally when we define a business and speak on it. I'd like to define first some key words. You asked security is very important, securitization. MKK is the Central Securities Depository Company of Turkish market, actually. Securitization in the Western world is used for capitalize or to it's a financial asset, securitization. But in IT business sometimes, for example, or in our social life, when we use security, it means something else because we are using in Turkish, for example, menkul kıymet, it's Arabic originally, transferable, menkul nakledilebilir, kaime, kıymet, kaime, the transferable replacement of something. So securitization, but in the Western world with this term, they are calling actually to make it secure, something, a real financial asset, making a real value securely transferable. So we are the center of securitization in Turkish capital markets, but I can simply show the big picture of MKK, what we are doing for all financial markets in Turkey, and also we have lots of connections with other countries in Europe or in Turkic nations, Turkic countries. Simply, this is actually our approach. The big picture of this MKK Merkezi Kayıt Kuruluşu, the central registry company of Turkish market. We are a member of, by the way, Borsa Istanbul Group. Borsa Istanbul has 3 main companies. First is the market operator, Borsa Istanbul, the trading platform, and Takas Bank, which is one of the sponsors of this organization, the central counterparty of the Turkish capital markets, and the third one is Central Securities Depository Company, which is MKK, as I said. And actually, simply, this business comes from originally just from capital market side, and just to keep safekeeping of financial assets. You can see that the first part of this, we are now defining with 4 pillars actually our business, and this is totally our approach actually. Globally, they are just simply using in the first line, in the first pillar, and just 90% of the business is 99% maybe for the global CSDs is just for capital markets. Thanks to our regulators and our visionary authorities, actually, we have really very good financial infrastructure in Turkish capital markets. Thanks to this structure, we are very able to extend it to other markets as well. For example, we are using the same system for agricultural product markets. We have another exchange company in Ankara, and Takas Bank is integrated with there as well, and we are also integrated. We are keeping all the data for agricultural products. You can see e-ürün, Electronic Register Center for Trade Ministry for all warehouses for agricultural products, which is regulated by the Ministry of Trade. And for example, crowdfunding platforms, we are keeping all the data for crowdfunding platforms. We have omnibus links with Clearstream, Euroclear. I can simply say how their business, how much big is, I can simply say it so. Clearstream keeps $50 trillion of assets, and Euroclear keeps $60 trillion of assets for all European and global markets. And for Turkish markets, we are not bad actually. All the assets we are keeping safely is almost more than 700, almost it's very close to 800 billion US dollars, but not for only capital markets, for agriculture products, with all assets. And the second pillar in our business is the data services, which is actually, and honestly, we are very strong in that part, and one of the best examples in the world, because we are reporting, we are very flexible and dynamic to keep all the data, to analyze and to report it. I heard this not only from local people, from even global financial authorities. For example, I can show simply this slide. You can see the date on the top of all this data. Today is the 4th of June, and this is the 3rd, by the end of 3rd of June, you can see all the data about all the markets of Turkish capital markets, agricultural product markets, and all other data regarding with the financial markets that we are keeping in MKK. And in very near future, even crypto assets will be available in this page. We know, but we are not publishing it right now, actually. Maybe that is the only example in the world, so transparently, dynamically, and up-to-date data about the financial markets. If you take the picture, actually I can say that there's no need to take a picture. If you open the website of mkk.com.tr, you can see just on the top of the page. We are very transparently sharing all the data. Number of investors, number of public companies, number of IPOs the current year. We have data platforms. You can click all the details by going over this data, actually. We have another data platform, blah, blah. And I can go fastly over the big picture of what we are doing. The data services like that one, I can emphasize actually the GEFAS platform over here. Actually, GEFAS is also another data platform. We started 3 years ago. We launched it because it was an OIC decision some years ago, just to see real estate-based financial products, just to make it available to other countries, because if you cannot see the data from other countries, you cannot invest on it. GEFAS means in Turkish actually real estate, gayrimenkule dayalı ve gelişen piyasalar bilgi sistemi, gelişen finansal araçlar bilgi sistemi. Real estate based and developing financial instruments information system. And we, at least we are publishing all the links of all members of OIC countries in that platform. They can simply very quickly go to relevant websites of all members of OIC countries, exchange companies or other market data platforms. And the third one is corporate governance services. For example, we have very good example in Turkish capital markets, PDP, Public Disclosure Platform, which names CAP. Actually, it's one of the best examples, best practices in the world. The other one is general meeting system. Even Indonesian capital markets, maybe some members are here from even Indonesia. In Indonesian capital markets, they are using our general meeting system for years. And board meeting system. We have this kind of corporate governance services and investor services. As I told, you can see in.
You have just 2 minutes.
Okay. I'll just not move. By the way, sorry. You can see all the number of total investors and investors with balance. In this page, we have Turkey is the population, the whole population of Turkey is 86 million, and we have registered 39 million people, and we can analyze according to markets, according to demographic data, according to everything, and I will just come to this slide. Actually, it's very important after telling all of this. We have very strong connections with other markets as well. Since CSD companies are the unique companies for their countries, as the Turkish CSD, Central Securities Depository, we are only one in Turkey, and we have partner companies in other countries as well. For example, in Kazakhstan, in Kyrgyzstan, in Azerbaijan, in Bahrain, in Gulf region. Every country has the CSD company for their markets, or it's embedded in clearinghouse or in exchange site. It depends on the country's financial infrastructure, actually. But we have really very strong relations with all of them. We are just in the middle of 4 different regions. There are 5 different regional associations in our business: Asia, Pacific, Eurasia, Europe, Africa and Middle East, and Americas CSD Association. We are member of 4 of them in our region, and we are just in the middle. We are trying to bridging markets, bridging continents, bridging countries and regions, actually. And we are the chair of AECSD, the Eurasian CSD Association, and also from beginning of last year with the general meeting, we started to also lead as the chairman of the World Forum of Central Securities Depositories, and we are trying to connect financial markets in infrastructure part. Actually, generally people knows mostly the B2C part of all financial services. But actually, if you have very strong B2B infrastructure in your financial business, then after that, you can build B2C services on it. CCP, the Takas Bank, CSD, MKK are like this kind of financial infrastructure companies, actually. And we are making our company bigger and extending roles and extending also our connections. Global connectivity is very important, and we have an important proposal to Ministry of Finance and Treasury, and they started to work with the Ministry of Foreign Relations in Turkey. So the project is that actually we want to start with Turkic States Association. If we can build such an organization with other Turkic states and then extend with all OIC members with COMSEC association, it would be really very great business for next years. For example, as I told, Euroclear, Clearstream, they are established 50 years ago. For example, Euroclear established in year 1968, and now they are keeping 60 trillion US dollars of the total world assets in safekeeping. And they are connecting all European markets. If we can succeed to integrate our markets, Islamic countries, if we develop financial instruments, Islamic financial instruments, we can, synergy. If you do together some things, it makes, it may affect much more than its alone effect. So we are trying to organize this kind of integrations between Islamic countries, between our region. It's really very important. Actually, I have some data more, but if I have some more time, I can maybe in the second part.
Yeah, if we have time.
Yeah.
Thank you so much. This is really very crucial. In the Quran, the longest verse is about this issue, registration.
Yeah.
Registration, writing the share, the contract, the loan, everything. So if we can do this in a best way, and if it is secure, then we can go fast, inshallah, for this integration, global connectivity among the Islamic OIC countries, inshallah. Thank you so much for this very good presentation.
Thank you.
And now, Mr. Hamza will give us a general picture about the role of Islamic banks and Islamic financial institutions on this integration, financial and digital, during this digital time, how Islamic world can be integrated and what can be the role of Islamic banks and Islamic financial institutions as how you can see it from your institution.
طيب بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين. So I prepared this presentation regarding the topic. So today I would like to share 3 simple messages, right?
By the way, they say just 10 minutes is for presentation.
Yeah, I'm not talking long.
Okay.
It's very, very short, inshallah. So the first message, because it's around the topic and to the point, inshallah.
Very good.
Yeah. So the first message is trade remains one of the most powerful tools for economic development in the OIC, right? The second is Islamic finance is naturally designed to support trade and the real economy. And the third is digitalization gives us a historic opportunity to overcome barriers that have limited intra-OIC trade for decades. However, technology alone will not solve the problem. Success requires coordination and standards and talent and institutional commitment. So my first message is the challenge is not trade potential, it is trade friction. The OIC is one of the largest economic communities in the world. We share common markets, common values, strong demographic growth, expanding consumer demand, and growing trade opportunities. Yet intra-OIC trade remains only around 1/5 of total OIC trade, as mentioned by all speakers before. Why? Because trade is constrained not by demand, but by friction. And we can see this obvious among our countries. Limited trade finance for SMEs, slow and costly cross-border transactions, and fragmented payment systems, and complex compliance, correspondent banking withdrawal, and uneven regulation. In short, the problem is not the absence of opportunities, it is the cost and complexity of turning opportunities into transactions. So, my second message is Islamic finance is already designed for trade. Unlike models built around debt trading and financial engineering, Islamic finance was built around real economic activity. Trade is not peripheral, it is at its core. Consider the instruments we already have. We have murabaha for facilities, trade financing, to facilitate trade financing. We have salam al-istisna' to support production and supply chain. We have Musharaka to support investment and infrastructure. We have Kafala to provide guarantees and risk mitigation. We have Takaful to protect against commercial and operational risk. We do not need to invent new principles. The foundations already exist. Our challenge is to make them work seamlessly across borders at digital speed. The third message is about digitalization. And digitalization is a great enabler. Historically, Islamic trade finance was documentation intensive and operationally expensive. Today, technology lets us overcome those barriers. First, digital trade finance platforms automate documentation, verification, and workflow, cutting cost and time. Secondly, artificial intelligence enables alternative credit assessment for SMEs using transaction histories, payment behavior, and logistics records. Third, blockchain and smart contracts automate Sharia-compliant guarantees and transactions with transparent audit trails. And fourth, regional payment infrastructure like Buna and Afaq show settlement can be faster and cheaper. The next step is integrating Islamic trade finance directly into them. So what is missing? Despite all these opportunities, technology is not our biggest challenge. Our biggest challenge is fragmentation. Fragmentation of standards, regulation, Sharia interpretation, digital infrastructures, and human capital. Without addressing fragmentation, digital solutions will remain isolated pilots rather than connected regional ecosystems. So allow me to suggest 5 practical actions. The first is create OIC digital trade corridors. Select willing member countries and launch pilot using Islamic finance and digital payments. Let's start small and scale quickly. Second, harmonize Sharia standards. Cross-border finance cannot scale if every jurisdiction needs separate approvals. Coordinate through IOFI, IFSB, and national authorities. Third, strengthen digital takaful, embedding risk protection directly within trade finance platforms. And fourth, expand SME access through alternative digital credit assessment that judges commercial behavior, not collateral alone. And fifth, and perhaps the most important, is the human capital. Invest in human capital. Technology can be purchased, talent cannot. We must build professionals who understand Islamic finance, technology, risk trade finance, and Sharia governance together. I want also to add that we rely heavily on international standards. International standards are not built to consider Sharia requirements. And this is always creating issues in implementation. And everyone is feeling this. So we need to put our hands together to create our own system and our own standards. Either to have dialogue with these international bodies to consider our distinguished characteristic of Sharia in their standards, or we can issue our own. I was suggesting that in having an international chamber of commerce issuing their own standards instead of using the Incoterms that are today imposed upon the world, and to consider our need and our special characteristic of Sharia requirements. What is the role of SIBAFI? So,
one or 2 minutes?
Only the
Please,
last slide.
Yes.
Sorry. As the digital umbrella organization for Islamic financial institutions, SIBAFI stands ready to support this transformation. Also, what you mentioned of projects, we can facilitate also together, inshallah.
Inshallah, inshallah.
Through capacity building, knowledge sharing, cross-border dialogue, industry coordination, standardization, and collaboration with regulators, standard-setting bodies, and market participants. Our role is to help transform isolated national initiatives into a connected OIC-wide ecosystem. And we are OIC arm, by the way, if you don't know. So, lastly, distinguished guests, the future of OIC integration will not be determined merely by how much we trade. It will be determined by how efficiently we finance, protect, and facilitate that trade. The good news is that the foundations already exist. Islamic finance provides the principles, digital technology provides the tools, and the OIC countries provides the market. What remains is coordination, commitment, and execution. If we bring these together, we move beyond incremental progress and build a truly integrated digital Islamic economic ecosystem that serves businesses, supports SMEs, and strengthens prosperity across OIC. Wassalamu alaikum wa rahmatullahi wa barakatuh wa jazakumullah khairan.
Thank you very much, Mr. Hamza. Very good points underlined here. When the Prophet Muhammad sallallahu alaihi wasallam migrated from Mecca to Medina, he first built the masjid for unity of Islamic Ummah. Then he, established a market, a fair market. We discussed this issue. The market is OIC countries. And during digital age, during this time, we need to use these technologies, this digitalization, and we need to, provide the finance. We need to make a new cooperation among the Islamic banks to, make a good collaboration to support this project. So that means from the time of the Muhammad sallallahu alaihi wasallam in Medina, then the Muslims shows to all humanity how the trade can be done in a fair, in a justice. So in between East and West, Silk Road. We need a rest Silk Road, but the rules must be, implemented by the Muslims. Today, the center of the world economy is moving from the West to the East. We have seen in the morning sessions these big challenges. The East, meaning that China and India, they are doing something and they will do, but they are following the same capitalistic principles. Not just Muslims, but all humanity needs some new things. Fair trade, fair economic relations, and justice in the world. Who will show this? The Muslims have responsibilities. This initiative, I hope, can make a good contribution for not just for Muslim countries, but for all humanity. As 1 minute to each of you, I ask my question to Tariq, what you would like to add in 1 minute?
Sure. In 1 or 2 minutes, inshallah. I want to continue with what Brother Hamza said. Standardization and harmonization in finance is quite important. There was a very, very famous paper by Andrew Ross in year 2000. It said, if countries use common currency, the trade will triple. In the following 10 years, many papers tried to refute it, but now it is one of the most non-refutable papers in economics. Payment system, using a payment system more correctly, using a payment system ecosystem stands between a common currency and harmonization. So it's a midway towards doing something common. It is quite important, and inshallah it will for sure increase intra-OIC trade.
Thank you so much. Just not 1 minute, less than 1 minute they said.
Okay.
This is, very big issue,
yes.
But the time pressure
Okay.
is big problem.
So I will just emphasize 3 things. But by the way, can you please share the file again with the data? I just want to say just some things. First of all, data is important. I generally, as an engineer, actually I like numbers, and I use that so many times in many ways. If you cannot scale, you cannot manage. That's why actually data is important. Please, can you share also the slides? I just want to emphasize.
I am afraid
And-
they
no, no,
will
no.
not. You can.
It will just take 30 minutes, baby. The second one is actually, unfortunately, we are too much focused on banking when we mention about Islamic finance. Actual capital markets are actually more related with Islamic finance because, you know, for example, in Turkey we call it participation finance. We are not calling Islamic finance participation finance. Capital market is totally related with participation, but banking is different, you know. And the third one, the third thing that I want to emphasize is the asset-backed financial instruments. Actually, I was mentioning the agricultural product market, and also we have gold. Yes, thank you. We have gold mint certification. We have real estate certification. We should increase the number of this kind of asset-backed financial instruments in our markets, I think. And while ending, I just want to share just some numbers. As I told, if you cannot scale, you cannot manage. You can see in this table the whole number of listed companies in Borsa Istanbul and numbers of participation in the member of participation in these companies. And you can just check.
Thank you so much.
Since we don't have so much time. And this is funds. As you can see, there are lots of things to do. The percentage of funds with participation finance is not so big as we can do. And these numbers are related with the Sukuk, this certification. And I just want to emphasize that, and as I told, if you cannot scale, you cannot manage. We should, our market scalable, manageable, plannable, doable. Thank you so much. Ya manillah ma'assalam.
Thank you, Mr. Arkan. You want to add something?
Yes, please.
Please.
Capitalizing on what the doctor said before about the payment. Payments is very important, and I think this is the right time. The polarized, capitalized world is failing today. This is our opportunity as Islamic countries to come up with our own system. And I think going back to the gold settlement standard is, I think, is the base, and no one can dispute this because everyone is accepting gold, and the treasuries today in the countries are hoarding a lot of gold in their cufflinks. So we can create now a new system away from the dominant currency that is controlling the world today, and we can have our own system and streamline our payments and trade, inshallah, if we succeed on this. Thank you very much.
Thank you very much. It is really a time for implementation, and I hope, you know, inshallah, we cannot be استعوذ بالله, you know, لما تقولون ما لا تفعلون. Inshallah, we will do our best, and thank you very much for your contributions, and thank you for your understanding. Assalamu alaikum.
Thank you to our moderator and our distinguished panelists for that discussion. I would kindly like to ask Mr. Ibrahim Al-Sayed, the Manager of International Relations and Business Development at the Al Barakah Forum for Islamic Economy, to present each and every one of our contributors with a token of appreciation as our photographers capture this moment at the 3rd Global Islamic Economy Summit here in Istanbul. Thank you once again to each and every one of you for your contributions. And our final token of appreciation going to Dr. Tarık Akın. Ladies and gentlemen, let's hear it for our moderator and our panelists. Thank you very much. I would kindly like to ask each and every one of you to go over to our technical team so they can remove your headsets and put them on. My next set of contributors to this event, as we are going to be moving on to the third panel discussion on the second day of the third Global Islamic Economy Summit here in Istanbul. Ladies and gentlemen, the third panel discussion is titled Capital Formation and Intermediation, Banks, Funds, and Islamic Capital Markets. If you've noticed a pattern, all of these sessions are very interconnected to one another. As we resume our program, we now turn our attention to a topic that sits at the very heart of economic growth and development, how capital is formed, how it's mobilized and directed toward productive economic activity. This session, again titled Capital Formation and Intermediation, Banks, Funds, and Islamic Capital Markets, will explore the critical role of Islamic banks, investment funds, and capital markets in channeling resources towards entrepreneurship, infrastructure, business growth, and long-term development. This discussion, it will also examine how institutions can effectively balance liquidity, risk management, sustainability, and real economy impact in an increasingly complex global environment. Now, I just want to look over to our technical team that are setting up our guests for the third panel discussion of our summit today. I want to see if my moderator is ready. Yes, it seems like he is ready. Yes, perfect. Okay, so moderating this session is Mr. Nitish Bojnagarwala, the Associate Managing Director at Moody's Ratings. Please join me here on the stage. Our panelists are Dr. Usman Chaudhry, the Chief Risk Officer. Welcome. And Dr. Mahmut Kayacık, Chief Financial Officer and Chief Operating Officer of the Türkiye Wealth Fund.
Okay. Thank you, everyone. It's been a long morning today already, and thank you so much for staying with us. Assalamu alaikum and good afternoon to everyone. So I think the topic that we have today, and I've been joined with esteemed panelists, is capital formation and intermediation, banks, funds, and Islamic capital markets. I would like to first introduce myself, and then I'll pass it to the panelists to introduce themselves and give their opening. So my name is Nitish Bojnagarwala. I'm based in Dubai, and I've been heading the team that takes care of bank ratings in the Middle East region, but also to Turkey. And I'm also heading global Islamic finance for Moody's. I've been covering Islamic banks or financial institutions for almost 2 decades. And I just wanted to share a few quick messages before I pass it to my esteemed panelists to make their opening statements. So the way we look at Islamic finance is across 4 pillars. The first pillar being Islamic banking. Second is the sukuk market. Third is takaful. And fourth is funds, which is the demand side of sukuk, which is the fund management or asset management side of things. And I'm very happy and pleased to share that over my 2 decades of experience covering the industry, Islamic finance has been growing across these 4 pillars, and it has been consistently growing. When I started covering this industry, Malaysia was the dominant engine, so we had significant growth in the sukuk side. Banking, not so much, but it was growing quite significantly. And over the years, now we have seen GCC, particularly Saudi Arabia on the Sukuk side, pushing quite significantly and quite hard. And now, over the last few years, even Turkey is making very good progress. And the testament to that is what we are doing here, which is the third Baraka Forum. But also, there are a lot of other Islamic finance events that happen, which means clearly there's a lot of investment interest behind this industry where we are as well. So on the banking side, extreme high growth. I think in the morning, His Excellency Minister of Finance shared some numbers in terms of the growth of the industry, but also the banking side, growth has been pretty high. Then moving on to the Sukuk side, which is the second pillar, from a few $1 billion worth of issuance back in 2000, 2005, now the industry is as high as $250 billion annual issuance. And a large part of that is actually in US dollars. The third pillar, which is Takaful, is predominantly growing in the Middle East for now, but we do see growth coming in from other pockets of the global sort of OIC countries as well. And the fourth is on the fund management, where I think Saudi Arabia, Malaysia are leading, but we do expect significant growth coming on this side as well. So what I want to leave you with, and what we'll be exploring within the panel as well, is across these four pillars, 2 decades ago, if the industry was here, today the industry is here. And the way we look at within Moody's as well, this industry, that if today the industry is here, we expect it to be here in long-term growth potential of the industry is pretty high. And the two markets where we see Islamic finance under penetration, which is going to take the industry from here to the next phase, is Turkey and Indonesia, where the penetration of Islamic finance has been low and is expected to grow significantly. And when large countries like Turkey and Indonesia start growing the Islamic finance industry, you will see the scale shifting quite rapidly, which is what we've seen when Saudi Arabia started their transformation journey. The Islamic finance industry grew quite significantly as well. So with that sort of broad preamble, I'd like to introduce our first panelist, Dr. Usman Chaudhry. Why don't you introduce ourselves and give us a little bit of opening that you would like to share with us?
Sure. Thank you, Nitesh. And Assalamu alaikum. Good afternoon, esteemed guests, ladies and gentlemen. And most gracious thank you to the Al Baraka Summit for inviting me to speak here this week. As Nitesh said, I'd like to share some reflections, observations, and pick up some of the themes that we'll be exploring and expanding upon in this panel. So I think it's generally fitting that we're having this conversation here in Istanbul. As we see it across in the UK, Istanbul today is one of the most ambitious centers of activity in global Islamic finance. Turkey's participation banking sector has grown substantially, with institutions like Kuveyt Turk, Turkey Air Finance, and Ziraat building real scale and reach. The Turkish government has made its ambitions clear. Istanbul, as a global Islamic financial center, not merely a regional one. From where I sit, that ambition is well-founded. And it's one that UK Islamic finance institutions have a genuine interest in seeing succeed. I'm speaking today from a perspective of Gatehouse Bank. It's a fast-growing UK Sharia-compliant digital bank. However, we're a relatively small institution by global standards, around 1.4 billion in total assets, 190 people, colleagues, headquartered in London and operating out of 3 other UK cities. But I think our experience is instructive for this panel precisely because we've had to be creative about capital formation and intermediation. When your balance sheet is constrained by capital largely, you learn quickly that the only way to scale is to build bridges to capital markets, to institutional investors, to partner institutions in other markets. And that's what I want to talk about today, and hopefully we can expand on those themes later on. Gatehouse intermediates between retail savers and the real economy, chiefly through home finance. As I said, we are around 1.3 billion of retail financing and deposits. The deposits sit behind a portfolio of diminishing musharaka home purchase plans, where we co-own residential property with our customers and they acquire shares over time. No interest, no riba, real assets, shared ownership. This isn't a compliance structure designed to mimic conventional mortgages. The aim here is to have a genuinely different financial relationship between a bank, its depositors, and the real economy. The profit rates our savers earn reflect the performance of those financing assets. That creates an incentive in alignment that conventional banking structurally struggles to replicate. And it creates fiduciary discipline. We must deploy capital into productive performing assets because our depositors' returns depend on it. In 2024, we implemented something I'd like the audience and my esteemed guests and colleagues here to consider a little bit deeply. A forward flow arrangement. We were one of the first Sharia banks to implement this in 24, and we continue to build scale in this area. With a forward flow arrangement, we originate Sharia-compliant home finance and distributed it off balance sheet to an institutional capital partner. Now with almost $500 million in assets in originated volume flowed to a third party, this is effectively a capital markets execution embedded within a retail banking model. We act as originator, as a servicer. Institutional capital provides the funding. Real UK families get Sharia-compliant home finance. It bridges the banking system and capital markets, and it has allowed us to grow our origination without consuming scarce Tier 1 capital. I mention this not as a self-congratulatory case study, but because I think it represents a scalable model, and one that is replicable in markets like Turkey, across the GCC, and in Southeast Asia, wherever Islamic banks face some capital constraints, which is generally the case with digital banks, startup banks, and fast-growing small banks. So let me now say something that I hope is of direct practical interest to the Turkish institutions in this room. The UK is one of the most active markets globally for Sharia-compliant residential property finance. British buy-to-let residential property has long attracted capital from Muslim-majority markets, GCC investors, Malaysian institutional capital, and increasingly Turkish private wealth and family offices looking for sterling-denominated real assets returned outside of their home market. The demand exists. What has often been missing is an efficient Sharia-compliant channel to access it. Gatehouse Bank has built exactly that channel. Our buy-to-let purchase plans, Sharia-compliant buy-to-let financing for residential investment properties across England and Wales, are available to international residents, including Turkish nationals. We see a significant increase in Turkish applications coming through, certainly in the last 6 to 12 months in particular, which is very, very encouraging. We underwrite internationally. We work with overseas brokers and intermediaries and increasingly international partner banks. And we have a direct-to-consumer online journey for financing applications. The opportunity I want to articulate clearly is this. Turkish participation banks have existing relationships with high net worth, mass affluent customers who have an appetite for UK property investment. We have the product, the regulatory authorization, the Sharia governance, and the operational infrastructure to finance that investment on a compliant basis. A referral or co-distribution partnership between the Turkish Participation Bank and Gatehouse Bank is not a complex proposition. It is a customer flow arrangement that serves both institutions' customers and deepens the bilateral Islamic finance relationship between Turkey and the UK. On the equity investment side of things in UK Islamic banking, I want to make a more ambitious point, and I'll make it directly because this is the right audience to make it to. Gatehouse Bank's ability to grow on-balance sheet portfolio is fundamentally limited, as I said earlier, by the pace at which we can grow our equity capital, chiefly through retained earnings. We do not pay dividends, we reinvest every pound of profit. But our current profitability, improving year on year, organic capital generation alone will not unlock the next phase of scale and expansion of Islamic finance in the UK. This is not a challenge unique to Gatehouse, as I've said before. It's a structural condition of Islamic banking in Western markets. The institutions that will break through this constraint are those that have and attract strategic equity capital. Partners who understand Islamic finance, share long-term value horizons, and see the strategic value of owning a presence in one of the world's most developed Islamic finance markets. The UK is a deeply attractive market for Islamic finance. We have some circa 7 million Muslims, a significant concentration in Europe, a strong regulatory environment. You may have heard of the Prudential Regulatory Authority and the Financial Conduct Authority, both parts of the Bank of England. They are some of the most credible in the world. A property market that has delivered long-run real returns for decades. A government that has issued sovereign sukuk and actively supports Islamic finance development. And a retail Islamic banking market that is, by international standards, still underpenetrated. For a large Turkish participation bank, or indeed any GCC or Southeast Asian institution with capital, relationships, and an ambition to build a Western market presence and equity stake in a regulated UK Islamic bank is a compelling proposition. It is not merely a financial investment, it is a distribution platform, a regulatory license, a brand, and a gateway to, as I said before, one of the world's most sophisticated retail banking markets. Banks here, such as Kuwait Turk, to take one example, has already demonstrated that Turkish participation banking capital can successfully anchor Islamic banking operations in other markets. The model exists. The logic for applying it to the UK is, I would argue, stronger today than it has ever been. I'm not here today, despite what it seems, to pitch a specific transaction, but I'm here to say openly that the conversation about deeper equity partnerships between growing Turkish Islamic finance institutions and the established UK Islamic banks like Gatehouse is a conversation worth having. And Istanbul today is the right place to have it. Happy to expand on those points, but I'll give way to my
Thank you, Dr. Usman. I think you touched upon a lot of things that I'm sure will benefit our audience today. I think underlying is really innovation, and I think you have highlighted how your bank is sort of embarking on this journey of innovation, which I think is what we need in the industry to grow to the next phase and reach the next sort of destination. So we'll come to that, but if I can bring Dr. Mahmoud in. He's the Chief Financial Officer, Chief Operating Officer of Turkey Wealth Fund, to introduce himself and give his opening remarks, and then we'll start sort of discussing together some of these themes. So,
Bismillahirrahmanirrahim. Selamun alaikum wa rahmatullah wa barakatuh. Good afternoon, dear audience, and thank you very much for Al Baraka Forum to arrange the third Global Islamic Economy Summit in Istanbul, and thank you very much for contributor. I have been working as Chief Financial Officer and Chief Operating Officer for more than 5 years at Turkey Wealth Fund. In addition to that, I am also the chairman of Takas Bank, which is also gold sponsor for this summit. Let me briefly introduce Turkey Wealth Fund, then I will share my views on the topic. Turkey Wealth Fund was established approximately 10 years ago, and as of today, it is the 10th biggest sovereign wealth fund on the global side, based on the asset size. And as of today, we are managing more than $360 billion of assets in our portfolio. The good thing is that, as you mentioned, the 4 pillars of Islamic finance, including Islamic banking, takaful, Islamic funds, and sukuk, all these 4 pillars are now directly aligned with the Turkey Wealth Fund. We are the owner of Islamic banking, indirect ownership of Islamic banking, Ziraat Katılım. We are the owner of Ziraat Bank. Ziraat Bank owns Ziraat Katılım. So indirectly we own 100% of Ziraat Katılım. So as Turkey Wealth Fund, we are operating on the Islamic banking side. On the Sukuk side, we not only Turkey Wealth Fund, but also our portfolio companies have started to issue frequently Sukuk, and we are not only Turkey Wealth Fund, but also our portfolio companies have become to be an important player in the Sukuk market. And on the Tekaful side, Islamic insurance side, as Turkey Wealth Fund, we are the owner of Türkiye Katılım Sigorta and Türkiye Katılım Hayat, which are also Tekaful insurance business. These two companies are active and working in the country. And on the fund side, as Turkey Wealth Fund, I will mention later, we are also have some funds, sub-funds under our portfolio, and we are trying to increase the share of not only the capital markets, but also the Islamic products within the country. From the Islamic banking perspective, Islamic banking today is not just an alternative to the conventional banking. It's a strategic financial intermediation model. It allocates all the capital in line with the Sharia principles through asset-based structures and with a direct link to the real economy. At the heart of this model, there are interest-free finance, risk-sharing, profit and loss participation, and the connection between financing and productive economic activity. In this respect, participation banks are not only institutions that collect and provide funds, but they mobilize savings and channel capital into the real sector. They also support the creation of the long-term economic value through instruments such as murabaha, musharaka, mudaraba, so on, and can directly linked to the trade, manufacturing, and investment projects. From the perspective of Turkey Wealth Fund, participation finance has a strategic importance. It supports the deepening of financial markets and diversification of capital market instruments. And it also helps direct resources toward productive areas of economy. And as TWF, we contribute to this ecosystem through our indirect shareholding, as I already mentioned, in Ziraat Katılım on the participation banking side. And we also contribute through our Tekaful business, Türkiye Katılım Sigorta, which was established in 2022 and as our wholly owned subsidiary on the Islamic insurance side. One of the most critical functions of participation finance is to create a direct and legitimate link between financial resources and the real economic activity. In this way, financing is not only a tool for balance sheet growth, it becomes a tool that supports manufacturing, employment, sustainable development, and efficient capital allocation. At this point, a key issue for participation banking is to manage liquidity, risk, and return in an effective way, while remain fully aligned with the Sharia principles. Profit-sharing investment accounts are also a distinctive feature of participation bank. In this structure, fund providers are not depositors in the conventional sense. They are also capital providers who participate in the performance of underlying investment. From a capital allocation perspective, participation banks should build a sound balance in their portfolios. This balance should be between short-term income-generating transactions and long-term real economy investments. Trade finance, leasing, working capital finance supports banks' liquidity and profitability. On the other hand, financing for infrastructure, industry, energy, technology, and SMEs creates a broader economic multiplier effect. Therefore, the success of participation finance should not be measured only by asset size, profitability, or market share. Its contribution to the SME financing, employment creation, financial inclusion, regional development, strategic sectors, and capital market deepening should also be seen as key performance indicator. On the Islamic capital markets and sukuk side, Islamic capital markets and especially sukuk are no longer a niche and new financing instruments. They have become strategic tools for mobilizing long-term capital. They also support infrastructure finance and strengthen the link between capital markets and the real economy. Sukuk are based on real assets and identifiable economic activities. They also rely on Sharia-compliant contractual structures. This makes them a strong instrument for the development finance. From Turkey's perspective, the sukuk market now has a strong and concrete track record. The Treasury's first international sukuk issuance in 2012 was an important starting point. Later issuance helped build benchmark pricing, expand the investor base, and strengthen the market confidence. The Treasury's international sukuk issuance of $2.5 billion in 2024 and in 2025 further increased its visibility in this market. These transactions show that Turkey has become an active and credible issuer in the global sukuk market. From the Turkey Wealth Fund perspective, sukuk is also an important capital market tool for financing our strategic projects. We firstly have started to issue sukuk on the domestic side, and we use that domestic sukuk to refinance our Istanbul Finance Center projects. We are also a partner and a contributor to this project, and around 45 or directly 45% of the project, indirectly more than 90% of the project belongs to Turkey Wealth Fund, Istanbul Finance project. So in 2022, we issued 1.5 billion Turkish lira domestic sukuk to support the Istanbul Finance Center CAPEX project. Within this framework, TWF also completed Turkey's first green list certificate issuance, and the proceeds were used to finance LEED certified buildings within the Istanbul Financial Center. This transaction showed that sukuk can also support sustainable infrastructure investment. In 2024 was a fantastic year for Turkey Wealth Fund. We issued $1 billion sukuk for again to refinance Istanbul Financial Center project. This was an important milestone for the market. TWF became the first institution from Turkey after Treasury and participation banks to issue an international and global sukuk. Therefore, this transaction was not only a funding success, it was also a tool to develop the markets for Turkey. These issues demonstrate that credible quasi-sovereign issuers can access to the international sukuk market, and it also helped broaden the role of sukuk in Turkey's capital markets. Today, most infrastructure sukuk are structured on asset-backed or asset-based model, and in this model, investors do not have direct recourse to the underlying asset. Instead, they mainly rely on the credit profile of the issuer. This structure gives issuers flexibility, and it also allows them to diversify their investor base and access a wider pool of capital. However, asset-backed structures can develop further over time, and these structures create a more direct link between investors' underlying assets and cash flows. This can strengthen alignment between finance and real economic activity, and it can also support to finance the strategic infrastructure investment needs, including transport networks, railroads, energy facilities, ports, airports, and financial centers. Green and sustainability-linked sukuk are among the key growth areas for Islamic finance, and there is a natural alignment between Islamic finance and sustainable finance. Both approaches, Islamic finance and sustainable finance approach, are built on responsibility, long-term value creation, real economic contribution, and positive impact. For this reason, green sukuk can be a strong tool for financing renewable energy, clean transportation, energy-efficient buildings, and climate-focused investment. In conclusion, sukuk have already shown their ability to support economic growth, infrastructure development, and sustainable investment. the next opportunity will be to expand their scale and deepen their impact. Let's talk about the investment funds and the private equity venture capital side. I would like to refer to that Turkey Technology Fund, TTF, which was established under Turkey Wealth Fund. This example shows how venture capital, private equity, and impact investment can support long-term capital allocation. It also shows that how they can contribute to the real economy and technology-driven development in line with the Islamic finance principles. TTF, Turkey Technology Fund's main objective is to support Turkey's technology, innovation, and entrepreneurship ecosystem through long-term capital. The fund supports domestic venture capital funds that invest in the innovative Turkish startups, and it also supports domestic private equity funds with investment potential in Turkey, as well as international venture capital funds. To date, the fund has committed more than $150 million over 15 investment funds, which is Funds of Funds program, and through these commitments, it has contributed to the deepening of Turkey's technology and entrepreneurship ecosystem. More than $40 million of these commitments have already been realized, and we are working to explore and to tap more and more funds on this area. We believe that this approach is naturally aligned with the Islamic finance principle. Venture capital and private equity investments are based on ownership, partnership, equity participation, risk sharing, and direct engagement with real economy. Unlike conventional debt-based models, returns in these structures do not come from a predetermined interest payments. They come from the growth, value creation, and operational success of the companies invested in. In this respect, venture capital and private equity structures are closely aligned with the Islamic finance principles, such as musharaka and mudaraba. Therefore, private equity should not only as a complementary area for Islamic finance, it should be a strategic investment model with a strong link to the real economy. The global scale of private markets also shows this potential very clearly. Assets under management in the private markets increased almost 20-fold between 20 and 23, and today they stand around $24 trillion. This shows that the importance of private markets in long-term capital allocation. As Turkey Technology Fund, we serve as a bridge between institutional capital and the entrepreneurship ecosystem. We work with both domestic and international fund managers. In this way, we support the flow of capital for the innovative companies in the country. Exit mechanism also critical for healthy private equity ecosystem. Successful exits may take place through IPOs and strategic acquisitions or secondary transactions. These exits allow capital to be reallocated to the next generation of entrepreneurs and innovative companies. The future of Islamic finance should not be limited to creating Sharia-compliant versions of existing financial products. The real opportunity lies elsewhere. It lies in strengthening investment models that naturally reflect partnership, risk sharing, participation in the real economy, and long-term value creation. Venture capital, private equity, and impact investments offer strong examples in this regard. As Turkey Wealth Fund and Turkey Technology Fund, we attach great importance to this strategic allocation of long-term capital, and we also aim to contribute to strengthening of Turkey's technology ecosystem.
Thank you, Dr. Mahmood. This was very, very comprehensive, and I think you've clearly laid out across the three pillars, bank, funds, and capital markets, the role Turkey is playing. And I think from 2 decades ago, when things were pretty nascent here, it is growing rapidly, and I think you've clearly mentioned all of that. I think we've covered a lot of ground, so I'm just going to keep very brief, few follow-ups, and then we'll turn to closing. First, if I can come to you, Dr. Usman, and I think Dr. Mahmood also touched upon the profit-sharing investment accounts. I think this is a very common sort of theme. You go to any Islamic finance event, there's an ongoing debate around how it should be versus how it is. Just from your experience, what is this, let's say, a core theme in terms of how you look at things, and how do you, operating in a, as you said, it's not a Muslim majority country, yet a sizable Muslim population, how do you navigate the challenges around this?
Sure. Let me cover this in two parts. I think I will touch on the complexity of operating in a non-Muslim majority country second. Just on the first point regarding the profit sharing piece. So I would say chiefly the financing activity of Gatehouse Bank, as with many banks in the UK, but particularly Islamic banks in the UK, are funded through deposits, retail deposits. And you can think of them as effectively profit-sharing investment accounts in economic substance. So not quite identical, but in economic substance. So from a depositor's perspective, they earn a profit rate. In a conventional deposit in the UK, they'd get an interest rate. Obviously, there is complexity, there's different, because there is a wakala instrument, and we are appointed the wakil. But that essentially is driving the financing side of the business. So there is, as I said earlier in my opening statement, there is a very clear fiduciary responsibility to make sure the money is invested in real asset-backed financing. It performs well, and so that we can make a profit payment to the customers. Obviously, there is a challenge in terms of displaced commercial risk, where if the financing assets don't perform as expected, then it creates a bit of tension and the need to some extent smooth the profit finance, the profit rate piece for the deposits. That's never really been the case, but it is a tail risk that we need to accept when operating in a conventional market, when customers say, well, in a conventional market, I'm guaranteed this interest rate.
Yeah.
What about you, Gatehouse Bank? And so we have to give some comfort, some soothing words to say, you know, there is a profit share, we share the risk, the ups and downs, but nevertheless, this is a tail risk, and it typically hasn't
materialized. Yes.
Right, absolutely. Having said that, so the Gatehouse Bank retail banking strategy, the whole startup piece started in 2018. In the early, probably 24 months, largely the formative years, we've been building brand presence, and this is difficult when there are only a few Sharia-compliant organizations in the UK. There are subsidiaries of GCC banks, but generally quite modest in size. And so it takes a bit of time to build the presence and the comfort and the confidence the general market has. We now have some 30,000 plus deposit takers. The vast majority of them are not Muslim. Okay, so we talked earlier, I think there was a previous panel talked about global connectivity.
Yep.
So what I see is the true reach and innovation is not necessarily growing a presence in, excuse me, Islamic majority countries. I see the real opportunity and the challenge is to grow in non-Muslim majority countries. How do we export what we know, what we believe, values, principles? How do we export them and show that it's a meaningful alternative to conventional financing? In that regard, so the majority of our retail deposit customers are non-Muslim customers. They like the product. They like the ESG point, Dr. Mahmood, you mentioned. So when you look in the UK, you look at the deposit taking activity, you compare it across the major banks, Gatehouse Bank is there as a very compelling proposition. They can go to another bank, they can go to Barclays, they can go to HSBC, you know, and it's not just the rate. They believe in the ethical aspect of the deposits that they put with us. So this is really encouraging. There's a lot more we can do in this space. So I think the values that we underpin Islamic finance can transmit across borders quite easily.
Absolutely.
Let me add something.
Yep.
I think the second or the first Islamic summit, His Excellency Dr. Yusuf Al-Hallawi, in his speech, mentioned and insisted that Islamic finance or Islamic economy is not for Muslims, it's for humanity.
Yeah.
So why now the depositors are non-Muslim? As Dr. Yusuf said, Islamic finance and Islamic economy is for humanity.
Absolutely.
Absolutely. I think, and I want to expand on something you mentioned, that the tail risk of losses being passed. We have example where an Islamic bank in Bahrain suffered losses after the global financial crisis, and it was consistently suffering losses for a couple of years. And what we noticed is that the bank did not pass losses. So the shareholders absorbed those losses, although contractually those were profit-sharing investment accounts, which means the depositors are expected to also contribute capital, but that didn't happen. So while the contractual arrangement is there, the equity holders of the banks could step in and take an extra piece of the loss, which is what we noticed on that side. I want to also touch now on the capital market side, and Dr. Mahmood, I want to bring you in. As the wealth fund, you clearly highlighted multiple transactions that you've done in the Sukuk market. We know the sovereign is pretty active. We've seen from, again, His Excellency, Minister of Finance presentation, how participation banks, financial institutions are getting active in the Sukuk space. So how do you, when you went to the market with your offering, what was the response of the market? How did the market respond? What was the feedback? And anything you'd like to share on that aspect when there would be someone in the room in terms of institutions who would be looking to tap the market. So what are the lessons you would like to share from those?
Thank you very much for the questions. I have to highlight our Sukuk issuance experience. That was a fantastic experience. The oversubscription is 14 times.
Wow.
That is first and ever oversubscription rate for a Sukuk issuance. Our inaugural international Sukuk issuance was in October 2024, and it was a milestone not only for TWF, but also for Turkey capital markets. And it is also the first international corporate Sukuk issuance from Turkey following the sovereign, the treasury, and the participation banks. And in that respect, it opened a new channel for the Turkish corporates. After our Sukuk issuance, firstly Vakıf Katılım, which is also a participation bank, they issued a Sukuk. After that, Türk Telekom, which is also our portfolio companies, they to finance 5G and the other infrastructure investment, they also tapped Sukuk Markets, international Sukuk Markets, and they issued 5 years Sukuk with 650 million US dollars of size. And recently, one of our other portfolio companies, Turkish Petroleum, which is national oil and gas company of the country, they also started a new Sukuk program. Total amount will be 4 billion US dollars. And in February 2026, they completed the first phase, and they are the first and the only state-owned enterprises who issued a Sukuk on the international side. And they, the total amount was 1 billion US dollars. And in last 2 weeks or 3 weeks ago, the huge investment demand led them to increase these issues, and they tapped another 500 million US dollars of Sukuk for the same program, and total issuance now 1.5 billion US dollars. That is also a fantastic development for Turkey and for global Sukuk markets. And recently, one of quasi like a sovereign real estate investment trust, Emlak Real Estate Investment Trust, which belongs to also indirectly to the government, they also issued a new international Sukuk, and the total size is around 600 million US dollars, which was also very successful. So it is like a, Sadaka-i Cariye for us, for Turkey Wealth Fund. We opened the way, and not only our portfolio companies, but also the other companies have started to use that way and to use that market. Because normally it is, it's a glass ceiling. When the corporates have started to think sukuk or Eurobond, and many advisors and consultancy firms say that sukuk, which brings a lot of paperwork, you have to work more on that, blah, blah, blah. There are some, given figures.
Yes.
But in real life, we are also a frequent Eurobond issuer as TWF and also sukuk issuers that are indifferent. So within the same time frame and within the familiar, agreement and contractuals, you can also tap the international global sukuk market. So based on our experience, and if you look and if you take into account the liquidity, especially in the Middle East side, and bringing new products on the market, the sukuk market is more favorable for the issuers, and we strongly recommend not only our portfolio companies but also the other corporates to use that markets.
Absolutely, and I would like to add a little bit on that is, as new issuers come to the market, it opens new investors familiarity to the sukuk market as well. Interestingly, during my term covering this industry, I have seen countries, sovereigns like Luxembourg, Hong Kong issuing sukuk. And when you have these highly rated sovereigns who has not so much in terms of understanding of Islamic finance, but who want to issue and make a base there, a hub in terms of, and UK as well. It does bring investors who were previously not familiar with the industry coming to us and asking questions. This is a conventional bond of, let's say, UK government or a Luxembourg government, and this is a sukuk. How do the risks differ? So whenever new issuers come to the market, it not only brings diversification to the issuer itself, the names that you mentioned in Turkey, but it also brings diversification in the industry, because there are more people who are looking into the industry from outside who were earlier uncomfortable, as Mehmet Bey said, that there are tons of documents. There's a fair amount of complexity that comes with the sukuk issuance. And we, as an intermediary in between, are making investors comfortable with that. So we have seen a lot of new issuers come to the market as well, and that has really helped the industry in widening and in deepening at the same time.
Could I just add something to that? I mean, just in terms of the level of acceptance, if we look at the Bank of England, right, one of the oldest establishments around, even they're comfortable with the sukuk side of things from a liquidity, high quality liquidity assets. When they come to supervisors, they come to do their reviews, they'll say, where are you placing your HQLAs? We say sukuks, we have some high rate of sovereigns, we have some various corporates. They're okay, they understand, they have a Sharia team, they have Sharia expertise. This is great, very positive about that. They also have the ALF, the Alternative Liquidity Facility. I think the only one in Western Europe, or even the West, from a central bank to facilitate liquidity management for Sharia compliant banks. So I think there's significant acceptance in the West.
And let me give also a figure on our sukuk issues. 1/4 of our sukuk investors who bought our sukuk was a conventional long-only investors.
Yep.
They are also investing our Eurobonds and conventional long-only asset managers. They also invested our sukuk.
And some of them would be investing for the first time.
Yeah, exactly.
Maybe one, maybe two, but issuances and new issuers bring new investors into the pool as well. So over the 2 decades, as again, I keep repeating that because I'm very pleased and very happy to see, while the industry is still at a very infancy, but it is widening and deepening at the same time, and despite the challenges. And issuances like, or issuers or countries like Turkey is really taking an increasing share in the industry, but we're still scratching the surface. There is so much that can be done, and I think since morning we've heard a lot about that. I'm just conscious that we may be running short on time, and I want to give you both the floor to share your closing remarks. What do you want to end with in terms of the 3 pillars that we want to talk about: banks, funds, and Islamic capital markets, I think you shared a very comprehensive view. Maybe we'll start with you. Where do you see the industry growing? I mean, you shared quite eloquently where we are today and where we've come from. What do you see ahead in terms of, in your closing remarks?
Since we are one of building within Istanbul Finance Center, as Turkey Wealth Fund, we are also the investor and the owner of Istanbul Finance Center. Probably from now on, we have to work to make Istanbul Finance Center one of the hub for Islamic finance. So we have enough capacity, we have enough talent, we have lots of firms, not only on the participation banks, but also on the tekaful side, on the fund side. As Turkey Wealth Fund, we have some ambitious goals to increase the share of the Islamic finance in total financial ecosystem, and to make Istanbul Finance Center also have a hub for Islamic finance.
So you are really keen on pushing the boundaries and growing the industry in the country?
Yes, exactly.
Okay. Dr. Usman?
I'll build on what Dr. Umar said. If this is the hub, then a bit like a child's bike, let's have a spoke. Right? The hub and the spoke. And if, let's say, London could be a spoke that benefits from a deep Islamic market that's leading the way, that would be a fantastic way to mobilize capital. So really the mobilization of institutional capital is a key thing for us. I mean, it really is the coal that fires the engine in the UK. Why? Because we need institutions, sovereigns, to really go beyond their comfort zone. If Islamic finance is genuinely for everybody, and that's what we're trying to do, then let's see how we can build the international connectivity. Gatehouse Bank, we have a major shareholder, the Kuwaiti Sovereign Wealth Fund. Fantastic, very supportive, generally passive. So, and they are maxed out in their equity holding. With the Qataris involved in the previous startup I was involved in, which is fantastic. But we really need to expand beyond the sovereign wealth funds. We need to try and get into the family offices. There's a lot of liquidity there. Let's try and tap into that. UK pension funds are really interested in the Sharia space. There's more we can do. So I think the case is, the ground is very fertile. We just need to build connectivity and build momentum. And if Istanbul is the engine, then that's fantastic.
Exactly.
And I want to build on what you said in terms of there's the hub and there's spoke, and there are peripheries. And I'm very, again, pleased to share that from our global landscape, we are covering the industry more globally. What we have seen is diversification from 2 decades ago, where Malaysia used to be a large chunk of the market. Now it's Malaysia and or Southeast Asia and Middle East for sure, including Turkey. They're all pushing in the right direction in terms of growing the industry. But interestingly, a couple of regions which don't generally come up, and we are seeing a lot of opportunities for Islamic finance to grow, is one is the Central Asia. A lot of growth potential there. Kazakhstan, Uzbekistan, they are still very, very small in terms of the Islamic finance industry, but there is strong growth potential there. And I think, again, while the capital and liquidity centers around Middle East, but Islamic Development Bank and a few other such institutions are really building on those periphery market as well. And the other market, which was growing quite rapidly pre-COVID, was Africa. And we wrote extensively about Islamic finance growth potential in Africa. Since COVID, I think things have stalled there. But again, there are substantially large markets which showed some green shoots of growth potential. And then we all had to go into our bunkers in 2020, where hopefully that will again be unleashed at some point. So from a global landscape, because we were talking about OIC countries, we do see things are not fairly limited to the 9-10 countries. The base or the volume is there, or the size is limited still to 9 or 10 countries, but we see green shoots of growth potential coming across various other markets as well. With that, I would like you to thank my panelists and give a big hand. So thank you so much. And we'll look forward to catching up on more such talks later. Thank you.
Inshallah. Thank you.
Thank you to our moderator and our distinguished panelists, Dr. Usman Chaudhry, the Chief Risk Officer at Gatehouse Bank, and Dr. Mahmoud Kayacik, the Chief Financial Officer and Chief Operating Officer at Turkey Wealth Fund. My colleague Ibrahim Sayed is going to present a token of appreciation for all of your contributions to our summit today. In the meantime, ladies and gentlemen, I really appreciate the attention that you've been giving to all of our panel discussions so far, but I do notice that everyone is somewhat scattered in the seats in the conference hall. So if I would kindly ask for a favor from all of you to make your way down and just to fill the front area of the conference hall, that would be highly, highly appreciated. If I can ask everyone that's sitting in the back rows to come and fill in the front seats of the conference room, I would really, really appreciate that. If I can have beautiful ladies here come and fill in the front seats. Thank you. Thank you very much. Thank you. Thank you. All right, so I see everyone kind of getting up out of their seats, hopefully coming down to fill in the front area of the conference hall. I'd really appreciate it if I can have the group in the back there also make their way to the front of the hall. That'd be highly appreciated. Esteemed guests, throughout today's discussions, we've explored capital from practical, institutional, and strategic perspectives. Our next session invites us to take a step back and to examine the deeper theoretical foundations that underpin these ideas within the Islamic economic tradition. It is now my pleasure to introduce an insightful address titled Capital in Islamic Economic Theory, Value Creation, Exchange, and Development. Delivering this address is Professor Mehmet Asutay, Professor of Middle Eastern and Islamic Political Economy and Finance, and Director of the Durham Center for Islamic Economics and Finance. Professor, ready when you are? Okay, so my technical team is currently miking up Professor. He is going to be ready in about 30 seconds time. But again, to reiterate the comments that I just made, it is an address that is titled Capital in Islamic Economic Theory, Value Creation, Exchange, and Development. All right. So it seems like Professor Asutay is ready to go. The floor is yours, Professor.
I need a remote control here. Remote control, guys.
Shane.
Okay. Assalamu alaikum wa rahmatullahi wa barakatuh. I know everyone is very tired. Is this working? Yep, I know everyone is tired, and I'm really sorry the sessions have taken longer. I'll try to be on time, inshallah, because I have another meeting, side meeting to attend. But the topic, of course, is a terribly difficult one, and it's just a topic that will put you into sleep. But I'll try my best not to get you sleeping. Hopefully, if I can get the remote control to get this slides on. Do we have a slide? Guys? Oh, thank you. Okay. So the capital in Islamic economic theory. That's a very difficult topic. I was just talking to my colleague, Mahmoud Mohidin. I told him that I have only 15 minutes. Then he told me that you have small capital to talk about that. So mine will be small capital, luckily. So it's a difficult topic, of course. It is difficult. because we haven't tackled the topic, unfortunately. Yes, we are running Islamic banking and finance, but we haven't defined what capital is. And therefore, my objective here, although it is 15 minutes, the good thing is that it's an inspiring talk. So I'll be doing the inspiring. But as part of that inspiration, and this is Salih Kamil legacy program, in order to understand capital and Islamic banking, I would really appeal to you to read his 1997, he got the Islamic Development Bank Prize for his contribution in Islamic banking and finance. And he delivered his lecture after receiving the award. It's called Development of Islamic Banking Activity, Problems and Prospects. And one of the problems he identifies, and unfortunately no one reads, okay, is the whole issue of objective of capital. Okay? It's easily downloadable, it's a short piece, and you have to read. And this is important for us because, as I mentioned, we talk about moving capital, but we haven't discussed what the capital is, okay? Because we consider that capital is neutral. No, capital is not neutral. And that's the issue that we have to look into. We have to look into capital not as a neutral, morally neutral reality, but on the contrary, it is judged by how it is acquired, the halal part, but also how it is used. Again, what consequences, not only halal use, but also what consequences that we use with capital, and how shared part, it has to be shared, the Islamic notion, and of course, how it is governed, the Islamic governance that I call. And therefore, looking into all those. I really worked hard here, but 15 minutes, so I'm not going to tackle this part, the equation, have to explain, but I'll miss that. So what the three lenses that informs us what is capital is in an Islamic economy is very much the moral part, the moral question, because capital is not neutral, moral neutral. And that is, what ought capital to do? We have to define that. And those definitions, the normative purpose, will tell us the whole purpose of capital. And political economy tells us who controls capital and who bears the risk. And this is important qualification, again, to understand the institutional and political ordering. Islamic applied approach will tell us that how is capital implemented and measured? Where are we putting this capital? What consequences we are producing, and therefore the implementation and accountability is important for us. Of course, when we look at, therefore, Islamic moral economy part, okay, unfortunately time is limited, I'm not going to be able to go, but we were talking about complementarity with Tansiri Azman Mukhtar, the Tawheed, okay? And therefore the meaning of capital becomes actual with the Tawheed, because Tawheed in everydayness suggests that complementarity for unitarity. Okay, capital cannot be, by definition, deterministic, therefore. It becomes meaningful only when it complements with other stakeholders, land, labor, whatever the other factors of production. And with that, of course, the whole objective is nourishment, development. Allah created everything with a path to reach their perfection, and therefore that opportunity space for reaching perfection is an important objective function for capital. How we can use capital to ensure that all the stakeholders will be able to have a path towards their perfection. And that's the responsibility, trusteeship that we have, stewardship, how capital can be an instrument to achieve such objectives, okay? And the maqasid, the protection, the enhancement, all these categories of life, intellect, dignity, wealth, family, ecology, and etc., how capital can be. So it is the relational part, the moral part of capital. And of course the consequence, the justice part, the cost and the cost part, okay? In other words, justice as the ordering of the principles of right, duties, institutions, and the access to resources. Okay, that access to resources is the essential part of the role of capital. In other words, not accumulative capital, but capital that provides access to resources. Why? Because purification. Capital has to be purified. And that can only be happen with the moral grounding, okay? That Tazkiyah process, individual level, but all the stakeholders has to go through that process, which implies the growth in harmony. You cannot grow, your capital cannot grow at the expense of the other stakeholders. And therefore, the governance, the falah part, okay? Falah and the ihsan, individual level, the ihsani, the falah part, the salvation in this world and in the hereafter, and hence a governance system based on ihsan to ensure every stakeholders can reach to their perfection. And therefore, with all this together, okay, each one of them serving a particular objective and the functionality of capital as a result. And therefore, in order to understand the capital theory of Islam, we have to, rather than using the term Islamic economics, which essentializes economics, optimization, and efficiency, we have to locate the Islamic theory of what economy is. In other words, the iqtisad. Okay? Iqtisad translates into economics, but it's not. It's not. It is much more than. It is the organizing the grammar of Islamic economic theory. It orders capital and the risk through moderation. Iqtisad relates to moderation. Okay, moderation is not the maximization or optimization. So proportionality, therefore. Capital has to be proportionally, in other words, has to accept the existence of other stakeholders and their interests through the Tazkiyah, the growth in harmony, and therefore justice-oriented. Hence, Tawheed, the complementarity or unitarity, it's the source of provisioning in order. And then the iqtisad, the balance ordering of the economy, and of course, the maqasid, the objective of flourishing as a result of that individual falah in the society's ihsani governance. So what iqtisad displays? It displays, and therefore the special definition of capital in Islam, it redefines the institutional logic, okay? It will tell us that no, is not homo economicus. It's not limitless accumulation, because capital is defined as accumulation. It is not financialized. No, financialization cannot be acceptable, okay? And it is not atomized market rationality. So therefore, as a result, you have a different definition of capital which we are coming. So what iqtisad installs in its place? The purpose. Iqtisad relates to purpose. The proportionality. Capital cannot grab everything, cannot plunder everything that creates. Risk circulation. Therefore, capital has to circulate, the Islamic capital, if we use the term Islamic. Stakeholder responsibilities, the complementarity, okay? All the stakeholders complement each other. Access to enabling resources created by Allah subhanahu wa ta'ala for everyone to have access. And hence, how we can create the provision, the facilitation process for accessibility to resources, including capital. And why it matters? Because Islamic economy, it turns Islamic economy into a provisioning paradigm. Capital is only meaningful when it works in provisioning paradigm, rather than a sector labor that we call capital. Therefore, the related issues, iqtisad becomes meaningful, the moderation, because cost, purpose. So the iqtisad, therefore, relates to purpose, rather than maximization and optimization. Economic question, therefore, are provisions moving toward morally intended ends. So the end matters, what consequence that we produce. Okay? The cost, it tells us equity. And therefore, yesterday, my reference, rather than the efficiency frontier, our capital has to work because of the complementarity in Tawheed within equity frontier rather than efficiency frontier. Okay? So equity, do you measure distributive and procedural? Therefore, the economic question, are people receiving fair access to risk, okay, rights and shares? And therefore, the iqtisad, the economic order that integrates purpose with proportion, and converts values into institutional rules. You see, entirely different framework within which capital, the so-called Islamic capital, can operate. So it is not only a technocratic provisioning the capital within cost and cost. It is cost without cost can become a redistribution without development direction, the capital objective, therefore. So when we look at mainstream, this capital is produced as an input or financial resource used to generate output, income, and growth, okay? Physical, financial, human, social, and natural capital. Political economy lens, it tells us that it's a social relation, the relationship who owns what, how, and how long relationship. It raises question of power, class, bargaining, and etc., accumulation. Islamic reframing, so capital, okay? Capital is wealth entrusted for lawful, productive, and risk-bearing use, okay? The difference. Its legitimacy depends on acquisition, the halalness, contract, the Islamic contracts, which identifies the stakeholders. What's the purpose, the iqtisad, or the cost, distribution cost, and the social consequences. And therefore, it's a productive capital, okay? Islamic capital theory does not reject capital, but defines what the capital should be. Productive capital. It's a moral political discipline, how wealth becomes capital and how capital is governed. Therefore, when we look at the vocabulary, we are moving from wealth, okay, moving from wealth to capital. And the Islamic definition, or the in the tradition, mal, it's the wealth, property with recognized value, the object of protection, exchange, and development, okay? Kasb, amal, work, effort, and enterprise as legitimate sources of entitlement and value creation. Amana, stewardship, the responsibility now. Within mal, you have the objective kasb, and the amana, the stewardship and accountability to ensure ownership is real, but bounded by trust and responsibility, and the importance of tijara, the exchange that we are referring. And therefore, rather than hifz al-mal, we are talking about reinvigorating, developing, nourishing, ensuring accessibility, ownership, protection, acquisition, and etc. So therefore, when we look at wealth, how wealth becomes legitimate capital, for us, the lawful sources and sectors, which all of you know, the negative criteria, negative screening, real economy anchoring. Capital is linked to assets, work, trade, usufruct, or productive activity. Risk and return alignment, which is missing, unfortunately, in Islamic finance. Entitlement to return is tied to liability, ownership, partnership, sale. Contractual justice, again, you're all familiar, circulation, and welfare. Now, that's the important part. That makes the huge distinction what the Islamic capital is. Capital should not be hoarded or concentrated. It must support social benefit. And therefore, the concern, in the book I referred, Saleh Kemal raises question. He created an Islamic bank, but he was asking the question of the institutional logic of banking, whether banking is the right institution to ensure circulation and welfare. And he was concerned with that particularly, okay? And therefore, capital is legitimate when it transforms wealth into accountable, productive capability. And it is not when it converts money into guaranteed claims, which happens, unfortunately, around us. So from mal to capital and constitution, value creation, production, and distribution, therefore. Mal, cost, value creation, and the importance of circulation. Mal is the wealth and property. Cost is earning and enterprise. Value is benefit and justice. Circulation, anti-cause logic, accumulative, anti-accumulative. And therefore, capital, the definition now, capital is mal that has been lawfully acquired, owned as amana, and mobilized through productive, risk-bearing, and socially accountable activity to create permissible value and circulate benefit, the distributive part of capital. And these are important consequences. Time is an issue. Therefore, capital is a moral, legal, economic status, okay? Not merely an accounting category. So therefore, within this paradigm, mal then is the wealth, property, or the benefit recognized as valuable. Gasp, lawful acquisition, and capital, therefore, is a constituted wealth. Okay, constituted wealth. In other words, as a result of economic activity. It's not the deterministic, it is the surplus. But unfortunately, in the modern economy, it determines, it defines. No, it is just an instrument to achieve an objective. Mal activated through cusp, productive deployment, risk and liability, and social circulation. Hence, no hoarding. As a result of that, mal as amana is the material and financial, is a social capital, it requires institutional justice, it refers to the complementarity, ecological concerns, and human capability. So the total, the mal as amana, refers to all this together. Okay? So within political economy, therefore, we need to look at ownership and access, whether capital that we define provides ownership and access, governance rules, risk and surplus claim, distribution order. Okay, as I mentioned, my time is limited and small capital. Therefore, our capital, the capital in Islamic economic theory, has to work on broadening access, sharing risk, and disciplining power. It is not, what is not, is reproducing rent, exclusion, and concentration between Islamic legal reform. And that's an important criticism within the lines. Okay, and therefore the governance issues, but I'm just missing. So value theory, therefore. Capitalism will tell us that something is valuable when it is exchanged. Socialism will tell us that it is when it is useful. Something is valuable when it is useful. Okay? The Islamic theory tells us that everything is valuable when there's a purpose because Allah created everything. And hence the importance of purpose, dignity, and harm prevention. But also social value. Circulation has to be ensured. Access has to be ensured. Distribution has to be ensured in the process. And therefore, capital becomes productive when resources identified, mal, that's the land, tools, finance, rights, labor skill, cost, effort, and knowledge, contractual organization, the ones that we have, you are all familiar, the real output, and surplus, a profit linked to risk, ownership, and effort, and therefore regulated boundaries that you know what is haram, but positive for fair wages, disclosure, and quality. Environmental stewardship, no waste. Community benefit, and resilience. These are important consequences for us. And hence, the importance of distribution. Therefore, circulation is the essential element of capital in Islamic economic theory. Before the distribution, the definitions, market, the operation, social distribution, surplus created and has to be distributed. Circulation, therefore, anti-cause, and hence the importance. So what we are looking for, finishing, integrated framework, the constitution of capital in Islam, the mal, recognized wealth and property, cusp, lawful earning and enterprise, productive use for real value, and hence circulation, in the end, distribution, and maqasid. Therefore, Islamic capital is mal, plus lawful acquisition, plus productive risk-bearing use, plus just circulation, and the maqasid objective, ensuring the outcomes, okay? So therefore, we are talking about a new grammar, a different grammar. And with this different grammar, the objective is moving from efficiency to equity frontier, establishing a new forms and metrics for Islamic banks and financial institutions. The capital constitution, the way we define Islamically what capital is, Islamic value theory, I have equations, but I'm not going to share, Islamic value theory, modes of production and distribution as a result of that, okay? I'll finish, the time is an issue. But what happens, unfortunately, with Islamic finance, the aspirations and realities. Okay, we are facing the market imposes itself, its own logic on Islamic banking. While on the one hand, this capital that we define, it refers to justice, social equity, charity, cooperation, human-centered development, and takaful. But the reality, of course, we are bound with the market conditions only. We look at sectoral growth, but convergence towards conventional finance is an issue. Therefore, institutions, leaderships, power, property distribution, and social uplift is important, where Salih Kemal refers to that. So, therefore, we have to go beyond Islamic logic versus the market logic. And financialization pressure created on Islamic banks and financial institutions, and the danger that we are facing. Therefore, we need to re-embed finance in the Islamic aspirations, the definition of capital that we have here. And with this, I will finish. The reality here, we are here, the dominance, the barriers in front of us. Most of us are in negative here, okay? But the corporations dominate. Islam, even fiqh does not allow corporations. We are only using ruse, hile, to ensure corporations are acceptable. Equality doesn't solve the problem, moderation. But equity is the structural moderation of consequences is important. But here, what we can do, overcoming the barriers. Still barriers there, but at least people have access to resources. But the whole objective is, of course, this is the utopia. Our objective is to reach here through Islamic finance, through Islamic economic theory. But of course, the promise that we have to Allah subhanahu wa ta'ala to ensure that liberation. And hence, all these efforts that we have around how we can ensure that the accessibility to resources can be possible, those resources that are created by Allah subhanahu wa ta'ala for everyone to access. Conferences such as, on the one hand, enables us to bring together practitioners to look into how we can move forward, but on the other hand, academics and young scholars to establish scholarship, to move forward, establish the necessary theoretical, institutional, and practical development. Thank you.
Professor Al-Sutai, thank you so much for your valuable contributions, not only at this summit, but summit after summit. You always bring such value to our platforms. We would... Okay, perfect. Thank you. Thank you very much. Thank you. Ladies and gentlemen, as we continue our exploration of capital within the Islamic economy, we now turn to one of the most enduring and transformative institutions in Islamic civilization, an institution that has for centuries financed education, healthcare, social welfare, and community development while preserving wealth for the benefit of future generations. Waqf represents perhaps one of the most remarkable examples of sustainable capital that is in action. Rooted in the principles of stewardship, continuity, and public benefit, it demonstrates how wealth can be preserved, invested, and mobilized to create lasting social and economic impact. We continue now with our fourth panel of the day. It is titled Waqf, the Islamic Legacy of Sustainable Capital. It'll examine how Waqf can continue to serve as a powerful engine for development, resilience, and inclusive prosperity in the modern world. Join me in welcoming the moderator of this session, Datuk Moht Irwan Moht Mubarak, the chairman of Bank Kerjasama Rakyat Malaysia Berhad. Welcome. Our distinguished speakers today is His Eminence Sheikh Dr. Khalid bin Abdurrahman Al-Rajhi, member of the Council of Waqf Sulaiman Al-Rajhi. Welcome. Tan Sri Azman Mokhtar, is also with us here today, the chairman of the International Center for Education in Islamic Finance University. Welcome. And last but certainly not least is Dr. Ayman Bekiroğlu, the assistant professor at Ibn Khaldun University. Welcome.
How are you? MashaAllah. بسم الله الذي لا يضر مع اسمه شيء في الأرض ولا في السماء وهو السميع العليم اللهم صل على محمد وعلى آل محمد السلام عليكم ورحمة الله وبركاته. Distinguished guests, esteemed panelists, ladies and gentlemen, we have a very challenging time because this is really at the end of the evening. We have to make this discussion really live, my dear panels, because or else most of you are going to go quite sleepy on this late evening, where we should have our coffee outside there, but we are here for this very, insightful, topics, which is Waqaf, the Islamic legacy of sustainable capital. Well, it is an honor to moderate this fourth panel of the third Global Islamic Economic Summit on Waqaf, the Islamic legacy of sustainable capital. In today's global landscape, we are witnessing a fundamental shift from a short-term capital optimization to long-term, purpose-driven capital deployment. However, this purpose-driven approach has also been at the heart of the Islamic audience. Before I start and pass over to our dear and introduce the panels, I would like actually to quote two meanings of verses in Quran, which is Surah Al-Baqarah, verses number 21, where Allah subhanahu wa ta'ala says, the examples of those who spend their wealth in the way of Allah is like a seed of grain, which grows 7 years. In each years is 100 grains, and Allah multiplies the reward for them, for whom He wills, and Allah is all-encompassing and knowing. And Surah Al-Imran, verses 92, Allah says, by no means shall you attain rightness unless you spend of that which you love, and whatever you spend, indeed Allah is knowing of it. And there is two hadiths from Prophet Muhammad sallallahu alaihi wasallam, which are about the land of Khaybar, where Umar radiallahu anhu, he asked the Prophet of this land, and Prophet say, do the Waqaf in short. And we know there are three things where one of those is of this Sadaqah Jariyah. There are three things when we die, all are going, these three things, Allah will look at it, one of those is the Sadaqah Jariyah. Well, with that, I would like to introduce the three panels, the three, dedicated gentlemen before me. On my left is Sheikh Dr. Khalid bin Abdul Rahman Al-Rajhi. We are honored to have you, Sheikh Dr. Khalid bin Abdul Rahman. He's a prominent Saudi jurist, academic, and a commercial arbitrator who served as council members of the board trustee of the Sulaiman Al-Rajhi Endowment. He historically served as a judge in Saudi General Court system before transitioning into executive leadership with philanthropic foundations, right? And I think today, Sheikh Dr. Khalid, you are going to address the integrated Islamic social capitals, which aligning philanthropic resources with economic developments. And on the middle, I have Tan Sri Azman Mokhtar, right? We are also privileged to have you, Tan Sri, here. Tan Sri is a Malaysian corporate leader, economic strategics, and also chairman of board of directors in INSIF University and University Technology Malaysia. He is globally recognized as a 14 years tenure in managing directors of Khazanah and also one of the Malaysian Sovereign Wealth Fund. And he will speak on the Waqaf as a productive capital, the economics of sustainability and investment and social prosperity. Dr. Ayman's at the end there. It looks very cool on this evening, alhamdulillah. The assistant professor in the Department of Economics of Ibn Khaldun University here in Istanbul. Well, Dr. Ayman specialized in digital financial literacy, fintech infrastructure, and cryptocurrency Sharia compliance framework with a background of a fintech analyst at the Abu Dhabi Investment Authority. and I think you will address Wakaf as development capital, activation, institutionalization, and a strategic partnership. Well, I think without wasting time, we want to hear from you. Share, Dr. Khalid. Thank you.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين نبينا محمد وعلى آله وصحبه أجمعين. I think I'm the first person who speaks in Arabic today. طيب سنتحدث إن شاء الله في هذه الفرصة الطيبة على 3 محاور رئيسية. راح نتحدث في المحور الأول عن وقف النقود كصيغة معاصرة من صيغ الأوقاف الإسلامية. وطبعا كما هو معروف أن الأصل الموقوف هو أحد الأركان الأربعة الرئيسية لأي وقف من الأوقاف أو لأي وثيقة وقفية. تاريخيا الأصل الموقوف كان يعتمد بشكل كبير على العقارات، ولا يزال هذا الاعتماد بشكل كبير إلى اليوم. غالب الأوقاف مثل ما هو معلوم هي أصول موقوفة من العقارات السكنية والعقارات التجارية والبساتين والمزارع، ولم تكن الأوقاف النقدية شائعة في الممارسة. وربما يعود السبب لهذا للمخاطر العالية اللي كانت ولا تزال في وقف الأصول النقدية. ونوقش هذا الموضوع كثيرا ومرارا في الفقه الإسلامي، أن وقف النقود غالبا ما يكون إما للمضاربة أو للإقراض، وكلا هاتين الصيغتين معرضة للمخاطر. فالإقراض عرضة لتغير القيمة وانخفاض القيمة، والمضاربة عرضة للخسارة وهي عالية المخاطر كذلك. في السنوات الأخيرة ونظرا لتنوع الأصول الاستثمارية وتغير أشكال الثروات، أصبحت النقود من أهم الأصول التي تبنى عليها كثير من الوثائق الوقفية. وهذا البناء في المرحلة المعاصرة يمكن القول بأنه مر بمرحلتين. المرحلة الأولى نستطيع أن نسميه أنه بناء صوري وليس حقيقي. فكثير من الوثائق الوقفية كانت تبنى على أصول موقوفة هي من النقود، وهذا البناء ليس حقيقيا وإنما صوريا. وسبب هذا البناء هو لإضفاء شخصية، مجرد إضفاء شخصية اعتبارية على الوقف، بناء عليه يستطيع الوقف أن يمارس كثير من الصلاحيات مثل تأسيس الشركات وقبول الهبات وغيرها. ثم مع استقرار الأنظمة وتطور التشريعات جاء البناء الحقيقي للنقود في الوثائق الوقفية وليس البناء الصوري، من خلال أنه أصبحت هذه النقود أداة استثمار حقيقية في الصناديق والأوعية، ومتاحة لكل المستثمرين أيا كان نوع ذلك الاستثمار. وغالب تلك الأوعية صارت لاعبا مهما ورئيسا في تمويل الأنشطة المختلفة. هذا الأمر اليوم أتاح للأصل الموقوف النقدي، أتاح للأوقاف التي بنيت على أصول موقوفة نقدية أن تكون مساهمة في صيغ التمويل المختلفة وفي أدوات الدين المتنوعة، مع المحافظة على دخول ثابتة ومخاطر منخفضة وقدرة على صيانة تلك الأصول قبل إعادة استثمارها أو توزيع غلتها من خلال معالجة ما يطرأ عليها مثل آثار التضخم أو الانخفاض في القيمة وغيرها. هذا النوع من الأصول الموقوفة وهي النقود أتاح إمكانية الوقف اليوم للمستثمرين من كافة أشكالهم، من ذوي الأموال الكبيرة ومن ذوي الدخل المحدود أو الأصول المنخفضة، من خلال المساهمة بشكل مباشر بشكل منفرد أو من خلال المساهمة مع الآخرين. هذا المحور الأول الذي أردت التحدث عنه. هل أدخل في المحور الثاني والثالث أم؟
فهمت. الحمد لله.
ما شاء الله.
نتكلم باللغة العربية، لغة القرآن الكريم. الحمد لله. Because I graduated from Al-Jami'ah Al-Islamiyah Al-Alamiyah in Malaysia, I can understand Arabic. Alhamdulillah. Okay. Thank you for your sharing, Doctor. If maybe we can hear from Tan Sri, with regards to your subject matter today. So and then later we will cross with other questions, inshallah.
Yeah. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you to the organizers. I shall not be speaking in Arabic. I wish I could. But I prepared a few slides just as a background and perhaps as reference. In the time available, I'll try to give a perspective from Malaysia, obviously, but also from as a finance practitioner and also as someone who's now chairing some educational institutions. If I may, first slide. So I have 3 key points, Mr. Datuk Chairman. If someone could move to the next slide, please. Next slide, please. Yeah. So the first point, of course, Malaysia, we've heard, has been involved, leading, driving the development of the Islamic finance industry, depending how you count, 40 years or 60 years. If it's the first Islamic bank, 1983, Lembaga Tabung Haji or Pilgrims Fund, 1963. So the first point I want to make is, Alhamdulillah, there is acceptance, there is now mainstreaming of Islamic finance itself in Malaysia. If you look at these numbers from the banking system, this is already out of date. We are almost at 50%, driven by Bank Negara, by the big banks like Maybank, CIMB, and so on and so forth, Bank Rakyat as well. The second part is actually from the capital markets. We are now crossing 63%. Within the next few years, it will be more than 2/3, Alhamdulillah. A little bit behind on takaful, but this reflects that in a plural society like Malaysia, where Muslims are about 60-odd%, Islamic finance has been accepted, in fact, it's been mainstream. And this number is not linear. This number was much lower 20 years ago, and this you will see the significance at this point. However, next slide. I would argue, next slide, while Alhamdulillah Islamic finance is now mainstream, Waqaf, while recognized by policymakers and regulators as a potent engine of the Islamic finance ecosystem, it is a relatively underdeveloped, what I call a third arrow in the Islamic finance bow. All those numbers I announced to you are well known, but they're from 1 or 2 arrows only. For example, banking system and the sukuk market are essentially debt instruments. Equity, actually, we've had a healthy development, partly because of the national savings rate, the development of significant asset management institutions, in particular pension funds, the EPF. I am glad to see EPF, for example, the last 2 years, the Sharia choice of the Sharia compliant managed funds actually now return the same amount of return as the non-Sharia compliant. So I'm glad because they're managing my pension money. And Tabung Haji and so on and so forth. However, the third arrow, in fact, there's a fourth arrow, which is Takaful and the NBFIs, but the third arrow, let's call them the third arrow, philanthropic capital, often referred to as zakat, waqaf, as well as sadaqah. I'll come back to that. While steady progress has been made, waqaf, as I say, is relatively underutilized. I'll show you some numbers compared to the other parts. There are various historical reasons. We should stop blaming our colonial masters, but in this case, it's relevant. We were under colonization for hundreds of years. Today, there is some fragmentation. It's being managed through the 14 states, so there's lack of harmonization and there's different levels. 5 are through the federal government, but 9 are not in the federal government. Different levels of bureaucracy, issues of governance with respect to the role of the Nazir and the Mutawali. And I should highlight, being a plural society, Malaysia also has trust law, endowment law, whereby there's a secular and parallel endowment trust system. Many Muslims actually go through this system rather than through the Waqaf system. And this is something we have to ask why, because of some of the bureaucracy and some of the rulings. For example, the idea of a family Waqaf, Waqaf Zuhri, Sheikh, this is something that we had before the colonial times, But since the colonial times now, this kind of private wakaf is no longer available. So families who wants to do their own asset and wasiat management, this instrument is not available, and this is something we have to get our act together. But most of all, most of the wakaf land and assets in Malaysia are land and landed properties. There is some debate about what exactly is the level of utilization, but we know that there's often cited a shortage of working and development capital to develop these wakaf land assets. On the other hand, there are very large pools of liquidity in other parts of the financial system. Therein lies the challenge before us. Alhamdulillah, I would say public interest and support of the government and regulatory support, both from the public and from the government and the state governments, and the regulatory support is very strong. And I want to end with positive examples of good financial innovation in this regard to overcome some of those issues, as well as integration into Islamic finance system. If I can go to the next slide, please. Here is a quick snapshot of the system in Malaysia. We heard this morning about the issue around data, actually. To be honest, this data is not easy to come by because of that fragmentation. This is what we have put together with the SC. There's of course 14 state need. 25,000 hectares may sound a lot. To the Malaysian, that's roughly about 1/3 of Perlis, okay, or the smallest state in Malaysia. The amount of cash wakaf raised last year was 620 million ringgit. I happen to sit on Majlis Agama Islam Wilayah Persekutuan. Somehow our numbers are not included then because I chair the finance committee. I know what that number is. So it's actually with Wilayah is about 760 million, which if you contrast the annual zakat collection is 5 billion. So it's about 15% of zakat collection from cash wakaf. Yeah? And so on and so forth. There's legislation and government variously through the budget, they've contributed and made allocations, but guess what? Some of these allocations are not being utilized actually for various reasons. Next slide. But herein lies this is some numbers about utilization. As I said, some numbers are saying 80-odd%, but I would argue that some of these numbers probably show utilization depending how you define, but probably some underutilization. They are not optimized. Next slide. Next slide, please. Okay, here's an example. Again, this is for reference, those interested. Some of these numbers are from Yayasan Wakaf, actually. Next slide. The cash collection. Okay, there are 3 mechanisms at least. One is the sukuk to be used. Remember, one of the issue is how to unlock the productive use of wakaf assets, is how to generate funds to do this. The Securities Commission has come up with quite a comprehensive framework. In fact, Dato', I know you're going to be chairing this session. I read your report from 1 or 2 years ago that Bank Rakyat, thank you to them, you commissioned this report to look at how to do this sukuk wakaf. Next slide. Now, one very often cited and successful example, those of you who know Malaysia, Bank Islam is our leading Islamic bank. Menara Bank Islam sits on the Dada Boy wakaf. And this was a very good example of innovation and integration, and it was done and completed in 2010. Today, this works actually on all levels, and I would say it's a very good example. The downside is that this is perhaps the example that the exception that proves the rule. Actually, we need more of this. There's another recent one on Uda, actually, Sukuk. Those who know, this is in the whole area where the old jail is. They developed in a state-owned company. Next slide. I will finish now. This is, I think they've again launched this. It looks to be working because the underlying assets are thought through well. They are commercially viable, which is something to be recognized. Next. This is an interesting one where it's a wakaf fund. The Wakaf Saham Lakian Central essentially mutualizes to build a bus terminal. So this is now we're moving from less commercial to more developmental and of a public infrastructure. And again, remains to be seen whether this need, but this is basically their own shares. The public can participate in the development of public infrastructure. Next slide. That's about it. So in a nutshell, I would say there is appetite in both the public and the government and the regulatory sectors to do Islamic finance. This is evidenced by the other parts of the system. I would say the glass is not half empty, but it's actually half full because of that. And there is already examples of how to innovate and integrate new measures to unlock this potential. What we need now is to do it consistently and to scale up. And actually I can report that on 11th of June, we're supposed to have a Majlis Kebangsaan Hal Ehwal Islam, is the highest religious affairs body. And we are tabling the integrated report for the National Waqaf Plan. When things are fragmented, you need to bring them together. And I think this has to be handled at that level. And most of all, I wanted to add is ultimately the test to show this demonstration of all these nice principles is actually in the projects that will happen at the scale. And then we bring the players in together. And inshallah, I would see this as the third engine in the third sector that will take Islamic finance in Malaysia to another level, especially at a time when permanent, irrevocable, inalienable capital, that is the nature of Waqaf, is the best instrument, I would add. The government is fiscally constrained. The purpose that we heard from Professor Mehmet just now, we shouldn't be talking about efficiency frontiers of capital. We should be talking rightly about the equity frontier of capital. And Waqaf is the perfect instrument for that. Thank you very much.
Thank you, Tensei. Thank you very much. Dr. Aiman, I think you're just waiting for this event to start. Dr. Aiman, if I can, before you elaborate further, if you can share with the audience and all the panels here, how can a modern corporate and cash Waqaf structure be explicitly aligned in national development priorities? You can share with us, and then we add up a sharing moment that we would like to share with all of us. I'll pass over to you.
If I can get your question again.
Okay, my question to you is, how can a modern corporate and cash Waqaf structures be explicitly aligned with national development priorities? Right? We can share it, and then you can continue with whatever you want to share. Thank you.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على رسول الله. So before I would start, I would like just give a brief history that everyone knows that Waqf has been proliferating from the Umayyad dynasty and then the Abbasid dynasty, but then in the Ottoman Empire it really went into a big boom. From there, there was that big innovation about the cash waqf, and this is what I would suppose be the main pillar within waqf nowadays. The reason it is a main pillar because it opens the doors for a lot of different innovations and financialization in terms of providing the finance for entrepreneurs and also for the social development. And therefore, when we want to talk about the modern vehicles that we can use in cash waqf, actually using cash waqf in one way, we would like to first talk about that cash waqf has been a controversial topic at the beginning of it because there are a lot of digression within the main theme. And so the main theme of it is not to digress, because if you digress, then you are depriving yourself from the blessings, from the barakah that Allah subhanahu wa ta'ala has put upon these instruments within the Islamic finance. So the point is, again, I have to emphasize that there should be no digress upon the main theme of the Islamic waqf. And so when using cash waqf, it has to be you have to be careful when you use the cash waqf and when you structure the cash waqf. So now the modern vehicles, there are a lot of different aspects that have been introduced. What we want as a modern vehicle, what we want to really tap on is unlock those capital markets, like for example using cash waqf linked to, for example, governmental backed securities. So in which way you can get those yields from the backed securities, get the yields to channel those funds into making the social development. And so you align by the national development goals and also the international sustainable development goals. Another way is not only to tap those securities market or capital market, you also want to mobilize the private sector. And in this case, you can think of the corporate waqfs, in which case, the corporate waqfs will endow their shares, some of their shares, of course. They will endow those shares, and rather than use the shares immediately, but take the yields of those shares in order to channel them again to the social development. A third way is, and now we are in the era of digitalization, transforming to digital infrastructure. So again, we can utilize the digital tokenization and the blockchain technology in order to tokenize those waqf implementations and provide the social development upon them. But this helps us in the transparency aspect of it. It helps us in the security part of it, also in the management of the waqf. So basically, these are the main things that we will look at to check those modern vehicles of waqf.
Sheikh Dr. Khalid, I think you would like to share more insights on the second round with regards to these important topics. I'll pass over to you.
نعم صحيح. هنا سؤال: هل يمكن أن يكون الوقف مجرد أصل يدر عائد، أم أن الوقف مؤسسة تنموية متكاملة؟ هذا السؤال سؤال مستمر عند كثير من الواقفين، وهو يعتبر أيضا تحدي تاريخي، لأن كثير من الأوقاف اندثرت عبر التاريخ، وسبب الاندثار لهذه الأوقاف متنوع، لكن يمكن أن يكون أغلبها ضعف الحوكمة أو غيابها تماما، غياب التجديد المؤسسي أو ضعفه، ضعف القيادة وعدم التجديد في الكفاءات الإدارية في الأوقاف. والتحول المؤسسي للوقف اليوم يمكنه أن يكون مؤسسة تنموية من خلال الاستغلال الأمثل لرأس المال لتحقيق الاستدامة في الخدمات التنموية. وللوصول إلى هذا النوع من المؤسسات التنموية، وحتى يكون الوقف هو محرك رئيسي للتنمية وليس مجرد ممول لها، لابد أن يعمل على نموذج المؤسسة الوقفية الحديثة، والتي تضم عدد من العناصر الرئيسية المهمة، وأبرزها الحوكمة الإدارية. الوقف اليوم ليس كالسابق يقوم على فرد أو فردين يتخذون القرارات بطريقة انفرادية صرفة، وإنما الوقف اليوم يجب أن يكون محوكم على أعلى مستويات الحوكمة. كذلك الاستدامة المالية والرقابة والمراجعة المستمرة على الإجراءات الحديثة في الأموال والحسابات والتدقيق وغيرها، وكذلك مراقبة البوصلة ومراجعتها باستمرار، مراجعة البوصلة في تحقيق الأثر، لأن كثير من الأوقاف ينص فيها الواقفين أو يشترط فيها الواقفون آثار محددة يرغبون الوصول إليها، لكن مع السنين وتعاقب السنوات تميل هذه البوصلة إلى آثار مختلفة. فجزء مهم أو من أعمال الناظر المهمة هي مراقبة هذه البوصلة ومراجعتها باستمرار، والتجديد في رأس المال البشري واختيار الكفاءات المميزة والعالية، والقدرة على التجديد باستمرار، والتحول إن كان من تحولات تقنية أو من تحولات إدارية تطرأ على المجتمعات بين الحين والآخر. ثم يأتي السؤال الأخير، وهو هل بحكم أن الوقف هو أحد أقدم نماذج الاستثمار المؤثرة في تاريخ المسلمين أو التاريخ الإنساني، لأنه يحافظ على الأصل ويدر عوائد ويخلق أثر اجتماعي، فكيف نحافظ على هذا الأثر الاجتماعي مع تعاقب السنوات وتغير النظار وتغير الإدارة؟ يمكن أن يكون هناك موازنة بين الإنفاق الاجتماعي والاستثمار الاجتماعي، وهذه الموازنة سيجعل من الوقف أداة منظمة لدعم التنمية الاجتماعية. فالأثر القصير المستعجل الذي يعالج الاحتياج المباشر، الأثر القصير المستعجل الذي يعالج الاحتياج المباشر لا يمكن إهماله أو صرف النظر عنه باعتباره رعويا، بل إن معالجة تلك الاحتياجات مؤثرة حتى في الشريعة الإسلامية، وجاء القرآن باعتبارها عناصر مهمة أيضا في مصارف الزكاة. كما أن الأثر الطويل الذي يعالج أسباب الاحتياج وليس الاحتياجات المباشرة وتعتمد على رأس مال مستدام هي أيضا ذات أثر في التنمية المستدامة. فيمكن القول أن الوقف أداة استثمار اجتماعي منظمة لدعم التنمية المجتمعية، سواء كان ذلك الدعم بسد الاحتياجات المباشرة لشريحة مهمة في المجتمع، أو كان الدعم بالاستثمار في المجالات التي تمنع وجود تلك الاحتياجات أو تخفف منها في مشاريع ربحية غير مستدامة. شكرا.
Jazakallah khair kathir. Masya Allah, tabarakallah. Tan Sri, based on institutional experience, especially in Khazanah and also Tabung Haji, what is the realistic scalability of this PPP framework when managing sovereign level funds? And can traditional Waqaf models truly absorb that level of commercial investment skills?
Yeah, I think the challenge before us, I tried in the first round to lay the ground by explaining the situation, the landscape in Malaysia, whereby number one, there is actually a strong undercurrent of people wanting to be philanthropic, number one, not just Muslims, but non-Muslims as well. And because this is somehow the nature of our society. Number two, the adoption of Islamic finance as defined. However, there are some structural legacy issues on how these things are structured. And we are operating in a power structure as well as a corporate structure that has certain dynamics, state-owned sector, private sector, the Muslim private sector, etc. Okay, if I can translate that as very simple example, as we know, among the private capital that has become Waqaf in Malaysia will be people like the Al-Bukhari Foundation. So I think they've used Waqaf structures. The state-owned sector, Alhamdulillah, many institutions, Petronas, Khazanah, I think do quite well. They have this thing called corporate social responsibility. It's not quite Waqaf. Which, as you know, the movement around ESG, and then there is a whole range of assets from the whole spectrum, from purely commercial to developmental and everything in between, if I get this question. So when I was at Khazanah, we defined our corporate responsibility. We created a yayasan called Yayasan Hasanah. So a bit of a wordplay. Khazanah makes money, Hasanah distributes some of that money. Not a small amount, it's 3 billion ringgit, about 700-800 million US dollars. To be honest with you, we explored the Waqaf structure naturally, but it was complicated, to be honest. For example, we could not quite become the mutawali of that 3 billion. We had to pay a 5-6% charge, which would take away a lot of the income that would fund those activities. Today, that 3 billion is intact. In fact, is covering more than 40-50 NGOs, scholarships, education, all kinds of things, which by all purpose and intent has been intact. But I wish I could have done it under a pure Waqaf structure. The irony was that the endowment and the trust law in Malaysia is actually based on the British trust law, which, as we know, the Brits, starting from Merton College in Oxford, copied a lot of the Islamic Waqaf principles. This is quite ironic, it's gone full circle. So I think this is among the things we need to solve, because more and more people would prefer to do Waqaf structures, tetapi there seems to be a lot of impediments. But as I said, we broke the mold when we did Bank Islam, Tabung Haji, Majlis Agama Islam Wilayah Persekutuan, Bank Islam, right? The Dada Boy Waqaf. Today, Bank Islam, this one works. UDA is trying to do, or doing already. I think there are more and more. For example, in my role as the chairman of the MIC Leadership Council, we reviewed, they asked to review both Bank Negara and SC. I said to Bank Negara and SC, thank you, but I'm going to go beyond these two instruments. We should look at asset management, which we did. We should look at zakat and wakaf. So one of the things I pushed for was to tell the government that now Tan Sri Johan Marikan, I said Tan Sri Jo, or Jo at that time, Datuk Jo. Government is fiscally constrained. I know members of the public, if they trust the government platform to build the next hospital or the next set of schools, for example, I want to participate if I believe that this is going to be done properly. And that will reduce, you are the obligor and you will underwrite this development, but you can reduce, as indeed Sheikh Professor from, we take inspiration from the Ottoman times. This sector, or the Wakaf sector actually, provided most of the public infrastructure. In fact, the role of the state should be smaller. We don't tax so much. We are glad to see Minister Simsek announce lower taxes so that entrepreneurs should earn more, and then they learn all the right Quranic verses and the hadith, and they should create more and more wakaf. This is how the beautiful, sustainable Islamic economy should be. But let's not blame anyone. But I think the order of the day, therefore, and I'm working on 2 or 3 things. If I may, I don't know whether I'll have another chance after this. And from the Al-Raji side, we studied what Sulaiman Al-Raji and others have done. When I was chairing Tabung Haji, if I can end with this example and perhaps appeal to the audience today. Malaysia, we've done our Tabung Haji and Pilgrim, Alhamdulillah, not bad, quite well. But we struggle to keep up with the cost of inflation of Hajj. If we're struggling, everybody must be struggling, as you know. It's running at double digits. We can only, on a risk-adjusted basis, return after zakat only about 3% odd, 4% maybe on a good year, because that is the right level of risk. We have to protect the capital of the depositors, right? So in other words, if the cost is running at 11-12% and your return is 3-4%, there's always going to be a gap. And subsidies, actually, on the istita'ah principle, shouldn't be around for Haji, actually. And unfortunately, this has been the case. So we've been trying to reform that. So one idea, roughly one third the cost of Hajj is actually in the real estate, in the hotels and so on and so forth. I happen to sit on the Investment Advisory Council of the Kingdom of Saudi Arabia, actually, and I chair the Malaysia-Saudi Business Council. One of the ideas I'm trying to push is to create a Waqaf Haji in the kingdom, because through the Waqaf structure, we are allowed to own property, and working with our partners. So imagine for Malaysians or other non-Malaysians and our friends want to put money into Waqaf Haji, that our waris, our future ni, and Sheikh, we put in the holy city is multiplied by 100,000, right? The barakah, inshallah, because of the famous hadith in Makkah and Madinah. And I've actually written a paper on this, and I'm trying to advocate and get this. So imagine if throughout all the years that we've been going to Hajj, that not just Malaysia, so there's a Waqaf Haji Malaysia working with Saudi developers and so on and so forth, Waqaf Haji for Turkey, and this will ultimately help to demonstrate the use of an instrument, ultimately for the benefit of the Muslim Ummah. Thank you very much.
Thank you. Sheikh Dr. Khalid, hearing about this from Tan Sri, and being in Saudi and in the Saudi culture and ecosystem, what do you think about this Waqaf, especially on the Hajj? I'm asking.
Sorry.
The question is, it's a late evening, I know. So, what is your, from hearing from Tan Sri Azman just now, with regards to the Waqaf, especially on the Hajj matter, if you really, owning the hotel, what do you think from your experience when you were in Saudi?
Repeat it, please.
Yeah. So if you see from what Tan Sri said just now, with regards to the, especially Waqaf on Hajj, on the asset itself, what do you think is actually Muslims should look into it seriously, especially in Saudis?
حقيقة أنا ما أعرف كيف أجاوب على هذا السؤال، كأني أفهم أن تتكلم على أوقاف الحج تحديدا. يعني التجارب موجودة في أوقاف الحج، لكني حقيقة بعيد عنها ولا أعرف كيف التعامل معها، ولا لا أعلم حقيقة، ما عندي جواب واضح لها.
ما في مشكلة. Dr. Aiman, you have any ideas on this wakaf on Hajj, especially on the assets?
Well,
Maybe on your experience on wakaf tonight, on the cash wakaf.
I would actually think of it in terms of taking the yields of the waqf to help people to go to Hajj, but this definitely needs more research because I have not really gone through such a structure of waqf, but definitely it could be structured. That's what I can say. It could be structured for Hajj.
Yeah. Dr. Aiman, how do you see the digital finance infrastructure of fintech models solving this specific bottleneck, especially if you look at the heavily corporate structure, endowment and remain agile enough to serve rapidly shifting national economic priorities without becoming bogged down by institutional bureaucracy?
Actually, I would argue for going through that. I mean, I would argue that we really need this aspect of fintech and the aspect of using technology to overcome the bureaucracy, but not only overcome the bureaucracy, but also to overreach the global micro donors. Because, with this kind of fintech usage, you are able to reach not within your jurisdiction, but you can even make the geography neutral. Okay, so you can go out and reach those micro donors, and again, you will be able to govern it because within the fintech realm, you can have all the players together. So when you're talking about the components of waqf, which means the beneficiaries, which means the nadar, the mutawalli, the benefactor, and all the different components, they are part of the full picture. So these fintech platforms can help you oversee these things and also eliminate those bureaucratic procedures. And in addition to that, the security that is provided within the fintech technologies is really has, I would say, increasingly overthrown the current security that you can find within the normal, traditional financial ways. Also, in addition to that, fintech can help the workflow of the waqf. Definitely, it will help the workflow because administration of the waqf is one of the things that we would see is problematic, and mismanagement, manipulation, the corruption that we see in some of the waqf that helped deteriorate the waqf in many lands. So we can see that there are actually more than 1 trillion value of waqf that is idle, not used, either because of the mismanagement or because of corruption or because of encroachment, because of these related things. So definitely I would say and argue that fintech and the digital platforms can help eliminate all of these issues.
Thank you very much. Since we have a shortage of time and we'll come to the end, I would like to say thank you very much, Sheikh Doctor. And Tan Sri Azman, thank you. And Dr. Aiman, thank you very much. And thank you to Al Barakah. Assalamualaikum warahmatullahi wabarakatuh.
Thank you to our moderator and our distinguished panelists for that outstanding final session. You did manage to keep everyone's attention focused on that discussion, a very challenging thing to do in a long day during a summit. Nonetheless, thank you so much for all of your contributions. My colleague, Ibrahim, will now pass over a token of appreciation to each and every one of you for your contributions to our summit. Yes, distinguished guests, that's a wrap on the panel titled Waqf, the Islamic Legacy of Sustainable Capital. They're being conducted by our moderator, Datuk Irwan Moht Mubarak. Thank you all very much for being with us here today. Thank you very much. Ladies and gentlemen, as we conclude the second day of the third Global Islamic Economy Summit, we reflect on a day filled with meaningful dialogue, valuable insights, and forward-looking ideas. But of course, we don't stop here. Tomorrow, we will continue from where we left off. See you all tomorrow bright and early at 10 a.m. Have a great evening.